Yo, welcome to day 2 of Mining Disrupt in Miami, Florida, hosted by Simply Bitcoin. I'm your host, Nico. It's my legendary co-host, Optimus Fields. We haven't been doing the live show for 2 days, bro. We've been taking a break to do this epic conference. So much signal yesterday. Highlight of my day. Two panels, really. It was, first, it was Bob Burnett, Bitcoin Mechanic, Hafa Zaguri, and dude, that panel was epic. And then, of course, Fred Thiel from Marathon, and he was having a fireside with Ted Cruz. I got to take a picture with Ted Cruz. He's so bullish on Bitcoin, bro. It's like kind of surreal to hear that. Like, we've come a really long way, and this is a pretty historical year in terms of Bitcoin and Bitcoin's history. Just because of the presidential election that's coming up. It seems like the main stage is getting started, so we're going to switch over to the main stage, and I hope you guys enjoy day 2 of Mining Disrupt. All right, everybody, here we go.
So we all went out, we had a great opening night party, and we're here early in the morning, starting fresh. Why? Early bird gets the worm. We get more time with all of these vendors and all of these people at the expo, and we have great content for you starting right now. So, welcome to the stage. I am Adrienne Ashley. I am the Miami chapter city leader for Bit Angels, and I'm also a venture capitalist, the general partner of Slave Ventures. So, my interest in all of this is how do we get more blockchain-based, specifically Bitcoin-based startups into the ecosystem. So here with me today are 2 startups that I absolutely adore, and we're gonna be talking about that whole landscape, but we're gonna also be talking about interesting things, right? Because while Bitcoin is the freedom method that we all prefer, we can also do art and other cool things with it. So introduce yourself, please. Got to turn it on.
Good morning, good morning. Hi, everybody. My name is Scarlett Arana. I am the co-founder of BitBasil. We're your crypto art community. We've been, as a grassroots, been helping support an adoption of Bitcoin since 2020.
I love it. And I love the art. If you guys have not seen the gallery, it's right off to the left. And that is one of the ways that Bitcoin has been able to help penetrate the mainstream is through art. Peter?
Hi, and I'm Peter Gurr. I'm the founder of Wise Lending. We are focusing on finding yield, how to make yield on your cryptocurrencies.
I love that because, you know, we all are hodlers and we do like to avoid tax, but guess what? Debt is not taxable. That means you can hold your bag and still earn, which I think is very important for people to know. You're going to be mining. As a matter of fact, you're going to be doing some immersion mining. So you might be getting more yield faster, less heat. Or I got to say, yesterday, I loved that presentation about using the heat from the Bitcoin miners in a beer manufacturing process in a brewery. That is genius. These are the kinds of things I'm talking about, right? How do we do things sustainably, differently, or get media attention? Now, didn't you recently put something on the moon? Speaking of media attention?
Yes, absolutely. We're happy to announce that we did an historical event. And normally there's a saying within the Bitcoin ecosystem about going to the moon. But BitBasil and the crypto art community is happy to announce, as part of this amplifying the elevation and the mass adoption of Bitcoin, we actually, since February of 22nd of this year, love to announce that we actually put art and Bitcoin art specifically on the moon. This is not figuratively, but literally. It was something that we did with NASA, where we were part of a payload mission to inscribe art that went to the moon in order to send a message and also to elevate the conversation about Bitcoin.
That is amazing. So these are things, ways, I'm always looking at how can we get mainstream consumer adoption of Bitcoin, because we need them to understand it, but we do get some people that, you know, just crypto in general, they're a little wary of volatility, and we all know if you hodl, it's all good. So let's talk about, you know, if you want to stake your Bitcoin and earn yield, right? Your next book coming up, DeFi Done Right, goes over a lot of the things that are important to look for, right? So when you do Bitcoin staking, how does that work particularly?
So it's a lot like what banks are doing right now. And in cryptocurrency, we want to be our own bank. So instead of getting those loans and putting your money into bank accounts, you can borrow against the Bitcoin that you've deposited. So it's about borrowing. You can borrow stable coins against deposited Bitcoin, and then you can earn a yield off of those stable coins to be able to earn a yield on your staked Bitcoin.
Nice. Well, I like the way this is working out. So those of you who do not have your own miners yet, please go check out. There are many miners out there and cloud mining options as well. And are you demonstrating Bitcoin ordinals?
Yes, that's correct. Part of amplifying the message, we believe the crypto artists are evangelists to this. And as part of onboarding process, BitBass has created a marketplace specifically for ordinals. For those who don't know, ordinals is art that's inscribed on a Satoshi. And we did this for the sole purpose to elevate the conversation of getting more people entering into the ecosystem through arts by inscribing. So now artists can actually inscribe their art on ordinals or Bitcoin, which is a layer 1 with utilizing our platform.
Awesome. Now I want to take a little tangent just a little bit. So Peter, you have a military background, so you have a really different perspective on why Bitcoin and why cryptocurrency is so important. Can you share that?
Well, to me, it's about being your own bank and being able to get away from things that you can't control. Like, for instance, inflation with, quantitative easing of the US dollar. You can't control the supply. But with Bitcoin, we know there's a 21 million hard cap supply. And so that's why it was so attractive to me. It's something that I've got a lot more control of. That I can use without intermediaries, and don't have to worry about somebody changing that behind my back.
I love it. Well, thank you very much. We are going to be getting on with the day's programming here shortly. Please get your coffee. The breakfast is fantastic, and we will be back with you at 8 o'clock. Thank you. Okay.
That was very fast. You are.
We are back at the Simply Bitcoin News Desk, streaming live from Main Disrupt. We have a full day full of amazing panels for you guys. Just kind of want to go through a little bit of the schedule while.
Yeah, we got 5 minutes before the next one, so.
Absolutely. Oh, we got Kent from SAS Mining. If he wants to join the stream, say what's up. All right, here we go. But yeah, it's going to be a great day full of signal. Like I said, I can't get over that Ted Cruz and Fred Thiel fireside chat. That was absolutely incredible. And we got a lot of awesome panels for you guys coming up on the second day of Mining Disrupt live from Miami, Florida. Of course, hosted by Simply Bitcoin. We have Kent, the CEO of SAS Mining, in the house. SAS Mining is Bitcoin mining as a service. I've perfected that, bro. I've nailed it. Bam, boom, boom, bam. Kent, how you doing, bro? Are you happy you made the pilgrimage?
Dude, so happy.
I gotta say, I had a little bit of influence on Kent. I said, Kent, you have to come. You know, you're a mining company. This is like the mining conference. So
It's true. You were one of a select few that I reached out to say, hey, what do you think? Do I got to be here or not?
yeah, man. So happy you came. Happy you came. So what do you think so far? Because this is an interesting conference, especially the Expo, because it's so loaded with so many different, like a variety of mining companies, obviously the industry leaders and all that stuff. Did you have a chance to like go do the rounds around the Expo, talk to some people?
Yeah, man. I think, I've been in the industry now 3 years, and it's wild to see actually how much of my network's grown just even living abroad, like how many people I know. And so it's just been wonderful to catch up and like build those relationships a bit. and then like learn about new products and things. You know, I've come to this conference, I think it's my third time, but I missed last year, and it's improved so much, like genuinely. So yeah, I'm very much, you know, it's on the docket next year already.
Yeah.
The organizers, they do an incredible job. I don't know if I could drop their names because they to respect their privacy.
Yeah, don't dox them.
But the organizers are absolute chads, and they've done an incredible job, and we're super thankful for them letting us do the live stream and giving you guys this conference at home where you can watch it, you know, over the interwebs. But kind of going back to what you were saying about the importance of interacting in meet space, because a lot of us live in cyberspace, and you know, we kind of get lost. We're like, okay, you know, we're just talking, but there's something about meeting in Hutes. It's almost as if it's part of the human experience that is consequential towards, like, you know, networking and interacting. And I think there's only so much you can say and do in terms of establishing a relationship with somebody over the internet.
I couldn't agree more, man. Like, one of the most interesting things that I have happened to me when I come to a conference like this is people say, "Oh, wow, you're taller than I thought." You know, like, I don't know if you got that too. It's just because when you were staring at somebody in this flat screen, they're always in the center of the frame, so you really have no idea how tall somebody is. Not that tall, you know, 6'2", but it's interesting to see that experience. And you're right, reality's real. You know, when you're looking at somebody through a screen, yeah, there's a human being on the other side, but you lose the context. Like, what is communication's like 70% nonverbal, and how much of that is lost when it's translated through our, you know, computers and translated back to us. So anyway, yeah, I love it. I'm very much a relationship-based guy.
100%, man. I think they're crucial in just kind of establishing, establishing the, I don't know, what is the feeling, the
Human element.
the human element with people, right? It's almost like it's important. Anyways, I want to give a shout out to Kent. Guys, check out sasmining.com/simplybitcoin. And of course, my legendary co-host. We're going to go back to the main stage, and it seems like the show's about to get started again. All right, everybody.
Those that work forces are the same that burn crosses. Some of those that work forces are the same that burn crosses. Some of those that work forces are the same that burn crosses. Some of those that work forces are the same that burn crosses. Killing in the name of killing in the name of. Now you do what they told you. 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 And now you do what they told you. And now you do what they told you. And now you do what they told you. Now you do what they told ya. Now you do what they told ya. Now you do what they told ya. Those who died are justified for wearing the badge and your chosen white. You're justified. Those that died for wearing the badge and your chosen white. Those who died are justified for wearing the badge and your chosen white. You're justified. Those who died for wearing the badge and your chosen white. Some of those that work forces are the same that burn crosses. Some of those that work forces are the same that burn crosses. Some of those that work forces are the same that burn crosses. Some of those that work forces are the same that burn.
All right, everybody, we are about to go live on the main stage. You're tuned into Mining Disrupt Day 2 from Miami, Florida. Dennis Porter is going to be going up on stage in a second. And I hope you guys enjoy day 2 of the conference.
We need to fix the camera a little bit.
It's all good.
Oh, he's going. He's going.
All right, everybody. They're going on stage in a second. Ball's going to be rolling. All right, Opti, I'm taking us on the ground. All right, everybody. Welcome to
I guess there's some confusion on when the actual conference is starting.
Welcome to doing this live. Yeah, man. Opti, why don't you read through some of the first
All right, now actually, can I just read the ones that I'm interested in watching? I really want to see.
We're
Well, of course,
in watching all of them. Opti.
I know, but let me highlight the ones that I'm excited to watch. We have Bitcoin Mechanic at 10:20 going over Oceans again. Yesterday, it got me super bullish on Oceans, like completely. We had a bunch of conversations with him, absolute goat. And then on the schedule here, this one's funny. Where is it? Where's the Brains at 12:40. They have one called From the Chief of Propaganda of Brains, and it's called Mining is the Worst. So I'm excited to see that one. That one sounds lit. But yeah, we got content from, I mean, they said 8, but I think it's 8 already. So we got shows all the way up until 3:30 today, guys. So it's going to be a long day for you guys. A lot of good content in here. And
all right, everybody, good morning. Welcome back
go.
to the early risers. Thank you, everybody, for being here. I am your host again this morning. I was your host yesterday. My name is Dennis Porter. I'm the CEO and co-founder of Satoshi Action Fund. We had an incredible night last night, by the way, on the boat party. Who here was able to make it to the boat party? Yeah, exactly. Great. Well, I want to go ahead and get the content started this morning, but a few quick updates. So obviously the Expo is open this morning right off the bat, but we're going to start with some really important content here at Mining Disrupt. We're going to have my good friend, Marco Tarman, come on and talk a little bit about one of these issues that they face across the entire space, which is that sometimes Bitcoin miners are doing the work. They are doing the proof of work. They are submitting their shares to the pool, and those shares are being rejected. And so we want to make sure that every time you do work, you are getting paid. So Marco is going to come on and help you understand to make sure that you are getting paid for every single time that you submit work to a pool. So Marco, come on up. I want to have you come on up and tell everybody about how you are going to help them overcome this difficult problem. Good to see you, brother. Yeah.
Yeah. Thank you, Dennis. Thank you for the introduction. So yeah, as Dennis mentioned, profitability is rejected shares are a silent profitability killer. And not many miners are fully aware of the full scope of it. Getting just 1% of rejected speed is equal to 1% of lost revenue. So it's very important that the miners pay attention to the type of rejected shares, because if you know what's causing the rejects, you will know how to fix it. And today I'm going to talk about rejected speeds and speeds in general, shares to be precise. So NiceHash has always been a place where we've had a lot of retail users, a lot of miners that aren't technical, that we had to educate them if we wanted to keep them. And we still get a lot of now big-time miners operating exahashes saying how much they learned through NiceHash. And one of our biggest endeavors was educating these miners exactly about this, about accepted and rejected speeds. Yeah, so It's very easy to troubleshoot rejected speed if you have the right tools. And today we're gonna see what are these tools. So what are shares in the first place? Shares are like credits for your mining's work. Shares did not exist before there was a first mining pool. If you're solo mining, you're simply getting a block reward or not. But when the mining pools came up, they had to come up with a solution or mechanism to validate your mining work. And the solution were mining shares. If we take a look at the restaurant analogy, we could say that the customer that comes to the restaurant is a mining pool, and the kitchen staff, the waitress, are the miners. So if a customer orders a burger, for example, they expect the burger to be delivered as they imagine it. And if the burger is delivered late or it doesn't have enough ingredients, the customer will reject the order and the kitchen staff will not get paid. They will do the work for nothing. It's the same thing with mining, where a customer is a mining pool and kitchen staff are the workers. This means that the workers, the miners, might do work for nothing and not get paid for it. And the topic I want to focus the most today is the rejected shares. So if the customer doesn't receive the burger or the dish, they will reject that order. It's the same with mining jobs. If the pool doesn't get the correct mining solution, they will reject this solution. And most of the time, pools normally report only accepted and rejected speed. Whereas in reality, there's 4 types of rejected shares. There's still share, which is basically share that's being sent too late. There's share above target, which is a rejected share that doesn't meet the pool target difficulty. Then we have a duplicate share, which is a mining share that's being sent to the pool multiple times, so more than once. And the fourth one is other or invalid rejected share. This is basically a share that has incorrect information. If we take a look at the first one, stale share, this is the most common one, and it is expected to happen to some extent. I'm talking anything under 0.5%. If there's more than, let's say, 1% of stale shares, this shows you that there's something wrong with the internet, and it should be inspected and resolved very quickly, because you're just throwing away the money. In a restaurant analogy, that would mean that the customer ordered a burger, but the kitchen staff delivered it too late, or the dish was already cold. So obviously the customer will reject the burger and the kitchen staff will not get paid for it. The cost for stale share is bad latency between the miner and the pool. And there are different reasons or different types of issues that are causing it. So for example, maybe you're using a VPN provider that's causing additional latency. Maybe you're using a proxy that's causing additional latency, or you're using some sort of Starlink or mobile hotspot, which obviously increase the latency. The most important part is that you're connected to the server, to the pool that's really close to your physical location. And at NiceHash, we have more than 24 locations, 24 servers across the globe, 8 of them in North America alone. So by using NiceHash, you're automatically directed to the closest location. The second type of rejected share is share above target. The definition of share above target is that this is a share that fails to meet the pool difficulty. And in a restaurant analogy, that would mean that the dish has too little of the required ingredient. For example, the burger has just half of the required meat. And in this case, the customer again will reject the order and will not pay for it. The cost for rejected share above target rejects are most likely hitting in bad mining software or too high overclocks. This was especially we can observe this especially on GPU mining. Of course, it happens also on ASICs if you're using too high overclocks. To resolve it, make sure that you update the firmware, because sometimes even the stock firmware might solve the issue if you're updating to the latest one, and lower the overclock settings if you're using a custom firmware. At NiceHash, we have this compatible batch program, compatibility program, where we work with manufacturers and we make sure that their firmware and their ASICs are fully compatible with NiceHash. So if you look for this batch on the manufacturer's website, you will be sure that the ASIC is working nicely with NiceHash. The third type of rejected shares are duplicate rejected shares. The definition of duplicate shares is that these are shares that are submitted more than once. So in a restaurant analogy, that would mean that the customer ordered one burger, but was delivered maybe 2 or 3 or even more burgers. Of course, the customer will only pay for the first one and will reject the other ones. In this case, the kitchen staff again did the work for nothing and will not get paid for it. The cause for duplicate rejects is most likely lays most likely in bad mining software or incompatibility with the pool. So again, make sure that you update the firmware to the latest version, and if you're using custom firmware, make sure that you just test the ASIC with the stock firmware. And if that doesn't help, try reaching out to the pool, because sometimes the pools don't follow the official protocol of a certain coin, or they have some mistakes. And at NiceHash, we have 2 support emails. The first one, the general one, is support@nicehash.com, and the second one, farm@nicehash.com, is intended for more for clients that need more direct approach and a direct person to work with. The last type of rejected shares are other or invalid ones. These ones are the least common. So the definition of invalid or other share, rejected share, is that this is a share that has incorrect information. In a restaurant analogy, that would mean that the customer ordered a burger, but he or she was delivered a sushi instead. The cost for it would again be most likely related to the firmware or the incompatibility with the firmware or too high overclocks. So as you can see, in most cases, the issue is related with the firmware or with the ASIC. So at NiceHash, we have custom firmware powered by Mara, which makes sure that all of the ASICs using it are fully compatible with NiceHash. So in order to troubleshoot rejected shares, you need to have the right tools to do so. And NiceHash offers one of the most detailed statistics in the industry. Not that you can inspect accepted and rejected speed on a global and per worker level. You can also inspect what type of rejects your ASICs are reporting for the past 7 days. So you can see exactly at what time in a day or in a week the ASIC had rejected shares, which really ease up the troubleshooting of the issues. As you can see here on the image, we were testing one of the firmwares, and there was a lot of duplicate rejects. And we could easily see when they happened and what was the percentage of rejects. So I urge you to check your mining dashboard and inspect if you have too much rejected shares. Keep in mind that it is possible and expected that the stale shares are going to happen to some extent. There's no way around it. But the other three types, they shouldn't happen. And if they do, there's something wrong with something, and you're throwing the money away. And let me repeat myself, the rejected speed is the silent profitability killer, especially after the halving, where miners are after they have small margins and they have to optimize their operations. Thank you. That's all. I hope you learned something new.
Here we go. Marco, thank you so much for coming up. And again, thank you everybody for being here early. I guess the breakfast worked out well. So thank you to Mining Disrupt for offering the free breakfast for everyone. And wow, people really love the free breakfast. Okay. Excited to be back here for day 2. It's going to be another great lineup of content throughout the day. So get your butts in here early, sit down and start listening in. And we have an awesome new lineup of folks that are coming on. So we got Ryan Gibbons coming up next, and he is going to talk about something really important and that is really near and dear to my heart. You know, I do a lot of focus on Bitcoin mining and on how Bitcoin mining can balance the grid and ways that we can participate in the grid. And one of these things that really I think is important when you're trying to balance the grid is how much of the load are you applying during peak demand? And oftentimes in ERCOT, MISO, you know, Georgia, different energy markets, they more or less like make you guess. They're like, okay, we will have once a month or once a quarter a time when we're going to measure to see how much load there is on the grid during peak demand. And you want to try to avoid those moments to shave off costs on your own electrical power bill. But what we're going to talk about here in a moment is taking the guesswork out of balancing the grid, taking the guesswork out of reducing your load during peak demand. And there's a way that you can do that, and it is through some AI machine learning. So very excited for Mr. Gibbons to come up on stage. Mr. Gibbons, come on up and tell us how you are going to help us take the guesswork out of balancing the grid. Thank
you. Good morning. My name is Nate Givens. I'm with Revolve Labs, and I'm going to be talking about how machine learning can save mining through energy and operations optimization. At Revolve Labs, we do hosting for Bitcoin mining and HPC AI. We have a carbon negative model that produces some of the lowest costs in the industry. And we also have industry-leading operations and ASIC repair expertise. Myself, really quickly, I have a background in math, systems engineering, and economics. I've done software development as well as data science and machine learning engineering. I've worked in a wide variety of fields. I've done finance, healthcare, logistics, and gaming. And I am now the director of machine learning engineering at Revolve. All right, so here's our agenda. Problem, rising energy costs, bad. Plateauing ASIC efficiency, also not so great. Now, I'm gonna take a detour after we do that quick problem overview, and we're gonna talk about machine learning, and I'm gonna teach you guys all about AI. It's gonna be awesome. And then we're gonna get back to the solutions. Once we have a better handle on what ML AI are all about, we can talk about how we can apply those to energy operation or to energy and operations optimization. All right, so this is not a shocking slide to anybody. Energy price go up. This is the monthly average cost from like November 1978 to May 2024. Yeah, it doesn't go down, not in the long run. All right, so here's a chart of ASIC Bitcoin miner efficiency. This is the average efficiency in joules per terahash by the year in which the miners come out. So this doesn't reflect necessarily the actual efficiency that's out in the market because people will use a miner for more than a year, obviously, but it kind of represents the frontier of efficiency and how that's progressing. You can see we had really, really awesome gains initially, and they're kind of slowing down, at least in nominal terms, and we believe that in relative terms as well, we're kind of plateauing in how much we can expect to get out of increasing efficiency. And then, of course, Bitcoin halving just adds more pressure to this whole thing. I've got a couple of industry quotes. Operators with higher production costs per Bitcoin will have a more difficult time surviving the halving. That's actually a pre-2024 halving quote, but it's going to apply again in 2028 and in 2032. All right, guys. Now we're going to learn about AI and ML. It's going to be exciting. So we can actually say exactly when AI started as a field because there was this really famous seminar at Dartmouth University in 1956 in the summer. That's where kind of all the initial researchers and scholars got together and really kicked this field off. Now, the thing to understand about AI is that the initial goal was to get computers to be as smart as a human, but also to be smart like a human. And what that means is that the initial models for AI were supposed to mimic human cognition. They wanted machines to think the way that humans think. And so they broke it down into fields that represent human cognition fields. You had to teach a machine how to reason. You had to teach the machine knowledge representation. You had to teach the machine planning, and you had to teach the machine learning. So this is the relationship between AI and ML. Machine learning is a subfield of AI. All right, we're going to go through the history really quickly of AI and ML. All right, so it started off in 1956, and the first big idea was what's called a neural net. It's short for artificial neural network. And again, this goes back to this early philosophy where they wanted machines to not just be smart as humans, but smart like humans. And so the fundamental concept of a neural net is that you're going to put a bunch of nodes together and they're going to act like neurons in a human brain. And so you'll send information to these nodes, and then they will either send it on through the network or not. And that's the way neurons work in a human brain. Everybody got really excited, but it didn't really work. And so we got to the first AI winter. I don't know if you can see the years there, but that's in 1974 to 1980. Research funding dried up, and industry was not interested because nothing had worked out. So we tried again in the first AI revival, starting around 1980 with expert systems. Expert systems are an AI approach where you ask a bunch of human experts, hey, what would you do in this situation? You ask 100 experts, you get a bunch of rules, you load them up into a computer. Now your computer, in theory, is as smart as 100 experts. So now you've asked the computer, hey, here's our situation, what should we do? Now, initially, the research showed that you could get much better results from the aggregated rules put into an expert system than from actually asking humans. But again, it didn't really pan out. We also tried neural nets again. They didn't work the second time either. And so we got to the second AI winter, which is 1987, 1993. Nobody wants to fund AI. Nobody in industry is interested. So here we get to the second AI revival. All right, we try expert systems again, and this time they work. Why do they work in the 1990s when they didn't work in the 1980s? Because now we have way more compute power and way more memory storage. And so the first really kind of famous example some of you guys might heard of is the expert system Deep Blue. And this was the first time an AI was actually able to beat the reigning chess champion in chess. And so people were like, whoa, this is actually working for once. But there's still a problem with expert systems, and that's that you have to ask a bunch of humans, hey, what should the rules be? And so you've got this manual step at the beginning. And so this is where we really shift from AI in general, and it's where machine learning really starts to shine, is right here in the late 1990s. When we said, hey, what if instead of asking a bunch of humans, what would you do in this situation, we just give a ton of data to the machine and say, you figure the rules out. We don't know what they are. It's your job. All right, that's where machine learning really comes in. And we'll talk about GBTEs very briefly in a second. And we also tried neural nets one more time, and they started working. Why did they start working finally? Same reason. First of all, we have a lot more compute power. We have a lot more memory. That's really important. But also because at this point, AI finally gave up on the idea that computers were going to think like humans think. That was the whole idea between neural nets. It was supposed to be like a human brain. And finally, they just said, you know what, forget it. It's not like a human brain. But it is pretty cool, so let's let it be its own thing. And that's when we finally started to actually get neural nets working. And specifically, we got deep learning. Deep learning is just a type of neural net where you've got your input nodes, you got your output nodes, and in between you have multiple layers of what are called hidden nodes. That's what the word deep means in deep learning. It means you've got these hidden nodes. Those started working, they worked really awesome, and they became the basis for generative AI. All right, the key takeaway here is that this third time really was the charm. And ML is the first subfield of AI to have broadly successful applications. What do I mean? I mean, when you use Spotify or Amazon or Netflix and you get those recommendations for what you should buy next, what you should watch next, what you should listen to next, congratulations, that's a machine learning algorithm, not in theory, but in practice. Credit risk. So if you go and you try to apply for a credit card, the answer you're going to get is going to come from a machine learning model. It's specifically going to come from what's called a gradient boosted tree ensemble. That's like the classic old school machine learning. That's what's running all the credit risk decisions. Language translation. For years, linguists tried to get computers to translate language. And the way they thought that would work is, hey, if we can get all the rules of linguistics, we'll be able to do translation. Never worked very well. Finally, they did the AI approach, which is, you know what? Let's just throw a ton of data at it. And they just threw millions of words in English, millions of words that had been translated into Spanish, and they said, please, deep learning model, you figure out the rules. And all of a sudden, translation started working. Why? That's an area of active research, but now they work. Now we actually get language translation that's reliable. And lastly, let's talk about generative AI. So when you've got these deep learning models, one of the cool things you can do with them is you can set them up in what's called a generative adversarial network. And that means that one of the AIs is trying to trick the other AI. It generates fake data. And then the second AI has to go, is that real or is that fake? And it turns out that when you get two AIs to try to trick each other that way, and you let them iterate it on a long time, they get better and better and better at faking the data. And then we were like, oh, hey, we could turn this into ChatGPT. We could start making images this way. So all the generative AI stuff, there's other parts of it as well, but one of the key aspects of that was deep learning put into these generative adversarial networks. Okay, so machine learning is here to stay. It's not going away. There's not going to be, I don't know how far it's going to go. I don't know what the future of generative AI, I can't predict the future. I can just say that we have machine learning applications that are embedded in our society now, and it's working. It's no longer a theory. But there is this bad news, which is that implementing ML solutions at scale is very hard. So here are some quotes from the Practitioner's Guide to ML Ops. It's a white paper from Google. I won't read the quotes for you. They basically say most people that try to put a machine learning model into production, they don't succeed. Now, it is really easy to go out there, learn a little bit of Python, take a Udemy course, and build a simple toy machine learning model. Like, how do you save people from how many people from the Titanic are going to be saved? That is a really grim model, but it's like what machine learning always uses to teach people. You can build that model pretty easily. You can get a Jupyter notebook running on your computer. Congrats. Now you got to turn that into a product. There is a whole lot of additional work that goes into that. You got to build your data pipeline. You got to set up monitoring. You've got to decide how to do your inference infrastructure. That's really difficult, and that's where most people fall down. And according to this Google white paper, the thing that you need to be successful is you need senior to mid-level machine learning talent at your organization. That's why I'm here. All right, let's go back to Bitcoin. All right, we're going to talk about energy optimization and how machine learning can help. The first thing we're going to talk about is real-time curtailment. So if you are a large-scale consumer of electricity, you get to play in the day-ahead market or other futures markets. That means you can lock in a price today that you're going to pay for electricity tomorrow. Now, if during the day tomorrow, the real-time price goes really, really, really high, then you can curtail, turn your machines off, and you will get paid for not using electricity. And if that price goes high enough, then you will actually get paid more for not using electricity than you would for mining. And now, obviously, this depends on a lot of factors. It depends on the price of whatever you're mining. It depends on how long you think the price spike is going to last. So we need a system that can take all this data, aggregate it very, very quickly, and say, should I curtail, yes or no? That's exactly what machine learning models are good at. And they have the advantage of running 24/7. So if this price spike happens at 2 in the morning, which is something that can happen, you don't have to have a human there going, oh, geez, I don't know, should we curtail or not? This price is going really high. I don't know how long. No. Let the machine learning model take care of it. And it'll curtail or it'll not. And you'll be able to make, this is kind of marginal savings on what you would otherwise get. Now I want to talk about capacity charge and transmission fee avoidance. This is actually a much bigger deal just in terms of the amount of money that's on the table. So the way this works is when you're in a network, part of your monthly electricity bill is going to be this fee that they're going to call capacity charge or transmission fee. Now this is assessed different ways in different markets. Where we operate, in MISO, they pick one, every month they look at the hour that has the highest load, all right? And then they say, who's using electricity during this hour? And they assess those people the fee based on how much electricity they used during that peak hour. This is what's called the coincidental peak. So here's the good news. If you're not using electricity during that one peak hour, then your fee is $0. And this can be 25, 30% of your entire electricity bill. So we're talking some pretty significant savings. The trick is you have to know ahead of time which hour every month is going to be that peak load. You have to know so that you can avoid it, so that you can curtail. And again, this is a problem where machine learning model really excels. And so you can save a lot of money that way too. So we have these two energy optimization approaches, real-time curtailment and charge fee avoidance. You can run these models independently. That's the state that we're at right now. And that's great. But what you really want to do is you want to combine them. Because when you're really confident about that peak hour, you're like, I'm absolutely sure that I know it is this hour. That means you have lots of hours that you can use to play with real-time curtailment. Now, some months it's harder to predict than others. So some months you might be like, this peak hour is probably Tuesday at 2, but it could be Thursday at 4. I'm not sure. So as you're less certain, you might have to curtail both hours. So you're going to use more hours in this charge fee avoidance. You're going to have fewer hours in real-time curtailment. So what you really want is a single model that is doing both of these optimizations for you at the same time. And a reinforcement learner is the type of model that would be really good at that. And that's kind of our future state. Okay, so let's go to optimization, predictive maintenance. If you've got a bunch of miners out there, you absolutely should be, and I hope that you are collecting your operations data. Temperatures, fan speeds, environmental conditions. If you're collecting that data, and also when they break, then you can use that data to build a machine learning model that will predict ahead of time which machines are most likely to break. Now you know which ones that you need to repair before they break. So this is a really obvious and straightforward application of machine learning. And this is the kind of the last slide, this is where it all comes together. The really key observation here is that these energy and operations optimization techniques, they're symbiotic. They work together. So we'll think through this really quickly. The better you get at energy optimization, the more you're going to be curtailing at least some of the time. Every hour that you curtail, meaning that you got your machines turned off, it becomes that much more important that when you plan on running, those machines better work, right? So energy optimization makes operations optimization more important. And going the other way, when you're doing your operations optimization and you're doing preventative maintenance, it really makes sense to do that when you're going to curtail anyways. If you decide, hey, we're going to curtail 3 hours this coming Thursday because we're pretty sure that's where the peak is and we want to avoid it, then you go and you look and you see what maintenance do you have scheduled. Well, maybe you should move that schedule to do it on Thursday during those 3 hours because you're going to be offline anyways. So rather than waste additional time and money, schedule your preventative maintenance while you're doing your curtailing. So that's really kind of the holy grail here, is you have a single machine learning model that's going to synthesize your energy optimization and your operations optimization. So if this sounds as awesome to you guys as it does to me, then come talk to us. We are at booth 156 and discover how you can optimize your operations and save yourself some cash.
All right, thank you, Nate. It's really interesting to say not only the way that Bitcoin miners are getting into the AI space, but we also have miners using AI to help them optimize their usage of their power and to be able to participate in peak shaving. So very excited about the story that Nate had to deliver. Up next, we're gonna have Ian Dakota from Pow.re or Power. He's the CTO over there, and he is going to be talking about hash rate centralization, pool centralization, a really, really important topic. Obviously, we had a huge panel yesterday on this with Luke Dash Jr., Bob Burnett, some folks from Swan, and others from Ocean. It's a really, really critical topic, and we need to make sure we're staying on top of this. So I'm really excited for you. On up to the stage and tell everyone how you're going to help them out.
All right, good morning, everyone. I hope everybody had fun at the parties yesterday. I'm having a very light talk today, talking about the mining pool centralization that's going on right now. So for the people that don't know me, my name is Ian Dakota, in French. I'm the CTO and co-founder at POW.re. We are mostly a self-mining company. We also play into the hash rate derivative market. And I'm a very technical person. I've been mining since early 2010. So I've been observing a few things that's been going on the network since early 23. Few rumors that's been starting going around on the network that there was some mining pools misbehavior going on. Fortunately, it was only rumors, not very data driven, no evidence really being given. And in December, more evidence started coalescing out of thin air, and it started showing a pretty worrying scenario, in my opinion. So, what are proxy pools, which is the crux of the issue currently? Proxy pool is a pool that is a mining pool that does not usually generate their block template or that relies on another upstream pool to deliver some services to them. May it be custody services, block generation, or any other type of services. It's not a significant issue when it's done transparently, but as you can see, MCD here is showing in the block template generation that the resolution is not too high on that, but it's saying mined by npool. The reason is it's because npool is giving them their block template. So EMCD and a few other pools, new pool with some mining, Lincoin also, they do proxy mining, but transparently. It becomes an issue when it's not done transparently. Like most big pools, they advertise that service. You have npool that are very clear that they offer you a way to build npool cloud mining pool, they call. Yeah, BTC.com also. BTC.com that happen to be a proxy pool too, but they also advertise in very small on their website that they call that the cloud pool construction. And via BTC too. So that's a link to a demo page of via BTC. That's their white label mining pool over there. So all the large mining pools, they are very straightforward on what they advertise, what they offer. So it's not a secret. So I'm going to talk about 3 critical evidence that shows which mining pool are doing proxy mining. The biggest one is the custody evidence. As you can see over there, we have a bunch of mining pools, npool, Ultimus, BTC.com, Luxor, MCD, Brains, Pooling, SecPool, npool, all feeding their coin-based payouts into the same few addresses, and out of these addresses, it's going to the miners in the end. Internally, we've been able to confirm that these addresses are involved with npool. The reason why is our company bought S21 from Bitmain, and our deposit payment ended up within 2 hop on the on-chain to the 3BHX address. So that's that's a graph from Coinmetrics showing all the issuance of coins to the mining pools, showing the size of the mining pools. But then that's another chart from Coinmetrics that's been updated by Parker Merritt a few days ago. It's showing that npool and via BTC F2 pool, not via BTC, npool, F2 pool, a bunch of other pools, Binance, and a few other pools are all sending their current-based payouts to those both addresses. Only this year, only since the beginning of the year, they received 43,700 BTC. That represent 36% of all the non-exchange pool payouts, meaning all the pool payouts that didn't go directly to an exchange addresses were sent to 36% of that was sent to these addresses. It's a very big amount of Bitcoin being pulled into that. So what the on-chain analysis show is that these addresses, they belong to Kobo. Kobo is a company founded by the founders of F2 Pool, Discus Fish. And to this day, the address, like I say, is very, very active. Kobo operate a network that they call the Loop network. There's a bunch of exchange being listed in there. It's supposed to be an off-chain settlement network, but it appears that a bunch of mining pools also use them. So Kobo will hold the majority of the payouts of these mining pools. That's another example of from Mononut on Twitter that showed because the consolidation of a bunch of mining pools that shouldn't talk to each other. You have again F2 pool and pool in Brains and pool BTC.com, seg pool, bunch of pools that shouldn't be talking to each other. Well, they actually not only talk to each other, but they sign transaction together. Either they cooperate together to sign transaction, or a custody service has access to all their private key to be able to sign their own transaction on their behalf. So that's the custody evidence. The second evidence is the Merkle tree evidence. I don't know if most people here are not going to be aware of what the Merkle tree is. So the miners, they are being given that data structure. At the bottom of the data structure is all the transaction that the miner mines in one block. And then it's hash and then hash together. And then it's hash a bunch of times until you get to the root that they called. And the Merkle tree root is put in the block header. And what the miners hash is actually the block header. So that data structure is given to the miners in part. So the miners are being given leaves of that Merkle tree, and they are including them into their hashing attempts. So the Merkle tree should never look similar. So that's each column here is represent a leaf that was given to the miners. You should never have leaves that are significantly similar. Any transaction, so there are so many transactions in the in one block that even a few transactions being different will lead to leaves being very, very different. Well, you might see that the bottom half of that graph is very similar. Actually, there's a bunch of pools that have the exact same Merkle tree. Again, it's the same list of mining pool that we expect: EMCD, Npool, BTC.com, Binance, Poolian, Raw Pool, Brains. Yeah, exactly the same people that I've been mentioning since the beginning of this talk. And that's another screenshot that I took a few weeks ago in a plane to Las Vegas. Like you say, half of that graph is very different, and the other half repeat themselves. You have two Merkle tree that are very similar, that are via BTC and Trust Pool. Trust Pool is a white label of via BTC, so it's normal. And then a few, again, that the same guy that we've been mentioning, EMCD, Poolian, Ultimus, and Pool. And the last evidence is the transaction acceleration evidence. So the miners are being given, in the Merkle tree, we are being given one transaction. The reason why we are being given one transaction and on one leaf is that we need to modify the coin-based transaction to change the extra nonce. So we need to hash two transactions together, the Coinbase and one transaction that's being given to us by the pool. That one transaction that's being given to us by the pool is supposed to be the highest paying transaction of the block. So it's the first transaction after the Coinbase transaction. So if that transaction is suspiciously low paying, it means that the transaction is coming from transaction acceleration services. Here you see a tweet by BTNC on Twitter again. That's showing that Npool, Binance, BTC.com, etc. They all have the same transaction being accelerated at the time at 9.03 sats per VByte, which is, I think, 10 times lower than what the network average was. And then again, in the plane a week ago, I made another screenshot. You see the same list of pool again. F2 pool, all BTC, pool in, Ultimus, BTC.com, Brains, blah, 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 and pool that are all trying to mine the same low-paying fee transaction at 11 sites per VByte. So That means that they are cooperating on their transaction acceleration services. So, okay, so we have evidence. What's the result of that? I don't think much people have what they're toe into giving like an outcome to what the mining pool are doing right now. So there's two scenarios. That's the best case scenario that I call. You have N-Pool and Friends that are currently controlling 37.2% of the network, and then Foundry at 29.1, via BTC at 13.9. It's a scenario that's not so bad. But there's the likely scenario based on the custody service provided by Kobo. So those list of pools being custodied by Kobo are probably controlling 50.3% of the network. It's quite concerning at this point. So now that we know what the mining pool are doing, what's the potential outcome, what do we do? Some people suggested using other mining pools. Well, it's just moving the problem around to me. So if we're not using other mining pools or Stratum V2 and just moving the problem to other miners, what are we doing? Well, what we can do is audit the mining pool's life and give the data to the miners so that they can make their own decision live on where they are mining and be able to change their mining pool on the fly. So we've been developing and we've been logging everything that's coming from the mining pool for the past 3 months now. So we've been developing a product that's going to be an auditing service for the mining pool and monitoring service. Of course, it's going to be given for free to the mining community. So you'll be given metrics and work observability from of the mining pool, misbehavior detection. So if your mining pool is starting to be a proxy pool, you'll be warned about that. Pool payout verification. So we've been doing verification of the pool payouts on, every day on the fly. Scoring and review of all the mining pools, and everything was going to be available by API. That should be available before Q4 2024. So that's all for me.
All right. It's funny because we always talk about auditing the Fed in the Bitcoin space, but you got to audit these pools. I mean, I can't tell you enough how commonly I hear the story going around of people not being paid for the work that they're doing. So it's a really important thing and great announcement. Glad to hear there's new products coming onto the space. Seems like there's so much innovation taking place on a constant basis now in the Bitcoin mining world. In fact, this very next panel is going to be talking about a variety of different types of innovations. We are going to be talking about how to cool those chips. So on this next panel, chilling the chips, we're going to have a variety of different cooling mechanisms, everything from hydro to air to immersion cooling. So it'll sort of be like somewhat of a debate, I hope. I hope it'll be somewhat of a debate. I always love to see a good debate. So I want to welcome up our moderator, Shannon Squires. Come on up on stage. And also Matt Carson, Ashu Swami, Gerald Wilkie, Nick Burley, Nick Budiker, and also Gary Testa. Round of applause, everyone. Knock him dead. I don't think so.
We're the best of friends.
Yeah. Who needs a mic? There we go, Gerald. There you go. Yeah, of course.
Dennis, thanks for the introduction opportunity. Your shoes are not nearly as shiny the last time I saw you do this. Thank you guys for coming and listening to us chat about different cooling technologies for ASIC miners. I'm Shannon Squires. I'm the Chief Mining Officer of Compass Mining. I'm going to give these gentlemen an opportunity to kind of introduce themselves.
Matthew Carson, Chief Communications Officer of Hash House. We build everything from air-cooled facilities to all-in-one immersion cooling containers.
So I'm Gerald Wilkie. I'm Matt's personal assistant. Also the president and founder of HM Tech. We're the largest ASIC repair facility in North America. And we also do some hosting, self-mining in North Carolina as well as Texas.
Nick Burley from Fog Hashing. I'm VP and head of North America. We build immersion solutions and hydro solutions for that little bit more dense applications.
My name is Nick Beudeker. I'm the managing director for Peak Mining. It's a mining division of Northern Data Group, a German HPC company. And we're building the first 100 megawatt hydro build in Texas at the moment.
Yeah, I'm Gary Testa with Engineered Fluids. We've been doing immersion since 2016.
Ashu Swami, CTO of Marathon. We are a vertically integrated Bitcoin mining company. We build everything from miners to deployment systems, orchestration layer, pool, and everything in between.
Thanks, guys. This is a pretty in-depth team when it comes to cooling ASIC miners. Most of these gentlemen I've known for one way or another over the years, and they have a pretty in-depth experience and background in every cooling method within Bitcoin mining. Could you guys walk through kind of a history of where we started with cooling Bitcoin miners and kind of where we're at today? And feel free just to pick up the questions.
Well, I remember I started mining in 2016, and that was at that point, at least the large miners, they were all using high density air cooling. And the first couple of videos showed up on YouTube using mineral oil. And I was like, are these guys out of their mind? I mean, I knew it was a dielectric. It was not going to create a short circuit or anything, but it was not feasible. It was not economic at that point. But kudos to the industry and the perseverance of research and the grit of the people. Today, actually, immersion cooling cost is quite comparable within the margin of error of air cooling. So that's what I've seen over time.
Yeah, I think immersion really kicked off right at the beginning of 2017. We got the S19s and we figured out we could overclock. And that was really the big driver to immersion, was how to get, work that equipment harder.
So taking it back a little ways, we started mining back in 2012, and it was kind of a, stumble your way through the dark type of experimentation. And we had to figure everything out, from top to bottom. If it was broken or if there was an issue, it was how do we innovate? Because there was literally no playbook. And when we started out with air cooled, the amount of heat that we generate, I don't think any of us, as we started mining, were like, holy shit, like what do we do with all this heat? And then we started doing our homework, and we're like, man, so for every kW we get 3,300 BTUs of heat. How do we deal with it? And so I can remember when we had our second batch of S2s, which was our first commercial deployment, if you will. So we had maybe 200 kW, and of course we're baking the office space that we're in. And I was like, you know what we're gonna do? Because we had forums back then, and Bitcoin was kind of like a community college project. And so everybody's talking on Bitcoin Talk in these forums, and we're like, I'm gonna dunk it. And they're like, what are you talking about? I was like, dude, you like the fish tank PCs? Like, we're gonna dunk our S2s. No way. So we do this terrible science project, right? So we've got this big plastic barrel, like a 55-gallon drum that we filled with T-grade mineral oil. I'm sorry, nickel wasn't around yet, or we would have used it. So we had 3 S2s in this big barrel, and we had piped the fluid through a radiator that we had sitting in front of an air conditioner, like a 5,000 BTU AC. And we're like, this is gonna be awesome. And we fire it up, and it takes about 9 minutes for the oil to be so hot that you can't even near it. Like, we didn't have temp sensors or anything, but it had completely overheated. The miners had shut down. The oil was so hot that it had to be like damn near boiling. We're like, all right, well, this sucks. We got to find a better way. Like, back to the drawing board. And a few years later, after a lot of the same thing, we're falling over these hurdles and stepping into the pitfalls. People, we figured it out. And I think today we're at a turning point where there's going to be a divergence between basic mining, which will be air cooled, and then you'll have the advanced mining, which will be hydro or immersion. And those are the folks that are going to really reap the benefits during this next epoch.
Yeah, and just kind of continuing on that, what are some of the pitfalls you guys ran into in the early days? I've been able to see immersion mining farms that were super successful. I've seen others fail horribly. I've personally had to take thousands of miners back from immersion to air, which is a very pleasant experience. What are some of the biggest pitfalls you guys ran into with developing immersion or even getting into hydro systems over time?
I think one of the big ones is the weird sort of, I think we could all speak to this, resistance from the ASIC manufacturers in the early days to anything that wasn't their solution. Not even, specifically against immersion and hydro, but if you didn't almost build their air-cooled facilities to their standard, they had a problem with it. So, I mean, we're seeing just now, last week, Bitmain finally releasing an official immersion miner when, ironically, they have the largest market share of immersion mining right now, technically with every one of those miners having voided its warranty. So I see the shift now in having, you know, the top 3 manufacturers and of course, you know, the upcoming manufacturers like Auradine and Chain Reaction all supporting some form of immersion or hydro out of the box. I think represents, I don't like the word, but a paradigm shift in the industry into understanding that we've got 3 solutions for 3 different sets of problems now, and that requires 3 different, you know, compartmentalized products.
I would tell you that the early days, the biggest problem was getting people to understand that you had to engineer these systems. The throwing the miners in the 55-gallon drum and heating it up, we'd get customers calling us saying, it's hot. We're like, are you cooling it? Are you flowing the fluid? They're like, what? You have no pump? My favorite one is a guy calls us up and says, hey, you know, I figured out that I can sous vide my lunch in this container, but I have to shut it off after lunch.
This wasn't like, so one of the biggest things you kind of mentioned there is there's not a whole lot of, or hasn't been a whole lot of like after, or, you know, many days. What were the biggest challenges on the firmware side? So that was something people ran into. They'd put their miners in immersion and then they didn't have it, like they just wouldn't run.
I got to answer this one. It's called fans. And how do we get rid of the fans? And can we have the fans not start up? I mean, we fought and we come up with spoofers. I published in 2016 one of the original spoofers designs that I got from a buddy of mine. And that was really the biggest issue. That and the fact that we still, to this day, on many miners, cannot get an actual temperature off the board, right? I mean, those of you who own an S19, that's not a real temperature. You can see the temp probe there, but there's no wires going to it.
Yeah, I think what's interesting is that in our industry specifically, we're operator-led. So the manufacturers will do X, Y, and Z and produce products for us. But it's the farm operators that actually innovate. Like in the AI field, you've got folks that lead like NVIDIA and HP. Those guys are innovating and then pushing that innovation down to the consumer level, and it's inverse with us. You know, I am pleased to say that there's a lot of changes happening, especially with companies like MicroBT, where they're releasing purpose-built miners. They were first to market with that, with the Hydro and the Immersion, was, you know, specifically designed for these intense applications, which is fantastic. My hope is that the rest of the industry follows suit, and then we start seeing innovation from the folks who've got the pocketbook to be able to do that and then provide for us versus the other way around.
Maybe to add to that, I think it's interesting that they create those products, but I think what's also needed is more standardization in this regard. Because if you look at Bitmain and the air-cooled miners, or even the hydro miners, they built their own miners basically for their own infrastructure. And I think this has to change. And MicroBT, for example, came out with their hydro product and was like, okay, this is it. Data center rack mountable unit that you can use and standardizable across the industry. I think that more suppliers should follow that trend.
Yeah, I think Nick, you hit it on the head. Just like any other technology industry, this is evolving in bursts and starts. And there is no standardization. So you look at the early miners, they were shoebox style. They were primarily targeted for basement mining. No industrial miners would be using those. They should be 2U form factor, right? Similarly, the Stratum protocol. It does not work with half of the pools or does not work with half of the firmware. Now, people are slowly coming together on some common standards. SV2 is a major development on that. But what helps in that phase of the industry is integrated device manufacturing. So if like an iPhone comes out, which has an integrated iOS versus all the applications, iCloud integration, that really can actually create a whole which is much bigger than the sum of the parts. And that's what we try to do at Marathon by having our own internal firmware, pool. We can actually tap into all the inefficiencies which exist at every level, from the ASICs to all the way to the pool, and give users a much better yield. And not just for ourselves, but for everyone else.
I have to agree. I think one of the biggest challenges we have when we deploy very large immersion is that the firmware in these miners, typically the management system is designed as if you owned one. And when you're trying to deploy 10, 12,000 of these and you have to group them into groups, this is a basic network management challenge. I mean, I ran Tivoli at IBM. We'd solved this 40 years ago. And today we still see, I mean, I'll tell you, companies like Auradine have been really impressive because we've seen that they've actually thought through the network management aspect. How do you deploy these at scale? How do you manage them? How do you do firmware pushes? And how do you just integrate that into the basic firmware?
Maybe there's a last point to add to that. I think that's extremely interesting how that's happening. And because what you see in that, and you mentioned data center space 40 years ago, immersion and hydro are not new. All right, so these technologies, a lot of companies have been playing around with it for many years and never been able to apply it at scale. And this is the nice point about mining. Because we work at scale and the economic ascent of the Bitcoin system is driving us to find efficiencies, we're actually at the forefront of developing at scale technology more than the old traditional data center companies.
So one thing that always comes up whenever you're dealing with alternative cooling methods is just essentially the economics. So when I first started dealing with trying to get any sort of scale with immersion mining, it was just prohibitively expensive. Over the years, that price has come down. Can you guys speak a little bit to the economics and the improvements you see in the economics when you actually are able to do immersion or hydro cooling and improve that density?
Yeah, go ahead. No, go ahead.
Well, I'll just point out by saying that if someone walks around this floor, you will see majority of the companies are cooling technologies. And it's not a coincidence. The demand is just humongous. It's for a lot of these companies, actually, it's Bitcoin now, HPC tomorrow. This is not stopping at Bitcoin, because if you look at NVIDIA, their future Blackwell's processors are not going to be cooled by air cooling. So they are building their own DGX systems. By the way, NVIDIA does not have an immersion cooling lab. They actually rely on other labs to actually do immersion cooling testing for them. And a lot of people here maybe are working with those people, including us with a lot of those companies. So the point is that it's not just actually just cooling the ASICs today. We are actually very fortunate because we were put in this situation where our servers consume much more power than traditional CPUs and GPUs. And this necessity has become the mother of the invention that we have done. And if you talk to like Supermicro or Dell, you look at and you ask what's their biggest server compute density. It's 4 kilowatts in 2U. WhatsMiner now has 10 kilowatts in 2U. Auradine has 32 kilowatts in 2U, 8 times ahead of the industry. And we are the ones who have to solve that problem. If we can solve that problem for Bitcoin industry, we can also solve it for AI HPC. And that's the TAM, which is 10 times bigger than Bitcoin. On top of that, these high energy density applications, which are the immersion cooling, they also create a very high heat concentration in their exhaust, whether it's water or coolant, anything. And a higher heat concentration allows for a greater efficiency of heat recapture. So I can bet every single one of these people, us here, is engaged in one or maybe more heat recapture applications around the world. And that's getting a lot of traction. So I think those factors are actually just the additional externalities on top of the efficiency we provide by immersion cooling, which make the economics much, much more viable than it is with air cooling.
Yeah. So totally agree with that, like 100%. And the other thing, and we have this conversation with a lot of clients across North America, when we talk about the economics, what a lot of people don't factor into these spreadsheets and cash flow calculations, and they're trying to figure out what their run rate's going to be over the next 3 years, they're leaving out a bucket for failure rate, right? Which blows up their spreadsheet on year one, and then they're all pissed. The other thing that we've got is technology has gotten a lot cheaper. So with our company is focused in on the hydros by MicroBT, and you've got an 80 by 20 pad where you've got between 40 and 50 petahash for like 1.1 million installed, loaded, delivered. That's super competitive, especially when you figure you're looking at 99, 98% uptime, minimal OpEx. Like all these ancillary costs that happen to mining farms, especially new folks don't understand when they get into it, completely get them upside down on their profit rate. So between the density and what winds up being a lower cost per hash in the long run is the best choice that they could make.
Just building on what Gerald said is Marathon over here is you have all the new entrants and even a lot of older entrants that they just look at their model that they created without taking into account really any real world data. I don't think anyone's model that they modeled for, say, example, the S17 ever turned out to be true under any circumstances.
I don't think anybody made money then.
No. So when you take into account all these external factors, these external value adds, and the fact that just the core mining operation will run better with immersion and hydro in a much wider variety of situations, noise restrictions, temperatures, altitudes, the numbers really do work out on what the rest of the world considers to be a normal investment horizon. Not the, wait, my miner's not going to pay itself back in 90 days. I'm going to go broke.
Yeah, certainly. And I think when you get down to the core of the economics in the space, more so on the advancing of the technology on our side, we've had this Cambridge explosion of different modalities that we're trying to solve for. You have the three-eyed fish going that way, and that one's got four tails. And you know what? At the end of the day, I think we're in a situation where we're honing in on the efficiencies in the space, and you don't see that innovation anywhere really else. As speaking to your point, in cooling technologies and compute, and I think we're at the forefront of density, as you said, and all of this innovation. Honestly, I think that drives the economics. When we all together solve solutions and we play off each other, we see what's working, what's not working, driving that layer of innovation. There's nowhere else you get so many skunkwork projects working at the same time to solve these solutions. And I think that's the big mother of efficiency at the end of the day, and that drives economics. And us all pulling our corporate knowledge together to kind of build this solution for the future. We're, as you said, densities that are unparalleled really in any other industry. And I more as we solve these engineering problems and push through these bottlenecks, as long as we can get manufacturers to agree on a form factor that we can keep one modality in circulation for a little bit of a longer time, so we can get ROI for our clients on the infrastructure. I think you're looking at a paradigm shift where efficiency is going to matter more than ever going forward. And I think we're cracking that more so now than ever.
When you guys look at immersion systems and you guys are designing, building, deploying them, what are like some of the environmental concerns you think about with those systems? Like, did you originally target this because, hey, there's a whole bunch of Bitcoin mining in West Texas? Or, what does it look like in Nebraska when it gets to -30 and things like that? What are some of the environmental considerations you guys take into account when designing these systems? Are they plug and play? Can they go anywhere? Or is there specific places these should be put?
Yeah, I think one of the biggest challenges when you look around the world is where's cheap power? And cheap power happens to typically occur in hot, humid environments because they got a lot of rain and they got a lot of renewable hydro. And those are some of the worst possible environments to put air-cooled equipment in. If you look around the world, you don't see a lot of major data centers around the equator, but that's where some of the cheapest power is around the world. That's where immersion really comes out, because it not only protects the effective method of cooling the equipment, but it allows you to do it in an environment that protects that equipment from some of the things that destroy it most, which are humidity and the rest of the environment. The key thing, though, in those environments is you got to pay particular attention to the biodegradation characteristics of your coolant, because if if we go out and we start poisoning the environment, we're going to get backlash, right? We have to avoid that.
Yeah, I think to add to that, I'm speaking for hydro mainly. We don't have many immersion operations, but I think it applies to both technologies. Talk about renewable way of cooling as well, because this, what you saw back in the day, you have obviously the machines that need to get cooled and the oil that needs to get pumped, but it needs to get cooled as well by tri-cooling systems or by water towers, and particularly the water point is I think pretty critical, because that is also a sustainability point. Right, so the high water usage of the first systems that were built just to cool it quickly is also not sustainable in the long run. I mean, if you think about it, Bitcoin is scarce, but fresh water is going to be scarce as well. So you need to be careful and sustainable around this. And I think particularly, maybe it's a nice bridge to another topic later, but around the temperature of the chips and the cooling water makes a huge difference of how much cooling water you would need or not in very hot climates.
I think you just hit on, if I had to only pick one thing that I'd like everyone to leave with today, we all want a miner that operates at degrees Celsius. We want the hottest possible output. And we want that for two reasons. One is it dramatically increases the efficiency of your cooling globally. We can eliminate water use if we had a miner that operated that hot. But in a degree Celsius, the reuse of heat becomes absolutely magical. You'd be amazed at how many different other applications you can do just going from 60 to 90. And it's possible. We see that in military grade equipment today. I'm working with Intel on a number of projects like that. But if we could drive that to increase the output temperature, which is really counterintuitive to what the industry does as a whole, we could actually make some tremendous gains.
I would just like to add, a lot of people, I don't know if they are aware or not, is that the energy usage of the world, which had plateaued for a while, is now again on a sharp incline, entirely driven by the usage of AI HPC data centers. It's a tsunami which is coming our way. And it's concerning on many different fronts because traditionally in the US, the PUE, which is the power effectiveness of energy, is 1.5. New data centers, 1.2. What that means is 20 to 50% of all the energy which goes into these data centers is wasted just for cooling the compute. With the new immersion technologies which are coming out, I think all the single phase immersion cooling technologies, they're well below 13% or 1.13. So that significantly reduces your wastage of or overhead of cooling. And with the new technologies which people are working with, whether direct to chips or the two-phase immersion that we do, you can even do 1.05, which is only 5% wastage of energy. Add to that heat recapture, you can actually make it less than 1. Essentially, your cooling overhead is negative at that point. So this is the biggest boon for ESG and the confluence of the AI HPC industry, in my view.
No, it's great. And I think we'll talk a little bit more about heat recapture in a little bit. In the early days when you're dealing with heat recapture, I remember, guys heating their pools and their houses and all that fun stuff. So it's awesome to see it come so far in the heat recapture standpoint. One thing I just want to kind of go back to a little bit is just when we're dealing with the economics of it, like I mentioned, these systems used to cost $800,000, $1 million a megawatt to build. What has been the biggest technology driver to bring those costs down?
I think it's from the infrastructure provider standpoint, it's a matter of survival. We could not sell the systems for those prices, in the way that they were designed, what they could be used for, lack of heat recapture, all of that. They had some of the positive economics of immersion cooling, but still a huge number of the negatives, even just beyond the much more expensive price for air. So we were all driven, across hydro and immersion to get that price per megawatt down, get a better fluid that works better, that's cheaper, easier to acquire, cheaper logistics, just attacking the entire problem at every single stage going, okay, do we really need to spend money on this? Or can we spend money here and drop our total collected costs that we can sell the whole system to the customer?
Yeah, and I think the big word is scale again. All right, so any innovator will start with a small product first, which is going to be super expensive. And as demand picks up and scale picks up, actually costs come down to the effect of economics of scale. And you see that across the industry, and I think this is going to continue, especially, again, repeating that mining is on the forefront of this because of the scale of power and cooling density.
I can talk directly to BitCool. We dropped the price of BitCool 20% last year because we achieved more than 2 million liters a year in production. I mean, it was just scale. And I think the other thing that we've seen is, and it's great. I mean, when I first got into this business, we had to build every single piece of an immersion system. My goal was to just be the fluid provider. Now we've got a lot of competent builders out there competing for the business with decent tank designs that actually cool the miner and don't turn them into a hot tub.
Yeah, that's gospel. I mean, we look at it from a competition standpoint. If you go back just at Mining Disrupt, go back 4 years, and how many immersion vendors were here? Maybe one. And that was like, hey, look at this cool thing I built in my garage. Like, this thing's so cool. And you're like, I don't know about that. And now we're flooded. Hydro is the same way. When MicroBT released their Hydro, you had heat core. Now I think there's 5 container manufacturers in under a year. It's awesome. And that competition drives the price down and increases the economics for the rest of us.
There's just we could dig into the economics on this, I think, for literally ever. I've probably been the most anti-immersion person for a very long time. mostly due to the economics. And I've talked about it a ton with a lot of people. And it's finally getting to that point where I'm starting to be like, hey, this is starting to make like a lot of financial sense. Especially once you start removing the fans from the miners and driving it down. In the early days, we saw a handful of different systems, right? There were just tanks you dunked them in. There were people pulling the boards out of the miners, just putting the boards in the oil. People trying to find, new power supplies, new control boards, and find ways to run these and continue to increase the density in the containers. What are innovations you see, or materials we have, or anything coming in the future that can further reduce these costs?
Yeah, for Marathon, it's vertical integration of the supply chain and scale, driven by scale primarily. So our technology is very complex, as people know, and that's why a lot of people still think of it as TRL 8 or TRL 9, not all the way 10. We admit we could say 9.5 maybe, but there are so many components which go into that complex system, that's why there is a high markup from all the vendors. So as we start building all the smallest of the components, pass-throughs, condensers, cabling, PSUs, PDUs, we're seeing a tremendous reduction in cost, like already 70–80% reduction from our prototypes. And we'll keep on working on that now, setting maybe potentially our immersion cooling factories. Well, not the mineral oil, but the two-phase immersion dielectric cooling factories. And that will further reduce. Now the gains are becoming smaller and smaller. Now there is no single component that will reduce the cost by more than 5%. But together, hopefully in the next 2–3 years, we can still reduce the cost by 10% maybe. And that will be, I would say at that point, it will be cheaper than air-cooled data centers, properly built, not like, just patched up together.
Properly built, keyword there.
Yeah, we've been focused on looking at alternative ways of containing the equipment to dramatically increase density. Today everybody's still using the same design I published back in 2016. If you go on our website, that presentation is still there on how to build an immersion tank. And I walk around and I look at everybody and I look, oh, this looks just like that. There hasn't been any innovation in the containerization of the way immersion's done. And so we just patented a whole series of technologies that we think are going to dramatically increase density. And we're going to do that by eliminating all the dead space that you see in these things, because you've got to place the equipment in. So in August, we'll be rolling out a whole brand new method of immersion that'll utilize a bunch of far cheaper, far easier to use technologies that'll also allow you to scale directly as you deploy each miner, rather than having to buy big infrastructure, which is, I think, going to help us both in the very large density space as well as in the smaller deployments that we see.
So when you guys are looking at like the efficiencies of these systems, what are a lot of the important metrics you do to measure the performance of your system, right? Is it beyond just temperature, like how cold can I get these chips? What are some of the metrics you guys use to actually measure the efficiencies of these systems?
I think there's been a couple false metrics in this space for a long time. You get different branding that essentially groups will jump to. Well, we have this of X, and I believe one of them is the scenario of hyper density for the sake of density. Like very few people are installing these in places like the inside of a hotel or something for a digital boiler system. The vast majority of these systems are being deployed on areas where the physical space isn't constrained. So, and I do think there are applications for that hyper-dense scenario, but if we're looking at what is predominantly the driving factor of cost, I think at the end of the day, we can't use false metrics to fight physics. I think at the end of the day, we have to lean into physics and rely on the capabilities and the processes that are already naturally there for natural convection and certain things. Like I will lean on the Elon moniker of there is no part, or the best part is no part. And I think honestly, at the end of the day, the metrics are a great way to kind of like compare apples to apples, but I feel like we have to watch ourselves in being pegged in the industry at, oh, this is this metric. But if it doesn't make economic sense at the end of the day, like as certain things such as density or certain flow rates or whatever, at the end of the day, it's performance. And I think that's what we really need to look at. And having apples to apples on the performance side, I think is the biggest differentiator.
Yeah, I'll dovetail to that and say that the applications are becoming so varied now, and the innovations are going in so many different streams and nuanced that there is no one-size-fits-all solution. There is, on one hand, you have a humongous appetite for compute and bandwidth, which is being met by and large, but there is also a lower tolerance for latency now, and that basically laws of physics you just can't change. If you have a robotic surgery application, if you have an autonomous car, if you have gaming, if you have smart cities, intrusion detection in buildings, or weather detection, there is no way you can actually send your data to the data center, make sense of it, and do the action in a time which is relevant. You have to do computing on the edge. And for all these edge computing applications, some like the form factor may be important. But when you have a large scale data center in the middle of Midwest Texas, then you don't care about space. At that point, you're only looking about efficiency or cost of capital. So I think that's why I think a lot of these technologies you will see finding way and becoming more prevalent in certain applications versus others, and people pick and choose what they want to bet on.
Yeah, I think I want to echo what our friend from fog hashing said, which is, there's so many variances on metrics. We have to be honest. Like, if you bought 1,000 miners and your uptime is 98%, great. You can't remove the units that failed from that metric, right? So there's a lot of times we talk to clients like, oh yeah, I'm really happy with our farm's uptime. We're doing this, we're doing that, and like we're at 94%. Sweet. How many units you got down? 250. You're not at over 90%. But they jockey these metrics to make different groups happy with their numbers, whether it's the accountants or whether it's their CFO or whoever it is, and like, oh, we got to bucket that somewhere else. No, you don't. It all goes to the bottom of the page. And that's why our company has really become enamored with the hydros, because they do what they're supposed to do. I think for so many years we've all gotten used to manufacturers saying our product's going to do X, it's going to do Y, and we get it, and it doesn't do shit. It breaks, and we're all pissed, right? And then we have to innovate ways to fix the problems that we were dealt. When we talk about hydro and immersion, because we've innovated as a group of operators, the products now work. When we've got data for over a year of hydro deployments now, and what we're seeing is greater than 98% uptime with a less than 1% failure rate. That's what HP does. That's what we should see in our industry, but we've become so numb to dealing with all these failures that we just take it. So now we're finally getting products and solutions that do what we needed to do, where we can turn profits and we can be better operators.
One last thing to add on to that is I think the metric of uptime is sort of a false, it's a false name. Something along the lines of, say, hash rate uptime or hash rate availability would be a much better metric, because it actually measures, based on your total installed capacity, how much is actually working, not, do I have 98% of my miners running on 1 out of 3 boards? Right. A lot of metrics would consider that to still be 98% available. And then to add on the point about, these metrics is, I think one thing we haven't really talked about is, let's call it interesting government incentives. Almost a little, for the kind of projects and products we're building, they're almost counterintuitive. Like, for example, in Texas, the data center tax credit exemption requires a 100,000 square foot building and an X dollar amount, investment. All of us here, on the crypto space, the HPC AI space, we would definitely hit that investment number well before we filled a 100,000 square foot building, especially if we're doing hydro or immersion. But because that's the way the tax credit was written and implemented, you'll see most of the large miners in Texas have gigantic buildings, even if they end up just being used to store Bitmain boxes.
So getting close on time here, I want to go ahead and just start a fight. So on stage, we have a representation from hydro cooling, immersion cooling, and dual phase immersion cooling. What is actually going to be the best? What's going to be like the one in the future? There's guys here that are looking to buy systems. Why would they go to one versus the other today or down the road?
Well, I think it's, we all touched on this. There is no one solution that fits all. with the pace and rate of innovation that we're doing on, I'm just going to call Bitcoin mining edge computing at this point. There are applications for two-phase immersion that make complete and utter sense. There are applications for single-phase immersion. There's still some applications for air cooling that make the most economic sense. There really isn't a one-size-fit-all. So I think the edge of competition is going to be those of us who can build sort of a base system that can be adapted, modified, and changed based on what the specific customer needs without, creating 500,000 SKUs with different parts for every different system. We're coming to when you buy a Dell laptop, you can go through the configuration page and choose what you need from the model that you need. I personally think that's the way that our industry is moving towards.
So I'll jump in the hydro bandwagon. I'll also be a bridge builder. Like Matt said, there's a right solution for everybody. We've R&D'd almost everything that's ever come out in the Bitcoin space. And while immersion currently does a good job, I think hydro is more simplistic. So it's literally when these things are delivered, it's containerized. It's a sealed system. You literally once you fill it with water and you rack your miners, you're done, right? It just runs. And from a maintenance standpoint, something that's really near and dear to our heart, when we get immersion miners, these things have got to be bathed, they've got to be clean, all the oil gets off them, we've got to prep them for testing, and so there's a modification that has to be done. So it's a little bit more complex. I think with the 2U design that MicroBT's done, so now we're using a traditional 42U rack. It's a sealed closed loop system. I think hydro comes in my opinion, ahead of immersion because of simplicity. But it sounds like Engineered Fluids is trying to fix that too.
I think ultimately the technology that's going to win is the one that's the safest, the most effective, and the simplest to deploy. But I think there's another big factor here, which is vendor independence. When you buy these systems that are integrated, it's a walled garden approach. You're stuck with that. And as you go out and start to see innovation occur in other parts of the industry, you can't move there. You got to stick with what you got. This has been, my background is in the data center world going back many, many years. And this is the same ploy we did at IBM, the same thing at HP, where we tried to lock customers in by our custom connector, our rack style, our this, our that. And we see it even today in what's happening in the hydro market. The biggest thing for me, I think, from an immersion versus all the other technologies that we see is just one of safety. I could spray our fluid all over you and everyone else in this room and every piece of gear here, and everyone's just going to walk out of here and go take a shower.
No foam parties.
Yeah, that's right. And no sous vide, right? That to me, ultimately, all the other technologies, you walk into a container that's full of water and 5 megawatts of power, and I pause. Frankly, I'd walk out the other way. And then I think the biggest challenge with two-phase is going to be the health and safety of PFOAs. Those are the things that I worry about.
That's a good point. So we have 3 different technologies that we are working on: single phase, hydro, and two-phase immersion cooling. And we lay all the facts in front of the potential customer. And yet people choose not always the same technology, they choose a different one. And there are lots of reasons for that. Like if you are looking for heat recapture, you probably want to go something like hydro or two-pick. But if you are looking at heat recapture at very high levels, where the hot water in the narrow vestibules of the cold plate can create calcification, and you want to do put another heat exchanger, which drops your efficiency, then you want to go two-phase immersion. But if you want the blessings of NVIDIA's and GPUs, NVIDIA and Intel's, then you want to go hydro because they support that. So there are lots of factors for people to consider. I would like to also clarify one thing. There is a lot of misinformation also going on. And we are in such an early stage in this industry that actually that fight that you're looking for actually probably happen maybe a few years down the road. We actually benefit from each other at this point. We're looking for awareness. Like Gary is involved in this technology for many, many years, but two-phase immersion does not use PFOS actually. And PFOS is really bad. That is what this entire blanket ban in the Europe started with, PFOS. But over time, that definition has expanded to such a vague and hodgepodge of chemicals and definitions now that the entire world is not on the same page as to what PFAS are. In the US and the UN definition of PFAS, the chemicals that we use, they are not considered PFAS. They're not even forever chemicals. They degrade in anywhere from 8 to 4 years, 8 months to 4 years. So that education is what we are waiting to happen, because even the large agencies like European Chemical Agency, you think, or have like 100 plus scientists, they're not on the same page as to the rest of the world as to what a bad chemical is. And that's the biggest problem.
Awesome. Thank you guys very much for coming up here and doing this panel. Thank you, Mining Disrupt, and Dennis for introducing us. So this is awesome. I have like a million more questions if we just want to go keep doing this. So I think we could dig into cooling stuff all day. So thank you guys very much.
Thank you.
Thanks, Sharon.
Just tell me I can hold. Got it.
One more.
Got it. Yeah, oh, 2 more.
Okay, is this on? Yep, it is. Okay, good morning. What a wonderful panel. And I'm really excited to introduce our next speaker. Before I do that, just a little bit of housekeeping. If you are speaking today, if you could please check in at the side stage, backstage area 30 minutes prior to your go time, just so we can make sure we have all the logistics set up and everything continues to run smoothly. Now, I also know, are we going to show the IntelliFlex video right now? Is that teed up? Are we doing that? Okay, we're working on loading a video. If we can get the video loaded, we'll play that before I introduce our next speaker. Next speaker. Okay, all right. Still working on some technical, logistical issues. So we're going to shift the conversation just a little bit, and I'm really excited to introduce our next speaker from Unistar. Slight change, Wendy Lai was supposed to come up, but now we have Mars, who's going to be speaking about 2024 mining market trends. And Mars, if you could come up to the stage.
Good morning, everyone. I'm Mars, I'm Marketing Director of Unistar. Glad to be here to share the exciting trends in mining machine market for 2024 and the achievements of Unistar with you. Today's my presentation including several parts. One is about our sales performance. The second part is the marketing strategy. And the last part is our vision of the future of in the industry. For Unistar, we were founded in 2016 and combining our passion for investment and trading with focus on blockchain investment and Bitcoin quant trading and the mining farm construction. We see the mining machine sector as a vital part of our investment strategy. Our approach involves treating mining machine as a regular investment, allowing us to secure lower price by ordering futures directly from the factories. And by placing a largest order with BMAs, MicroBT, and Canet, we can offer our customers a lower price than the factory. And we leverage the sales data alike to help over 1,000 farmers select the right equipment. Additionally, we provide a comprehensive DDP logistics service to our customers. For next part, let's look at the Unistar sales data since 2020. I'm proud to say that we have achieved a calculated sales volume for over 1.05 billion US dollar. This is an honor. This is a testament to the trust and support from our customers. In 2023, we sold over 154,000 units for X19 series products. So far in 2024, our mainstream X21, T21 models have been in high demand, as you can see. And we combined sales exceeding 50,000 units. Our X21 is preferred choice for the miners in the Africa. While the T21 is particularly popular in Russia, meeting the specific need of the local market. Next part, let's talk about the global distribution of our customers. We currently serve over 300 customers in North America, over 250 in Russia, and more than 600 in other regions. These numbers highlight our strong global market presence and in trust our customer placing us. And the upcoming Bitcoin out of the halvings, there's new challenges and opportunity for you and me, and we are ready to navigate this change with you. Out halving, how can you invest in mining machine? Our new mainstream models such as S21, T21, and S21 Pro, even the S21 XP will be the key investment. This new model will contribute to the stability of growth and the industry. Out halving, the ROI of the mature mainstream models expect to stabilize. Additionally, we will offer the trading service in North America to deepen our market space. For our team, we have over 50 sales experts all over the world, no matter where you are, and we take pride to fulfill every order and have never defaulted on a single contract. Since 2020, we have been expanding our reach globally and with a strong focus on the United States. For our 2024 global mining operations, we are proud to operate like 6,000 units of X90 Pro Hydro in Laos and with 300,000 watts capacity. We're also investing in 3 new mining farms in USA, Africa, and the Middle East. Our total investment is $230 million with a combined capacity of 110 megawatt. We're not just expanding our mining facility, we are also treating mining machine as a regular investment set, buying and selling them in a large volume. If you have any question, want to learn more, please visit our booth in 238. Our team is excited to check and answer your inquiries and your questions. You can also reach our CEO via the Telegram, WhatsApp, and the email address. And that's all. Thank you.
Okay, amazing. Thank you so much for that presentation, Mars. And this is our quick presentation series. And so I'm going to call up our next speaker. We've got Dallas Santana with Bit Basil. If you haven't had a chance, there's some really amazing artwork just back over that way around some of the booth areas. I'd highly encourage going to check it out. But right now, we're going to have Dallas come on stage. He's going to speak about Luna Prize Museum Land's first Bitcoin artwork on the moon. And I'll bring him up on the stage to get that conversation going.
Okay, my name is Dallas Santana, and coming up in a second here is also going to be Scarlett Arana. Oh, here's Scarlett. And I'm with a company called Space Blue, and Space Blue is I was here last year to announce on the stage last year that we were going to be sending a time capsule to the moon, launched on SpaceX Falcon 9. I'm glad to come back here today and say it happened. We launched the payload on February 15th from the Kennedy Space Center. On February 22nd, we made history with the first landing for the United States since 1972. And in this time capsule that we landed on the moon, we had been working for several years in the blockchain community to amass assets, important stories. The story of Bitcoin, we consider to be a very important story to get up to the moon and archive and put the white paper and inscribe the white paper onto metallic discs that now sit on the moon. So when you look up at the moon at night, realize that sitting up on the moon, we have placed on the moon only a couple of months ago a metal structure up there that's going to last over 1 billion years. And in it, in this capsule, it has an inscription of Satoshi. It's got an inscription of the Bitcoin white paper, and it also has important Bitcoin first ordinal projects that were started last year. The Ninth Raider, Marshmallow, which is a beloved pup that I happen to own. Stan Lee's characters from his final legacy are inscribed up there on the moon on these metallic discs, and they're also stored inside of another archive up there as well. But they've also been inscribed onto Bitcoin last year. So I want to announce today that we're the first organization in the world, Space Blue, the Lunar Prize mission, to successfully land on the moon Bitcoin projects. And I think in the next few months, we also want to accomplish something else. I'm very fortunate that we have an opportunity to be able to tell you today that we also plan on having the very first Bitcoin mining node in operation on the moon, this year, this fall. So now, we're missing something. We need a mining partner to work with us on that. We have the infrastructure, the hardware for that will last the duration of the mission for 13 days. It will be live up there. We'll be able to transmit data back to the Earth, two-way communications. But we need you. So if you're interested, come see me. I am in the Bit Basel Art Gallery, the Ordinal Art Gallery. I'll be here until early this afternoon. If you want to make history in space and be a mining company that has innovation brought to the moon, we welcome that. We'd love to have you participate. We've also stored up there art and sports and other things that are all going to be inscribed onto the Bitcoin network. We think that the Bitcoin network is going to be eternal. That's the way we view it. We believe that it's an unstoppable ecosystem that's going to last forever, as long as we are here on the Earth. And the whole purpose of this mission is also to make sure that if human beings make mistakes, that we've also got a backup up on the moon of our data, of our information, of our culture, and of our music. So I'm going to pass the mic over now to Scarlett, co-founder of Bit Basel. But before I do, I have another announcement. Today, I'm very pleased to announce that through a partnership that we formed with Tune FM. Tune FM is a music platform. Think of it sort of like Spotify, but built around blockchain technology and NFT technology and art and music, and a platform to provide equality to creators. And Andrew, the founder of the company, has been around this industry for a long time. He's been involved in blockchain going back over the past decade. He has an incredible reputation, his company. And so we're proud to announce that there is a partnership where we have a project called Summer of Love. Summer of Love, Billboard wrote an article about this a couple months ago. If you Google Billboard on the moon, you'll come across a story about the music that we put up there. We put up Jimi Hendrix unreleased songs. We put up on the moon Bob Marley and Elvis Presley and other very famous iconic artists are sitting up there. And now this is being inscribed onto the blockchain network down here as a very rare asset that connects to the twin assets up on the moon. So this has not been done yet in blockchain, to have these type of legendary artists, Mick Jagger and other very famous artists from the 1960s, sitting up on the moon. So that's on the moon now. It's not about to go to the moon. It's already sitting there now. And we intend, through our partnership with Tune FM, to be able to create incredible opportunities for the world to create this rare asset. So Come to our booth, learn more about what we are doing. I want to pass this over to Scarlett.
Well, thank you so much for Dallas. What an historical event. What is significant to this? Why we're here at Mining Disrupt. So thank you, everybody. My name is Scarlett Rana. I'm the co-founder of BitBasil. We're your crypto art community. And I'm here to announce about our off-world assets, our marketplace, the first marketplace dedicated for ordinals, which is Bitcoin, to have artists to become an evangelist to this entire ecosystem and to preserve their art as part of the Lunar Prize. Our marketplace is the official marketplace for ICP that we're working on and as now ready to deploy. So we have 222 artists that are part of the Lunar Prize that their art is going to be inscribed on the BitBasil's marketplace. So this is really exciting times. And so we're looking for you, the artists and creators, the miners, to help support and help the artists who are evangelists in the entire ecosystem and preserve humanity's cultural value to inscribe their art on ordinals, which is the layer 1 of Bitcoin. So this is what we're wanting to talk to you about. Our marketplace is we are BitBasil, and with a partnership with Space Blue, we created the first Web3 marketplace in the world. We haven't been back to the moon since for over 52 years. So this is an historical event. What does this say to the world? It says that we're innovative as an ecosystem. We're allowing artists to be evangelists, to learn about Bitcoin, to inscribe their art for provenance and permanence on layer 1. So, and as you know, we want people to understand this ecosystem, and what better way to have partnership with miners where it all comes down to here at the roots. So we love to have you guys in and elevate the story and make this from Miami to the world, and building out this off-world marketplace with us, as this is a technology that is going to help us elevate this conversation and bring mass adoption. So 222 artists already are on the moon. It didn't happen. It already happened on February 22nd of this year, 2024. So now what they're going to do, of course, each artist has a story. We also work on the sustainable development goal to elevate all the artists are creating impact to become evangelists to this technology. As our marketplace is built on ICP, Internet Computer Protocol, we want to welcome miners to support these type of initiative. You know, we were based here in Miami, Florida. We've been in the ecosystem since 2020. BitBasil has been around since 2020. And we would love to have you guys involved in this type of programming.
Very good. I think we do have slide 2 for Tune FM. We can put that up. In the next few months with Tune FM, what's going to happen is first the marketplace will open up there in July, and people will be able to log in and inscribe these very rare assets. At the same time, BitBasil is also launching a project with ordinals based on this music as well. And they're going to have a digital collection, which consists of a very special, unique album, and the actual metal plate that went to the moon. There's going to be a one-on-one copy of that metal plate that went to the moon, inscribed and certified, and that's going to be auctioned off later this year. It will definitely be in the news. This project's been written up in Rolling Stone magazine, Billboard, many media outlets all over the world have talked about this project. So that's something that we're really excited with our partnership, what Tune FM brings to the table with their ecosystem and their fair system that they have for artists, where artists have transparency thanks to blockchain innovation, thanks to blockchain technology. And I think everybody in this room has probably heard about the frustration that artists have in our industry, in the music industry. And so this is a welcome platform. And as I said, what we're leading with our partnership also with BitBasil is the Bitcoin ordinal projects, which we're going to be inscribing as well. And I think that Bitcoin ordinal really makes a lot of sense for a legacy project that's sitting on the moon, and also is historical in nature. When we went to the moon in 1969, 2 weeks later, the Woodstock Music Festival took place 2 weeks later in what's called the Summer of Love. So when we started doing our curation of the museum the last few years, we started looking into what was happening in space when humanity went there. We uncovered this amazing story. Fortunately, we were able to get the rights to the music, and we recognized immediately that this would be a good project to at least inscribe the album covers. I know we have plans to figure out what to do with the descriptions of the music assets themselves onto blockchain. We might not do that right away. We might just be putting up the album covers in the beginning of launching it, but this is going to be part of the curation that we do. So the digital project will consist of the lunar disk, a replication of the lunar disk that went to the moon, inscribed, and having the access to communities from all over the world that enjoy music, love music, fans of music are going to have an opportunity to participate in this global economy. So thank you guys very much. Look forward to seeing you guys. If you want to be on the moon with us, if you want to be a partner with us on the moon projects, we have a next mission that's going to take place this fall. It's going to close out in only 30 days from now. So come visit us in the BitBasel Ordinal Gallery. Thank you very much.
Thank you, everybody.
Okay, thank you for another great presentation, and we're just going to keep it going. Now we're going to hear from Danny Condon with Blockware. He is the Chief Revenue Officer, and he's going to talk about Bitcoin mining reimagined and provide some additional insight into that conversation. So Danny, come on up.
Hey everybody, my name is Danny Condon, and I'm going to talk about ASICs as an asset class. So by embracing this new reality, the core thesis is this is an opportunity for really all participants in the mining ecosystem to have the opportunity to make more money faster. All right, so we're going to unpack that concept and hit a couple case studies in today's presentation. So let's talk about Bitcoin mining today. So first and foremost, Bitcoin mining is a capital-intensive process. In many cases, you have to make significant investments in infrastructure in advance of mining. In all cases, you have to make material or significant investments in ASICs before mining, right? So it's a capital-intensive process. So let's reframe the way we look at ASICs. And historically, they've been looked at as a sunk cost on the ASIC side. You're deploying capital, then you're mining, creating a profit, and eventually the profit in the aggregate exceeds your initial capital investment, and it's a great play, right? Now let's reframe that and think about Bitcoin mining rigs, not as a sunk cost, but instead as dividend-paying assets. So the dividend side of this equation is the Bitcoin that's being mined. The asset side of the equation is the ASIC itself, which has a spot value at any given time. Right? And that spot value is largely correlated to the price of Bitcoin or the hash price more acutely, and a number of other factors we're going to unpack today. Now, the challenge historically is there has not been an easy way to capture the value of that liquidity in the market. So let's look at a couple of common challenges and kind of create a couple different personas here. So the first is of an ASIC buyer, right? The second is of a Bitcoin mining operator. Most Bitcoin mining operators are also ASIC buyers, so these are shared challenges. The first is lead times, right? Bitcoin mining rigs pretty much all roll off a conveyor belt in Asia. They have to get on a plane, maybe a boat, a truck, get to a data center, get deployed, and time is money, right? Lack of transparency. So not all rigs are created equally. Not every S21 is going to hash at the same efficiency as the next S21. And that slippage is money. That's a cost center, right? And then the lack of ASIC resale liquidity, which we're going to really hammer into, is a challenge as well, because you got all this capital tied up in the ASIC side, the asset side of your investment, and no way to get liquidity on that side of the, of the play, right? So I'll add one more thing in here for the Bitcoin mining operator. Bitcoin mining operators traditionally have a lack of revenue stream diversity. So the primary revenue stream and profit center is mining Bitcoin. It's virtually impossible to predict exactly what your profit margin is going to be like when mining Bitcoin on a forward-looking basis, right? And there's also hosting, which is predictable. So we'll talk about that a little bit too today. So now, what if there was a platform that could mitigate these challenges and simultaneously create multiple incremental opportunities? That's where the Blockware Marketplace comes in. So the Blockware Marketplace is a Bitcoin native platform that enables rigs to become tradable assets, right? It enables anybody to start mining Bitcoin in minutes. And it also integrates with third-party hosting sites so that the broader ecosystem has access to this, to these opportunities and these risk mitigating strategies. I'm gonna rip through a couple screenshots real quick to show you what this looks like. So you'll see here, these are S21s owned by Blockware clients mining in one of our owned or partnered data centers. They're online right now. Right? If somebody wants to come in and buy these rigs, all they have to do is click buy now. They can look at the asset. They can execute a Lightning invoice or an on-chain transaction, and they are mining Bitcoin. There's no more lead times. And that creates value. It eliminates a cost and it creates value. Complete transparency. I know when I'm buying. I can see how this thing is performing. I can see the serial number. I can see when it was plugged in. That creates value. It eliminates a cost center. It eliminates slippage. And then it also serves as kind of the one-stop shop for managing your mining fleet and seeing how your rigs are performing. All right, so let's look at a couple case studies. There's a lot going on this screen, so I'm going to unpack it a little bit. First case study is of an ASIC buyer buying hosted ASIC rigs in one of Blockware's owned or partnered facilities. And you can see on the left side here, my right, your left. This is a client who bought 76 S19K Pros. They spent about $120,000 on the rigs. Then over about a four-month period, they spent about $40,000 in OpEx and energy, right? And now I want to really orient you to the right side of the screen. So at the top, you can see what kind of return were they able to generate just by mining Bitcoin, the baseline strategy. They were able to generate 62% of their capital returned in just this period. Now, that's a great play. That's an excellent outcome. But if you look at the bottom, now that they have the optionality afforded by the Blockware Marketplace, they're able to execute the option of listing their rigs for sale. So fast forward in translation here, they were able to sell their rigs for a higher price than they initially bought them and mine them for 4.5 months. The result of that is 156% return over that same return of their capital in that same period. And 156% is better than 62%, right? Let's look now at an operator. So this is a case study from one of our operating partners who deployed 1 megawatt of S21s. Same organization of the slide, so I'll kind of rip through this one a little quicker. They deployed $1.2 million between their initial CapEx and their OpEx. They bought these machines well in advance, pre-order from Bitmain, very low cost basis, economies of scale on their pricing. And you can see in the top right, here's what it looks like. Here's their mining returns through that same period. And now because they have the option but not obligation to sell these rigs, they now have the opportunity to do so. And they were able to pull their ROI forward significantly. They could sell their rigs for a significantly higher price than what they bought them at. They're also able to then lock in predictable revenue, right? So they know predictable revenue via hosting, right? So you lock in a hosting contract. You can pull your ROI forward by years in this case. And our marketplace partners are also able to participate in a revenue share, profit share, every time that rig trades, because rigs are now tradable assets. All right, so let's just kind of recap here. Some of the problems, lead times. There's no more lead times. These rigs are online mining Bitcoin right now. When you buy, you're mining. Lack of transparency. You know exactly what you're buying. There's no more ambiguity. You can see, how's this rig performing? And then we've hammered this one, but lack of resale, ASIC resale liquidity. Rigs are now tradable liquid assets for the first time ever, right? And eliminating these challenges represent the elimination of common costs. And by eliminating them, you're creating accretive value for these machines, which when you then have liquidity to be able to execute sale of these machines, you can pull that money forward by a number of years. One thing I'll just hit on real quick also is the lack of revenue stream diversity. That's what we talked about for Bitcoin mining operators. Now you're not unilaterally tethered to hash price. You can make money selling rigs, buying rigs in wholesale, selling them in smaller increments. Markets are efficient, right? You're able to lock in hosting revenue in conjunction with selling machines. You're able to participate in profit share every time those rigs trade again in your data center. And then they also inherit that same, resale liquidity. So just to kind of wrap this up, who is this for, right? Individuals and institutions that are trying to mine Bitcoin. Anybody who wants to buy Bitcoin mining rigs in a capital efficient capacity, this is for you. There's no better, faster, easier, risk mitigated way with significant incremental opportunities to mine Bitcoin than purchasing things that are plugged in online where you know exactly what you're buying. It's also for Bitcoin mining operators and partners, right? So we have a hybrid model where we own and operate data centers, and we also partner with third-party facilities. So if you're a third-party operator, whether you're a self-miner or a host or a combination of both, you have an opportunity to participate in this ecosystem, mitigate these risks, and maximize your opportunity, right? So right at the shot clock here, my name is Danny Condon with Blockware Solutions. We have a booth on the other side over there, so come say what's up if you want to jam. Thank you.
All right, hot mic. We got the hot mic going. Thanks, Danny. That was a really great presentation, and I'm glad he mentioned the booths. Again, if you haven't had a chance to check out, we all walked through this part. There's a whole part over there too, and there's just some really great booths, information, and things that you can pick up and take home with you, just as a reminder of the good ideas and the good products people are out here pushing and expanding. So I'm really excited to introduce our fireside chat, but before we do that, we're going to play a short video from IntelliFlex on the next generation of immersion infrastructure. All right, so they are still loading this video. That was the second time I teased it this morning, but we're going to show it after the fireside chat. Now we have one of our speakers in the fireside chat. Taras is still in an Uber here any minute, so I'm going to check out for 1 second here with our other speaker, and we will be back in just a few minutes. So sit tight.
Today is gonna be the day that they're gonna throw it back to you. By now, you should have somehow realized what you gotta do. I don't believe that anybody feels the way I do.
Yo, we are back at the Simply Bitcoin news desk, streaming live from Unconfiscatable. We still got a couple hours of panels. I'm here with my legendary co-host, always optimistic despite having to wake up at 5 a.m. this morning. We got Optimus Fields in the house, bro. Hit the air horns, bro. This is Simply Bitcoin after all. So I hope you guys have been enjoying the conference. I hope you guys have been enjoying the live stream. Absolute bomb panels. But yeah, man, Opti, how you been, bro? Are you alive?
Barely alive, but you know me, I'm pretty geeked up on coffee, so we're good to go. You know, I'm a professional. Just get geeked up on coffee and we're good to go. But yeah, making the rounds, hanging out with the Kaboom Racks guys. So it's been a great day. It's starting to get busy again. And yeah, man, we still got a long day ahead of us. So there's still a lot of speakers to come on the show, so it's gonna be great.
100%. So let's go through some of the rest of today's just conference speakers and whatnot. So we're at 10 a.m. So the current panel's running a little bit late, but did Brains go on yet?
No, they haven't gone on. They'll go on at 12:40, I believe it is. Bitcoin Mechanics going on after this fireside chat. And yeah, so not yet.
I'm excited, man, because Bitcoin Mechanic, Ocean, what they're doing, decentralizing mining, decentralizing the mining pools, incredibly bullish. I was super lucky to be able to attend the Ocean mining event in, I think it was South Carolina, I believe, with Bob Burnett. And
it seems like maybe they're back.
We're going to go push it back to the main stage. The show is back on the road. We'll see you guys on the next one. I mean, we'll see you guys later. What am I talking about?
Side chat as soon as it's done.
So in 2019, we went and visited a crypto mining site. We looked around. I said to myself, there's got to be a better way. My name is Chuck Lecuyer, founder of CS Corporation, home of the IntelliFlex line of product. At IntelliFlex, we're innovators. We're very conscious about the overall footprint that the system will take and the overall density that we could achieve on a single parcel of land. When you talk about density, that's eco-friendly. The carbon footprint, look at 6 megawatt of IntelliFlex solution versus 6 megawatt of any other system out there. We design, build, deploy, and operate our system. We have 4 cooling pods on top of one 6 megawatt system. We designed a system that is very easy to operate. We have an industry-leading operation uptime and efficiency. Our product are UL certified. Quality is what we do. Every piece will have their own power distribution system, their own immersion tank, network system, pump, fans. Our clients that we have all have something in common, and then they're looking for a high quality product that they could deploy as a modular system that is scalable. At IntelliFlex, our motto is start to finish.
Okay, great. Thank you so much for playing that video. And if you missed the conversation yesterday by IntelliFlex, you can obviously go back and rewatch that once we get everything loaded. But as we are waiting for our fireside chat, the rest of that conversation to show up, I figured we'd bring Dennis up on stage and talk a little bit more about Satoshi Action Fund. I'm the lesser known partner of Satoshi Action Fund, Mandy Gunasekara, a co-founder, and Dennis Porter, who's very well known, is our illustrious leader of the organization and very well known. But Dennis, if you could just give folks a heads up, Satoshi Action Fund has been super busy on the ground advocating for state policy. Could you talk a little bit about the outlook and where are some of the states, especially that are going to be the subject of our focus going forward?
Absolutely. And, we couldn't do it without Mandy and Surya. So thank you so much as our co-founders and our board members. So big round of applause for the people that are helping me behind the scenes at Satoshi Action. I mean, certainly you've all seen that we've been able to get law passed now in 4 different states. We want to work to create that bulwark of states that'll protect us from federal overaction, but also we want to create enough momentum at the state level to push forward the momentum towards federal action. So we've seen time and time again through different movements. I think cannabis is the most obvious one. You can actually kind of give the middle finger to the Washington, D.C. slow process and say, we're going to get it done at the state level. We are going to fight for our rights and we are going to win. In fact, Senator Lummis recently quote tweeted our passage of our bill in Louisiana and said just that. You should go to the states and you should fight and you should win for your cause. As far as a heads up of what's coming next, I couldn't be more excited actually about the 2 states that we're going to be fighting in to protect Bitcoin rights, to protect Bitcoin mining. And that is 2 swing states in the presidential election that's coming up. And that is Pennsylvania and Ohio. These 2 states, which are critical battlegrounds during the 2024 election, could be the decision maker in the election. And what a great opportunity it would be to not only send a message across the country, but also have the media start covering the passage of these bills, the potential lawmakers getting behind these bills, just as voters are going to the voter booth to decide who is going to be the next president of the country. So pumped about that and looking forward to the opportunity to send that message that this is a critical issue and that is an issue that people will vote on.
Yeah, and Dennis, that's really good insight about those states because as we're getting close to the election, everyone's going to be focusing on that. But there will be so many media opportunities. And as we're educating those local representatives and officials about the right to mine, which is one of our staple pieces of legislation, how many states have we passed it in now?
So we have that piece of legislation alone was in Montana and Arkansas, and then it was combined into our Bitcoin rights bill, which was passed in both Oklahoma and Louisiana. So 4 states total now, and that's just in really less than 18 months.
Yeah, which is already having an impact, ruffling feathers in the greatest way. But in these states where there's going to be a ton of focus, a ton of media focus, a lot of interest, and then obviously the resources, it'll be great to be down there, giving people the talking points and the information that's really going to help us build more allies across this industry so all of the creatives and the thinkers that are here can continue to innovate and take this industry to the next level.
I think that that's a key point. We want the innovators to be here in the United States. We want the innovation to take place here. We want the jobs. We want the economic growth that we know that this industry is going to provide. I mean, everything from the immersion cooling to take place here in America, but we have to fight to keep this industry here. Very similar to how we fought to keep the internet industry here, the tech industry here in the United States. And we gained trillions of dollars of economic growth off of those industries because we found good policy that would enable us to encourage good behavior while also limiting bad behavior. That's a really big thing that we are interested in at Satoshi Action. I know that you are interested in it as well, Mandy, to help make us a leader on this technology.
Yeah, absolutely. And not taking anything for granted. The fact that we're able to mine and create these opportunities right here, right now, it's good, but we have to work to protect it. As we said when we first got started, we wanted to make sure that there was more Texas and less New York across the country, just as a defining mantra for Satoshi Action Fund and what we're ultimately working on and trying to do. Dennis, I was thinking about, so there's a debate tonight, and in case you haven't heard, the first and only presidential debate, I think that's ultimately been scheduled. But do you think that there will be a question about Bitcoin or cryptocurrency?
I know there's been a big push. Obviously, we have seen former President Trump come out and give big endorsements for Bitcoin and really the broader crypto industry. And there has been a big push to have that question take place. I mean, if it does take place, I think it would be very beneficial to the person in the room, the one person during that debate that has been highly supportive of Bitcoin mining. He's starting to see the value of this technology. And so hopefully there's a question asked and we're able to see how the candidates are formulating their opinions around this critical new subject.
Yeah, and even if there's not a question, this community is so great about weighing in on X and other social media platforms to try and shape that conversation. If you don't get your prime time during the debate, you can always push it after. If you want any sort of focus on the things that you ultimately care about. All right, do you know if we have an update about our fireside?
I don't know if we have the update on the fireside from the side channels here that we have. Our backstage friends will let us know here in just a moment. But yeah, very much looking forward to the debate. I know Simply Bitcoin is going to do a live podcast to sort of highlight what's going to be happening during the debate. So there will be opportunities for the folks joining that live stream to comment on what's happening, give people an opportunity to really understand where we are headed forward. So it's an exciting time to see. For the first time ever, we have real people in a real position to win and take over the White House that are interested in advocating for this industry. And I think that's critical, because if we really want the United States to be a leader on all things Bitcoin and Bitcoin mining, we obviously we are working from the bottom up, grassroots effort, but we ultimately need some level of federal action to truly unlock this technology.
Yeah, and as you were talking, Dennis, I was thinking about this. I mentioned this yesterday on our political panel. Outside of my work with Satoshi Action Fund, I also work with a group called the Heritage Foundation that is a part of getting the next team of people ready to go if things were to switch. So if you're in this crowd, you're ever interested in being a part of the next conservative administration, there's opportunities to send your resume. And I just put this out there because we are going to need really well-informed, experienced people from the Bitcoin industry, the crypto industry, to be willing to serve in these federal positions. Having been a former regulator at the federal level, you can have an immense impact on the stakeholders that you're ultimately responsible for. So the more we can build folks from our own community that are willing to go into these positions, taking your knowledge, your connections, and your insight, the better it is for the community writ large.
Yeah, I think that there's a massive opportunity for folks that are really understanding of this technology to fill those roles in Washington, D.C. As like you said, as someone who worked in the previous administration, you have that experience and you saw the impact that you were able to have. I think the difference now is that they're hunting a little earlier. I think clearly the Trump campaign is feeling very confident. The betting markets have him up. The polls have him up. And so there are a lot of people trying to say, okay, well, maybe it's time to put in my resume so that I can have an opportunity to fill one of these roles. Hopefully, Mandy, we can get you there. I know it's a tough gig, but we'd love to have you back in the next administration.
Yeah, well, it's given up a lot. But yeah, I hope that there's people in this room, too, that would be interested. And even if things don't change, and those who lean more to the current administration approach from a political, ideological perspective, having a willingness to go in there and influence. We do it from the outside, again, at the state level, advocacy. We have Satoshi Action Fund, which is a C4. We also have our C3. Do you want to talk a little bit about our approach to education on that front as well?
Yeah, definitely. So there's a really important thing to know about Satoshi Action, which is that we do have two nonprofits. They're both under the Satoshi Action umbrella, but we have a C3 and a C4. Those are just IRS tax designations. One gives you a tax break, the other doesn't. One's more political. And the other one, which Mandy is referring to, is Satoshi Action Education, is our research and education arm. Oftentimes we see, podcasters, blogs, articles, news articles written about the value of Bitcoin mining. We see people giving presentations on the benefits of Bitcoin mining for balancing the grid, for mitigating methane emissions, for creating rural jobs. But we don't really have any sort of credible evidence-backed proof or research to show that. And so that's why we launched Satoshi Action Education. We brought on an academic with 25 years of experience, Dr. Murray Rudd, who's done an incredible job helping us to create true evidence-backed research, scholarly works. I mean, these are like 10, 20, 30, 40 page long papers that we try to produce, and then also get through the peer review process. And we have been able to do that successfully, because when we go to lawmakers and we say, all right, here's these great things about Bitcoin mining, it's just Dennis Porter, the MC, or, the guy running the nonprofit. But when we bring in evidence, credible evidence-backed research, peer-reviewed research, to highlight how Bitcoin mining is truly a powerful technology for balancing the grid, like in situations in ERCOT in Texas, where we were able to probably save lives, quite literally save lives, because of the ability for Bitcoin mining to turn down right as everybody else is needing that critical usage of power during those winter storms. So we want to tell that story, but not just tell that story. We want to back it up with evidence, and that's what we're doing through Satoshi Action Education.
Yeah, that's exactly right. I'd say it's the 1-2 punch in approaching policy and how to have an effective impact at the end of the day. Okay, we have word that our fireside chat crew is all here and accounted for. We've got the founder and CEO of Sunnyside Digital, Taras, is going to be the moderator, alongside Austin Storms with Galaxy Digital, co-head of mining. They're going to be discussing what does operational excellence look like post-halving. So I'm going to welcome them to the stage. Thanks for being here, and hand it over.
Hey guys. What's up? Welcome to day 2 of Mining Disrupt 2024. Hopefully everyone had a great evening yesterday with the cocktail hours and nice dinners in downtown Miami. We're here to discuss a pretty awesome facility, site, project team, and obviously operational excellence with Austin Storms. He's an OG to the space, knows what he's been doing. And obviously they've been executing probably better than anybody else in the space right now at the scale that they've been doing. So Austin, if you want to give the audience a little bit of background as to how you got into the space, it'd be great.
Yeah, thanks for the very warm introduction. Appreciate it, Taras. Look, I got in the space late 2016 with a family friend who wanted to start mining Bitcoin. We built a 500 kilowatt facility in the back of my dad's karate school.
Nice.
Right outside of New Orleans, kind of close to where Chad started his first build as well. And ever since then, I've been full time in the space. So started my own company. It was called Bearbox. Did some early demand response integrations across the ERCOT market, Southwest Power Pool, MISO. Then went to work with Marty Bent and Thomas Arrow and some of the team at Great American Mining. I left Great American Mining at the end of 2021 and joined Galaxy Digital to lead up all of our proprietary mining operations and what we now have as a large scale facility in West Texas at the Helios campus. To give a little bit of background about Galaxy, because a lot of people don't even know that we mine Bitcoin. We're
aside from the tattoo,
right? Everybody knows about the Luna tattoo, but nobody knows about the Bitcoin mining. So we're a diversified financial services firm that sits kind of across the entire crypto ecosystem. We have 3 main business lines. One is our global markets division that consists of our trading and investment banking teams. The second one is our Galaxy Asset Management business. That's a traditional asset manager, passive, active venture portfolios. And the third main business line is our digital infrastructure solutions business, where the mining business sits, as well as our staking and validation services and some of our custody with the GKA team that we bought out of the Celsius bankruptcy. The coolest thing that I have to tell everybody is at the end of 2022, we acquired a site in West Texas, not far West Texas, but up near Lubbock, called Helios from Argo. It closed on December.
Great deal.
Crazy deal.
Oh my goodness.
Crazy deal. Look, I think all in, we're somewhere in the $100 range. And it ended up being a huge value add to the firm, and kind of sits as our flagship asset within the DISC business today. That facility, when we bought it, was flowing somewhere around 60 to 65 megawatts. There was a ton of operational issues and engineering issues that we came in and remediated. And today it flows between 180 and 200 megawatts, just depending on how hot it is out in Texas.
Yeah.
Today it sits as, I believe, and nobody's corrected me yet, the largest single loop, single phase immersion build in the entire world. And we also have an air-cooled expansion that we brought online in Q1 of this year. That was an additional 48 megawatts to the main 126,000 square foot building. That's kind of the high level overview of kind of what we have going on. In addition to that, we have a firm capacity interconnect approval from ERCOT and WET for 800 megawatts at our project substation. I have another 300 megawatts coming online in July of 2025. and the other 300 to fill out the remaining capacity on the grid tie in Q1 of 2027.
So these are huge numbers.
Huge
numbers.
Yeah.
I mean, probably an obvious question, but what made you guys decide that immersion is the way to go for your scale at Helios?
So when we took over the facility at the end of 2022, it was probably 60 to 70% built out already. And that was like kudos to the Argo team for doing that on an expedited timeline. They utilized Kelvion thermal systems, KTS, for a lot of that build. And then I looked at deploying machines quickly because Novo called me almost every day and said, hey, when are my chips getting online, right? So we finished the remaining immersion builds within the facility. Today we run almost 150 megawatts within that facility across our prop mining operations and 2 big hosting clients that we have. And when we looked at expanding the additional 50 megawatts that we brought online in a capital efficient way, immersion at the time was not the way to go. We got quoted just astronomical numbers on a $1 per megawatt basis.
400, 500, 600K
It was approaching 800 fully baked.
It was insane back in the day for sure.
Insane. And so what we did instead was we called the team over at RK Mission Critical. I said, hey, you have extra containers laying around anywhere that I can buy? And Jesse and John said, absolutely. As a matter of fact, we have a bunch in Texas right now. And so we deployed those very, very quickly, and then did some unique engineering things on the evaporative cooling systems and kind of hot exhaust handling on site, given how close and dense that deployment is.
Nice. So you guys were able to actually take advantage of the bear market where everybody's selling and nobody's buying, but you guys were actually able to get capital allocated at the best time possible.
Yeah, exactly correct. Look, we pride ourselves on like very prudent risk management at the firm, and we're very, very good capital allocators. And that's not just me that says that. That's people outside of Galaxy. We bought the Helios campus at what we believe to be a discount at its current fair market value, and we bought the containers that we deployed in Phase 1A at a discount to their sticker price because there were no buyers at the time.
Yeah, I mean, the numbers you threw up before, it's just insane as to what you guys are able to pick that up at. I mean, knowing the market right now is anywhere from 300 to 500K per megawatt hour for build-up capacity. You guys got an absolute steal. What are some of the things that you guys are experiencing on a community level as to ongoing development and growth? Can the facility handle it? Like, how are you guys looking at that?
Yeah, so from a community level, we just finished a big pool. That was an obligation that we took on as part of the Helios acquisition. It was a community pool within the town of Spur, Texas. We opened it on Memorial Day. It was the most expensive pool I've ever built in my entire life. But it was a great indication and a great commitment that we followed through on to the community, where the vast majority of our team on site, our on-site operations team, actually lives. And so not only are we doing the rural economic development in deep West Texas out in Lubbock, which is kind of in the sticks, but we're giving back to the community in a way that's very different than most miners do at our scale.
And I moderated a panel last night on AI where Core Scientific, Matt Brown, gave some really solid insight. How are you guys looking at AI and HPC as to how you continue to scale out this facility, given the incredible amount of power you guys have at that single site?
Look, I have answered this question. I don't know how many times in the last month.
One more time.
Yeah, one more time. Look, we are and have been for the last 6 to 8 months deeply exploring the opportunities on the infrastructure side of both AI and HPC. There's some nuance between them when it comes to the build and the tier that 100%. You can actually tier data center that you can actually provide. But we've seen market comps, and look, from our perspective, Bitcoin mining is really cool. We're a crypto native digital assets firm in the space. We're one of the biggest and best ones. But at the end of the day, my job is to maximize the value of the electron as it flows through my substation, rather than be dogmatic about Bitcoin mining or something else. And so we're looking at all this stuff. Look, we've been approached by some of the larger players in the space. Everything's still very early though, and my expectation is that this market is not quite in frenzy, full-on power scare mode yet, but I'm happy to be sitting on the 800 megawatt interconnect and expedited substation build out.
So aside from Elizabeth Warren, no one's frothing at the mouth yet. We're waiting for the bull market to really hit. As this asset continues to get built up, do you think it's going to be a potential spin out so you get a pure value or pure asset valuation as a public company, or is it something that you guys will continue keeping under the Galaxy umbrella?
That is a really great question. Look, we've obviously looked at all options to maximize value for the business and for the firm as a whole and for the shareholders. I think that there is still some uncertainty from a regulatory perspective.
Yeah.
Although miners have had a pretty clear path to listings in the past, I'm not sure what that looks like today with Gary Gensler still in office. But I will say, you know, the conglomerate discount that gets applied to the mining business is something that the analysts that I talk to on a daily basis, especially the sell side guys, they pointed out, like, I don't know. Look, we're retaining as much optionality as we can going into this post-halving, you know, very, very low hash price economic period, as well as like the uplift that we've seen across other miners in the space relative to the AI and HPC opportunities.
Yeah, I mean, right now, you know that obviously, you know, and are aware that folks like Marathon, Fred was here yesterday, Clean Spark, Riot, even Core, now that they're at a BK, they're definitely looking for assets like this. I mean, this is one of the chunkiest single assets available left in North America. So you guys must be getting your doors kicked in at this point for folks looking to pick up what you got.
Yeah, I'll say this, Ross. I spend more time today on that piece of the business than I do on the engineering and operations. What I've kind of done with our team, both across the on-site operations team at Helios and the broader Galaxy Mining Topco team, is we've put the right people in place. My management style is this, very simple. Hire great players, hire A guys and A girls to come in and get out of their way and just help them execute and support them as much as you can. And so in doing that, you know, Brian and I spent the last, call it 18 months, really building out the team to be super strong so that we could focus on the next thing that we're going to do across this 800 megawatt campus we have.
Well, it's exciting to hear. And I mean, I guess last question I really have is, how are you looking at the ongoing infrastructure development from like a CapEx preservation perspective? Are you really looking to deploy quickly, tranche it out over time? I mean, value is in installed capacity now. So how do you guys view that right now?
The way that I think about it is the long lead time infrastructure items, like those are a given. Those are a requisite for anything else that you want to do downstream of your substation, which is typically between like 18 to 36 month lead time, depending on your primary side voltage. 138 kV connected sites, much faster, but much lower capacity available on those circuits. We fully funded at the beginning of this year our entire substation expansion. I remember walking into the boardroom and Novo looking at me and going, "How fast can we build it?" That was his question. And so we've done some pretty interesting things, both in the transformer queue and the high side 345 kV breaker queue. I legitimately just bought slots from big hydrogen projects, green hydrogen projects that failed to get permanent financing for their build outs. And so, look, I'm super excited for what we're doing, but on the capital side, long lead time infrastructure items, absolutely required. Everything downstream of that is roughly a 9-month build time. We could build hundreds of megawatts of medium voltage to low voltage in a call it 9 to 12 month timeline. I can't beat the infrastructure call it choke points on the high voltage side today.
So conglomerate discount aside, it sounds like you guys have access to capital at the right time with an incredible asset to really generate value for your shareholders. Incredible. Great to hear, man. Really thank you for your time.
Perfect. Thanks, Ross. Appreciate
Absolutely. Thanks, guys.
Good morning, everybody. So I don't know what your favorite project is here today, but one of my favorite projects is one of the newest, and it's actually their first time here at Mining Disrupt, and it's called Ocean. Ocean's really interesting. It's about decentralized mining, and I am going to invite to the stage Bitcoin Mechanic and he's not wearing any shoes. I don't know. It's a thing, I guess. So Bitcoin Mechanic, if you want to come up to the stage, he's talking about ocean. Rising tides lifts all boats in the battle against centralization.
No, I have a picture though. There we are. How's it going, everyone? How you doing? How you doing? All right. So I guess I'm going to talk about optimization. How many people think this is a happy sight? Anyone stoked about what we see here? Anyone think it's an issue? So I think it comes down to a question of priorities and natural inclinations and incentives. So let's talk about Amazon. With Amazon, you can buy basically anything you want, and it will arrive very quickly. If you're in a big city, it'll probably arrive next day or even same day, and it'll be super cheap, and it's your one-stop shop for everything, right? It's really useful. Let's talk about Uber. If you want to get anywhere in any place, you just have one app on your phone and you can just drive. You can get driven by some random anywhere you need, at any time you need. It's great, right? It's super convenient, it's super cheap, until you can't use it anymore. So what happens when Amazon decide, no, we don't like this guy, we're not going to let him shop with us? What happens when you get de-Ubered, like I did? My Uber account got messed up for some reason, and I couldn't get anywhere. The first time I got to Miami in 2021, I couldn't get anywhere because my Uber account wouldn't work. So every time I'd stop to hail a cab, because there were these yellow cars driving past with the taxi triangle thing on top, I'd hail them and it would just be a private car because all the taxis went out of business. Uber put them all out of business. So that means you can't get anywhere anymore. And what's the problem with this? The problem is just because we've become reliant on centralized things to provide us with a service because it's so efficient. So when it comes to Amazon, if you're using it, we're all using it every day to buy almost everything we have. Fantastic. We have solved commerce, but you've created zero redundancy at all. And the same with taxis now. You can't get anywhere if you don't have Uber. So this is not how you build resiliency. This is the problem with centralization. It's so efficient. We just love it. We're addicted to it. And so you see the same thing creeping into the mining space at the moment. And that's what's creating some of the issues we might face. Because Bitcoin is not about solving or optimizing for efficiency. It's about making a redundancy, something that might seem unnecessary at face value, but something that makes it long-lasting and able to withstand the test of time. So right now we have ocean creeping in at the top there. We are, of course, the orange pool. This is, I believe, a part of the sacred Bitcoin synchronicity you see. No one planned for us to be the orange thing, the orangest thing on this pie chart here, but we are, of course. But the rest of it is not looking pretty good. We have Foundry sitting at the top. They've been at the top for a long time. And then you have the rest I'll colloquially call Ant-Main, which is, Bitmain pools or Bitmain affiliated pools. And it's a lot bigger than it should be, right? But no one is really that concerned until we hit that 51% number. That's what people think, oh, if we ever hit that, then it's all over, right? But really, there's a lot of problems that creep in before that. So the two biggest pools you see here, which overtly account for more than 50% of the network, both require permission. Now, that's not okay. So supposing I can't get a taxi anywhere unless I also have a passport. Like, I'm not allowed to travel unless I have some sort of government ID or permission. I can't buy anything because the only store in the world now is Amazon. And again, I can't use that unless I have government permission, a credit card. If you don't have those things, you cannot participate in the economy and you cannot travel. The same is creeping into Bitcoin. If you want to be able to mine, if you want to be able to participate in that element of the ecosystem, then you need permission to do it, and that is not how Bitcoin should work. But those systems can creep in and become a sort of permissioned layer on top of an otherwise permissionless system. So to bring it all out, I think since getting into the mining space, we launched Ocean last November, and we did that not for any reason other than we think Bitcoin needs it. And it became impossible to deny that we were becoming lazy and complacent in this aspect of the ecosystem. And I didn't know how right we were to do that, because all of the things we thought were just theoretical problems that maybe people will care about or maybe they won't care about turned out to be very serious, real problems with horrible manifestations already creeping in. And I think there's some contrast between what I have experienced and what my understanding of Bitcoin is and Bitcoin culture as a hodler, as a node runner, versus the mining ecosystem, because it was pretty alien to me. And we have these two memes in the Bitcoin space that I don't think crossed over into the mining world at all. The first is not your keys, not your coins. A very powerful sentiment that got ingrained into us thanks to years of getting absolutely beaten to death by situations like Mt. Gox, the biggest exchange in the world, which lost hundreds of thousands of people's Bitcoins, that remains this anvil hanging above our head price-wise for the last decade. You have Quadriga, which was the biggest exchange in Canada, losing everyone's Bitcoins. And you have a million other stories of similar things. And this taught us that valuable lesson, not your keys, not your coins. And then you have this other meme, don't trust, verify, which is an essential part of this coming of age Bitcoiners have, this rite of passage, where you say, I've bought some Bitcoin, I'm finally a Bitcoiner. And then you ask them, how do you know? And they say, well, I withdrew it off an exchange to some wallet. And then you got to tell them, so the wallet's telling you you've got some Bitcoin. How does that wallet know? And then you make them dig and dig and dig. And then eventually it comes to, you have to run a node to verify the entire history of the network to know whether you have coins or not. And you need to do that in order to be able to ever spend those coins. And if you don't do that, then you're always asking for someone else's permission. And if the situation becomes so dire that everyone starts asking for permission to use Bitcoin and asking for someone else's verification that they even have coins, you end up with a completely useless Bitcoin, because 21 million doesn't mean anything in that world. If all your coins are sitting with a third-party custodian, you don't know whether you have them or not. You're back to gold, you're back to 6102 type situations. So those two memes, if they were to cross over into the mining space, that was just natural and obvious to us, and it would manifest in the ways in which Ocean is designed. So when a pool finds a block, when any miner finds a block, they have the ability to decide where the newly created Bitcoins go. And in every case on this pie chart, with the exception of Ocean, they pay themselves. And then after the fact, they will figure out some method by which they will get some money to the people that are hashing on their pool. So when Foundry finds a block, they pay Foundry the newly created Bitcoins. When Antpool finds a block, they pay themselves via F2 Pool, all of them. Ocean, when it finds a block, 90% or so of the newly created coins, the minute they exist, are in the pockets of the miners that helped solve that block. We never touch them. This is not your keys, not your coins. The next is don't trust, verify. All of these other pools you see here, with some exceptions, but not a lot, unfortunately, all use the FPPS payout model. And the FPPS payout model is unverifiable. There are claims made around it. There are deviations and exceptions noted around those the claims made for how it should work. And then there's how it actually works in practice. And each one get worse progressively. So in theory, Foundry is saying, here is the state of the blockchain. Here is how much hash rate you have. We, according to this formula, assert that you are owed this much. And again, just like with Amazon and just like with Uber, it's super efficient and amazing from a miner's perspective, because you get to point your hash and instantly sats. That's it. I point my hash rate there and I get sats back. But this is the advantage of Bitcoin versus everything else. It helps keep us on track naturally just because of the way it's designed. So we're not going to run away and fall down into the centralization trap, because Bitcoin, by grace of God, naturally corrects itself. The issue with offering miners money that doesn't exist, which is what FPPS is necessarily, is that that isn't a very expensive thing to do just due to the nature, the randomness of the nature of Bitcoin's blockchain. You never know when the next block is going to come. So from a miner's perspective, you have to deal with the fact that you don't actually know when you're going to get paid or not. So all of these entities come along and they say, hey, don't worry, I'll turn that randomness into certainty. I will pay you no matter what happens. And that is a very, very expensive service to offer to people. So much so that miners are now, thanks to the existence of Ocean, saying, we can take on that variance. We can actually take on the increased difficulty of going to mom and pop stores instead of buying everything on Amazon, because it's flipped on its head. Instead of Amazon being the cheapest, having someone go and be the aggregator of all global commerce on your behalf is a super expensive thing to offer. So if you just put in a little bit of effort and deal with some more disruption, which is what it's like mining with Ocean, because you have to wait for blocks before you get paid, you get rid of this intermediary, this middleman that exists between you and the Bitcoin network. And if you can afford to do that, you can make so much more money. So we're talking about creating a resilient system. We're talking about Bitcoiners helping make the network more robust. But I'm not asking you to do it out of the goodness of your heart, even though I would hope everyone would. It's the fact that you can also just simply make a lot more money doing it that way, because intermediaries and middlemen are expensive. And Ocean does not function as a large middleman between you and the network. All Ocean does is say, here's all the miners mining at this point. Here's how we must split the reward in the next block. And then if and when we find that block, the money will already be in the pockets of the people who mined it, to the greatest extent it can be. So if you cut out middlemen, you're returning to Bitcoin as it's supposed to have been in the first place. Bitcoin is all about disintermediation. It's all about not trusting middlemen. And with that, I'm actually out of time. I wish I had a little bit longer, but yeah, so mine with Ocean. Thanks. And one little point I'll make. The very first block was found by Bob Burnett. This was founded there in early December of last year. This is Bob Burnett of Barefoot Mining, paying homage to him here right now. And he's about to go and sign that ASIC that found that block over at the Ocean booth right now. And it's an S19 XP. I don't know what we're doing. Maybe we're auctioning it or giving it away or something like that. I don't know what we're doing. It's an S19 XP, so if it does get given away, you're going to want it. All right. So thanks a lot. Head on over to the Ocean booth. Thanks.
Yeah, check it out. It should be cool. The fact that they are going to be signing this initial miner. Did you guys like that Ocean project? Did I hype it up enough? It's cool. It's a really cool project. Now, the next project that we have up is pretty interesting. I mean, they are the largest, I don't know, let's say load distributors for the US when it comes to this concept of Bitcoin being really good for the energy grid. So they're the largest in the US. They're looking for more miners to plug in and pay to be able to run your miners. So I want to welcome to the stage David Chernis. He's a senior account executive at Sea Power, and he's going to be talking about striking gold, harnessing auto strike price and demand response to halving. So please give it up for David.
Thanks a lot, Erica. Appreciate it. Hey, everybody. So today we're going to talk about how automation, demand response, and understanding marginal costs and setting a strike price so that you go into curtailment mode when it's more profitable to give your energy back to the grid than it is to mine. But first, a little bit about us. Sorry, it looks like our slides are on some kind of automation here. Let me just go back. It looks like they're auto-playing. If there's anything we could do about that. Little bit about us. We're the largest DR provider in the US. We've got 6.7 gigawatts at 27,000 sites. You'll see all the deregulated markets there in orange. You'll see ERCOT, you'll see PJM, New York ISO. We're bullish on AI load starting to show up in the other markets too. So we'll talk about that in a little while. As a side note, sustainability, I'm just going to touch on this briefly. This is a benefit at the regulatory level. Through our partnership with WattTime, we can quantify avoided emissions through DR participation with a groundbreaking, award-winning algorithm that WattTime has come up with. This is helpful at the regulatory level, and it's something we provide to our miners. So let's talk about integration. We are a controls agnostic, open source automation partner. And so, sorry guys, the slides are just playing by themselves. Very easy to integrate with C-Power. We're integrated with Foreman since the beginning, since their genesis. We can integrate at the automation vendor level, at the firmware level. And that enables us to do some astonishing stuff, very fast acting DR, and that's where we're going now. We're using AI to analyze market conditions and to make very complex systems automatable. We can switch into curtailment mode when it is economically beneficial to do so. I'm going to quote Dan Lawrence from OBM here. He made some pretty resonating comments recently. So historically, Bitcoin miners made most of their revenue from mining. More miners now identify as energy companies, and some public miners are making up to 40% of their revenue through demand response. If you are not participating in demand response in the US now, you are not optimizing your revenue. You're not going to be competitive. So our Enterwise site optimization platform was designed really to orchestrate complex microgrids, solar, wind, storage, and bid these complex assets into the day-ahead energy markets. We're using this method in PJM now, and it'll be available in the rest of the markets in short order. The three ways that automation can optimize your DR revenue are through classic DR programs like capacity, where you're paid for your ability to curtail, whether you are activated by the grid or not. Every day your 30 megawatts are sitting there earning load passively. When there's a heat event, a heat wave or extreme cold weather event, then you will be called up by the utility, by the ISO, and you will meet your commitment. Most of that revenue is earned passively. Secondary, energy, not just price avoidance, but reducing your capacity tag, your transmission peak. This tag is assigned to you, and that's the rate that you will be paying energy at throughout the next year. And then finally, ancillary services. These are the day-ahead markets. This is where we're getting into new territory with the high level of automation that we have, both on our side and with our automation partners. We're going to look at some examples here. The on-bill savings. Now, this is savings, not revenue. This is what I just mentioned, reducing your cap tag, hitting your transmission peak, reducing your all-in cost of power for the following year. On the revenue stream side, looking at complex systems, multi-assets here, again, solar, wind, storage. It turns out this is a perfect tool for miners. You'll see hourly scheduling here, optimizing each asset and automating them to dip in and out of day-ahead markets when it is lucrative for them to do so. This is a dynamic and adaptive pricing. We're going to look at a specific example here. So you'll see that gold line is the, by looking at the marginal costs associated with the mine, and the best we can collectively setting a strike price at which the mine will shift automatically into curtailment mode in these day ahead programs. And in this example, we're going to look at economic program and PJM and sync reserve. So here you can see an unexpected price spike in which the mine has curtailed there. In that orange line, you'll see a very nice curtailment, almost down to zero. Two benefits: the site clears all economic hours above the strike price, earning revenue, and also avoids this energy cost spike. There's two tiers of this. It's multi-layered. So the economic program, you'll see that price spike come above the strike price there, the gold line running through. But you also see the passive hours are rewarded in sync reserves, all those orange bars. So 2 layers of revenue there in the day ahead markets. When the price spikes above the strike price for economic, that takes priority. So it's prioritized, adaptive, and dynamic. We could not do this without our integration partners. We're reaching ever faster curtailment times. I call it this breaking the sound barrier. We're talking about, well, we have actually linked a mine to be able to follow the NISO 6-second base point signals in the ancillary services, which also now makes us eligible to earn in the regulation capacity program in New York, similar to frequency in PJM. We've been aligned with Foreman since the beginning. We're doing great work with them. They have a really compelling announcement yesterday about AI load, which I'm going to touch on really briefly. And you'll see our other automation partners here. We're also automated with Auradine at the firmware level, Awesome Miner and others. And the common theme here is we're talking about 6- and 2-second curtailments as they're doing in Scandinavia, both up and down. Why does that matter? AI compute load is increasingly dropping into mining infrastructure, because if you think of a mine as an energy shell with capacity and available rack space, it's a race to the moon right now for AI compute. I've been using generative AI in my daily life for about the last 4 months. It's transformed the way I work. It's saving me 4 or 5 hours a day. It can do amazing things, and the capability is increasing every day. As enterprise organizations start picking up AI, Microsoft Copilot, this will be deployed widely. We're expecting a 300% demand for data over the next 7 years. How is this load going to participate in grid services if it can't be curtailable? It has service level agreements, right? You're not going to stop a large language model, and even inference, may or may not be curtailable. If we think of GPU compute as being able to very rapidly ramp up and down in incremental small percentages, it's the same way that we think about hash rate optimization, and assume that there's a 15% kind of window within the overall load that can be ramped up and down. This AI compute now, this AI compute side can not only earn astonishing and lucrative revenue in these real-time markets, but also participate in grid services, so that instead of being a burden on the utility or the ISO, they're now an asset. And that will get these data centers, these AI build-outs approved at the regulatory level. We love talking about this stuff. Thanks for the opportunity today. I'm out of time. Please come and visit us at booth 311. I would love to talk to you some more about this stuff. Thanks. Thanks, everybody.
Thank you. Give it up for David, and go to booth 311 if you're interested in. My favorite part really is the ability for miners to support the existing grid. Like I say all the time, Satoshi's second gift is green energy. We didn't really have any option like this before Bitcoin miners, and it's really important for us to tell that story, especially towards people that think that they believe what the TV says and they say that Bitcoin is bad for energy. Really, it's not. So up next, I'm going to invite to the stage Max Metronitsky. He's the founder and CEO of Everminer, formerly Siberian Mine. Actually, I think he still has Siberian Mine running if you guys are familiar with that project. And it's about how he created the first ever 0-watt terahash Bitcoin miner.
Can we do that? Hello, I'm Max, and I came from the future. Yeah, in the future, we all wear hats. So if you could travel to the past, I know what any Bitcoiner would do. Probably you would get yourself some Bitcoin. But if you could visit the future, what would you bring back? I brought with me a Bitcoin miner. It's absolutely real picture of the miner. It's not some AI generated image at all. So it's indestructible. Yes, in the future we can do that. And it has the ultimate efficiency, 0 joules per terahash, or as we nerds say, 0 watts per terahash per second. So just imagine a miner of, let's say, 200 terahashes. No need to worry about energy, maintenance, repairs. It's always in the green zone. It's always profitable regardless of mining difficulty. An everlasting flow of Bitcoin. It's priceless, but actually, how much would you pay for it? It's hard to put price tag on it, right? But we did it. It's $89 per terahash per second of everlasting hash rate. I'm Max Matrynitsky, and many of you know me as the founder and CEO of Siberian Mine. We have been attending Mining Disrupt since 2019, I guess. Yeah. Kudos to Michael and the team, yeah, for bearing with us. Siberian Mine has been providing hosted miners for 6.5 years for over 500 clients from all over the world with a cutting-edge innovative approach. We were the first to offer lifetime warranty and automatic failover for all our miners on our unique, fully automated platform. Now we are taking it to the next level, and I'm proud to present to you Everminer. First ever Bitcoin hash rate contract, prepaid for life. It's a platform where anyone can buy ever hashes and secure an everlasting flow of hash rate. You can go for 10,000 ever hashes or just start with one for $89. Forget about maintenance, repairs, all operational costs. It's all included for life. Moreover, you can sell your ever hashes at any time on the internal marketplace at a fair market price. So now, when you hear lifetime or everlasting or for life, what is the first thing that comes to your mind? Be honest, I can read your minds. Yeah, in the future we can do that. Not sustainable, scam, impossible, where's my beer? So yeah, I've heard all of this. In 2020, when we first offered lifetime warranty and automatic failover in Siberian Mine, our own shareholders and even my co-founder could not believe that it would be sustainable. And now it's been running for 4 years now with open stats,
published every single day since July 2020. We've proven it's not only sustainable, it's a huge win-win for us and for our clients. So how can Everminer's bold claim can be even possible? I'm an IT nerd and I love numbers. So I did my math and I developed a robust model. The math is rather complex and multi-dimensional, but the idea is pretty simple. Difficulty grows over time. And ever hashes are expensive enough so we could use this extra margin to secure excess hash rate and pre-mine a public Bitcoin buffer, Bitcoin stash, now at a lower difficulty to cover our hash rate commitments tomorrow when the difficulty increases and miners become more efficient with Moore's law. So yeah, that's my drawing skills. Actually, I love this picture because it has a sentimental value. It's what it all began with 200 years ago in 2024. Yeah, when we install new machines, the blue line, we publish only a part of this hash rate as ever hashes, the green line. As we go, we sell some of the ever hashes, the red line. And the yellow area is actually what we managed to put in our Bitcoin stash. So that is a public stash that is that allows us to meet the commitments of the future hash rate delivery. So Everminer's idea is revolutionary, but its journey actually is one of evolution. So from the very beginning at Siberian Mine, we wanted to provide the best service to our clients who hosted miners. So we even dedicated 10% of the fleet to a hot swap fund, and we were manually replacing broken miners while repairing them. Then in 2019, we figured out that providing support and orchestrating communication in each single case when a cooling fan or a PSU fails on our clients' 1,000 miners costs us more than the repairs themselves cost to our clients. So we decided to hell with it. We started fixing all miners at our own expense and started offering lifetime warranty to all our hosted miners. And it was a win-win. We saved on support team, fired them, and we got everything fixed straight away. Then we developed a fully automated platform and added a hash rate failover to all our miners so that our miners actually never stop providing hash rate no matter what happens with the underlying device. And the next step to Everminer is free miners, free hosting for miners. So last year we offered hosting discounts of up to 100% in exchange for liquidity on our platform. Thus creating first ever miners with forever free hosting. Our clients loved it. And they provided more than $500,000 of liquidity. So we proved the concept of miners with free hosting. So the next logical step was to pack it up into a single solution and to a standalone platform, the Everminer. So literally the day before yesterday, we had a soft launch of our platform. A standalone platform that leverages this idea to new heights, allowing miners to buy and sell EverHashes. It's currently in beta, but you can purchase your eternal hash rate already now. Do it today. Visit our booth 47 and get 1 hash as a new user, even 1 terahash per second of constant Bitcoin flow will have changed your grandchildren's life. So they told me. Visit Everminer and Siberian Mine. We're looking for reliable hosting partners here in the US. So let's talk. We might consider some equity investment. Also, let's talk. So that's me. I'm Max Matrinitsky, and thank you for taking a walk with me through time. 1 extra hash who gets the reference.
Thank you. Good job. All right, so you guys should visit him. Did anybody use Siberian Mine back in the day? Yay, cool. We got some OGs in the crowd. All right, so up next, I am going to invite the CEO of Fog Hashing, Paul Lee. Paul will be talking about cooling for next-gen computing. They are a liquid cooling tech company, and they're at booth 313. So give it up for Paul. There you go. Come on, clap louder for him.
Thank you, everyone. It's my pleasure to be here to share my thoughts on the cooling. Actually, the 3rd year I've been here at Mining Disrupt. What happened during the past 3 years, or even during the past year? So I think the best thing is the boom of AI. So obviously, everyone is talking AI at a mining event. So, but what happened? Actually, previously, before this, the 2 years, from 3 years ago when we started, the heat from traditional servers, traditional data centers, are not so much per slot or per server. There's only 1 to 2 kilowatts, or even more, but no more than 3 kilowatts. But after large language model, after AI came to us last year, so the output, the heat output per server come to nearly 5 to 10 kilowatts. So it's just like mining machines, right? Or even more. But the problem is it has a higher regional density for the thermal side. And the other thing is it has various heat sources. It's not like the mining machines. So we got nearly 300 or even more chips, 100 chips in one hash board, or 300 in one machine. But for GPU, one single chip can generate more than 1 kilowatt. So for regional heat, it's even higher than the Bitcoin miners. And at the same time, it's so complicated that we have new challenges like the signal integrity issues or some others other than in the mining industry. And you may have the question that why computing density matters, why it's so important, why we want to integrate more computing power in the. So it's not the greatest benefit is not to save the space, but to reduce the internal signal transmission distances. That will enhance greatly the system performance. That's the most important reason. So, sorry. So when we compare AI computing with blockchain computing, so what's the differences? There are a lot of differences, but among them, first, I think actually GPUs, AI computing, is just like ASIC. So it's not traditional GPU computing, like rendering or gaming. It's essentially ASIC. Obviously, the GPU chip is not ASIC, but finally, no one uses it to do other things, only for AI computing. And it's always seek for peak utilization, always 100%, even overclocked. It's just like mining, right? To get a higher revenue. And it aims at rapid development and operation. No one wants to wait for 2 years of the infrastructure construction of data center, right? You want to get the computer power, very rapidly, even in 2 months, just like mining. And there's more downtime. It's tolerant. So it's not like a web server. Even 1 second, it's not allowed. So, and the last thing is the return of investment calculation is just similar to mining. So there's a lot of similar things between AI computing and crypto mining. So that's my conclusion, is that AI computing is more like mining rather than traditional computing. That is a transition. As I was a professor in computer science for 19 years before entering this industry, I can see the real transition. Every 10 years, the computing characteristics will be different every 10 or 20 years. So here, we're facing another transition. And the competition is coming. First, for the advanced chip processes, like 3 to 1 nanometers. And they are competing in energy. So a lot of data centers now is finding energy. Previously, crypto mining. And they share a common challenge in cooling. So now liquid cooling is becoming default in the next generation computing. And eventually, I think at the end of the day, they will emerge. They will merge finally in the upcoming years. So let's talk about cooling. So I have only 3 minutes to go. So let's talk about cooling. So there are quite a few different technologies, like some we are familiar with. Like hydro. In data center area, it's called D2C or DLC, direct to chip. So it comes from the traditional data center area. And it makes I mean, it's suitable for utilizing conventional server rooms, the data center buildings, to do the D2C cooling. But the big challenge is how to manage multiple heat sources. Actually, liquid only do the 70% of the total cooling, and another 30% is still air cooling. So it narrows its utilization. And single phase immersion cooling, it offers unified cooling for multiple heat sources, and it has the capability of rapid deployment in even harsh environments, just like Bitcoin mining. So we have many more choices. This to isolate air, totally isolate air from the servers. And we have two-phase immersion cooling. It's superior than any other cooling methods, but it also has disadvantages on the the cavitation effect from bubble formation and collapse. So it will damage the equipment in the long term. And I think from now on, maybe 3 to 5 years from today, two-phase immersion cooling will be the next very important. But currently, I don't think it's the best time to utilize it in a large scale. And to combine D2C and immersion together. But it's more complex, and it has a higher cost. And we'll combine the advantages and the disadvantages of both. So there's no in summary, there's no silver bullet. So each has its pros and cons. But liquid cooling in the mining industry has been more aggressively used in the past 3 years. I mean, in the mining industry. So that's a good experience and best practices to be applied to AI computing sector. That's what the industry, the crypto mining industry, can bring to the traditional data server industry. So cooling in the future, cooling is not just for cooling. That is my predict. So what it is about, and what liquid cooling will bring to the industry. So I think the most important thing is it will provide a new way to make a new infrastructure construction model. The basic logic will be changed because liquid cooling can provide when you use liquid cooling, you can deploy your any kind of computing power to harsh environments where energy is not an issue, right? So with liquid cooling, the transition of the computing infrastructure building logic is coming. So our mission from our company is to make computing more efficient, more robust, and more economical. So that's why we are not just providing solutions for the mining industry, but also we are delivering the world's first large-scale immersed H100 project in the coming months. I mean, in a month. So not today, but later we will announce our big progress cooperated with Shell for the world's first large-scale immersed H100 project. Yeah, that's the last page. So we provide all the full stack liquid cooling products and solutions to the both of the mining and the computing industry. And we do customization, long-term services for each customer. We got all-in-one solution with hardware and software integration, not only to solve the cooling problem, but also to promote the computing power at the same time, utilizing cooling technology. And currently, yeah, this project is a very big challenge for us, but I believe we can do it good. Okay, thanks so much. Thank you for listening to my sharing. Thank you.
Thank you, Paul.
Thank you.
Fog Hashing has some cool compact machines, so make sure you go check out their booth number 313. Okay, so up next, I am inviting the Chief Product Officer of Giga, Shiv Gupta, to the stage. And if you guys want to check them out, I mean, this is probably one of the only conferences you'll go to that has actual physical containers, but they have a full container set up in the back. And Shiv will be talking about hydro-cooled Bitcoin mining. So, Shiv, give it up for Shiv, you guys. Give him some good energy for his presentation.
Woo.
Thank you.
Good morning. Good morning. Can you hear me all right? All right. Well, this is third year in a row being here at Mining Disrupt. So we love this conference. Thanks to the organizers. So yeah, let's get right into it. Today I'll be talking about hydro-cooled Bitcoin mining. But real quick, a little bit about Giga. So since 2019, Giga has been manufacturing and operating data centers, modular data centers. We are now kind of, a lot in the past, people have known us for being the, flare gas methane mitigation company. We are also, while we continue to still have a lot of those operations, Giga is positioning themselves to be a electrical and power infrastructure company. So till date, we've done over 400 megawatts worth of power infrastructure. Giga is headquartered in Houston. We have offices overseas in China, and customers and projects throughout the United States. All right, so as it relates to some of the product offerings on Giga side, we have really three main verticals of our business: power generation, electrical equipment, and then the mining and data center side. So for this talk, we'll be really focusing on our modular data centers as it relates for hydro cooling. Okay, so what is hydro cooling? As our good friend Paul was just up on stage, talking about immersion, hydro cooling is very different than immersion in the sense that hydro cooling is direct to chip. Okay, so you're not dunking the miners in any fluid. It's all a 100% closed loop system. In hydro cooling, we use deionized water. This deionized water runs through the cold plates of the miner, basically acting as heat exchanging, taking the heat away from the chips, and then we cool that fluid in a closed loop system and goes back to the miners. Both of the two main ASIC manufacturers, both Bitmain and WhatsMiner, do hydro cooling. And so I've actually really focused on the WhatsMiner, but now also offer Bitmain hydro cooling solutions. All right, so some of the details as it relates to hydro cooling and some of the benefits. Hydro cooling can make you very, very power dense. So for example, a standard S19 J Pro, 3,000 watts, a hydro-cooled M50 or M63 from WhatsMiner, you're talking about 10,000 watts, right, or 10 kilowatts. So about 3 times the power density on the WhatsMiner side, and also we're starting to see that power density increase on Bitmain side of things. As you know, some of you may have been in Vegas for WDMS. We're starting to see really, really efficient miners on hydro cooling. Between the S21 XPs, you're getting down to on the hydro cooling side, you're getting down to 12 joules per terahash. So hydro cooling is basically you're starting to see that with a lot of the AI guys. That's why to get that efficiency, it's the way to go. Also, we're very happy to see that the Bitcoin world is moving away from our shoebox form factor to a 2U. So we really like the more traditional form factor of the servers that are coming out. It makes it a lot easier to build systems around it. It looks more like traditional data centers, so all of the benefits around the form factor. There's no disassembly with hydro cooling, right? You're not having to take fans off or prep the miners. These are plug and play with our solutions. Hydro cooling is very quiet. There's really outside of your dry cooler or whatever your cooling system is, the miners themselves are very, very quiet. And it's also cost effective. Our solutions are around $200 per kilowatt on a retail side. and we can get lower than that. All right, so some of our product offerings, we have what's called the Giga Hydro Skid. So this is our latest and greatest, which is going to be a 2.5 megawatt skidded solution. So we've got 18 server racks on a 2.5 megawatt skidded base with the CDU and the switchgear attached. So all in one. That's going to be for more of your indoor clients, guys that are building out a massive warehouse, and you want to drop a skidded solution inside. And then obviously we have our containers. Please come check us out. We've got a booth outside and inside. It's a lot nicer that they put the container inside this year, and we're not sweating in the heat. But yeah, we've got a 45-foot container that's 1.2 megawatts. So you're going to have your 5 server racks, got the capacity for 120 hydro-cooled WhatsMiner servers. And then like I said, we also do a Bitmain version of that, which is 224 miners. Again, very plug-and-play solution. Essentially no setup required outside of connecting your electrical and filling the system. So really quick, going through some of the components of hydro cooling, right? You have your CDU, or called your cooling distribution unit. We've chosen to go with redundant pumps, with redundant buffer tanks, all of the kind of N+1 systems you see in traditional data centers. You've got a dry cooler. So this is basically the cooling system for that. Obviously we're in hydro cooling, some of you guys may have seen, there's push now to use heat recapture. So if you're doing a heat recapture program, you're not going to need something like a dry cooler. You'll have a plate heat exchanger. But our systems come included with the dry cooler for rated up to your local ambient temperature. So the racks and the PDUs, we basically can do a 42 and a 48U rack on that end of things. Air bleeder valves, our entire system, you can bleed the entire system out of air once you fill it in less than 30 minutes. So that's something to be said about that, where the setup time, you don't want to be messing around with all kinds of setup issues, and bleeding the air is a really important part of that. Some other components about the racks. We use Goodyear rubber EPDM hose, so that's rated up to 120 degrees Celsius. For reference, on your latest and greatest WhatsMiners, the fluid is only coming out at maximum like 70 degrees C. So we've spent a lot of time to really build a robust HMI and control system, make it look, what we would see in traditional automation and American industrial. And so, we've got all of the remote capabilities. You can, we can hand you a list of APIs, or you can VPN into our system and access your container or skid or any hydro-cooled product from Giga remotely. Service and track record. So we're a Texas-based company, like I said. We're based out of Houston, Texas, with manufacturing overseas. We have very, very rapid response time. We can, help with deployment services if needed when customers need that. And we really adhere to all of our SLAs with our customers. We do a lot of on-site deployment and maintenance. Like I said, we're based out of Houston, so our response time is very, very quick. And we've done over about 105 megawatts worth of hydro to date. And that's rapidly growing. We're starting, obviously air-cooled is king, from a cost perspective, but we're starting to see a lot of customers transition hydro-cooled, and we're very excited to see that. All right, last but not least, Giga, we're hiring. Right now, our CEO, if you talk to him, Matt Lostro, he would tell you we're hiring a person a week till the end of the year. So please come check us out. Come talk to us. We're at booth 385. Thank you very much.
Thank you to Giga. Hopefully some of you guys can get a job. I don't know. Just kidding. You guys probably all have jobs already. That's why you're here.
Thank you.
So next up to the stage, I am going to invite Darren Burgess. He is the VP of Business Development at Midas, and he's going to talk about As ICE. So I thought it was ASIC E, but apparently it's As ICE 3.0 systems improvements. So here's this for you, Darren. Can you turn this mic on for him? Give it up for Darren, you guys. Thank you.
Good morning. Are we on here? There we go. Good morning, everyone. Love to see all the hardy souls who make it out with clear eyes on a Tuesday. So thanks for being here. Again, I'm Darren Burgess. I am with Midas Immersion Cooling. And you know what? Among the kind of OGs of immersion cooling, I think, Midas may have gotten forgotten along the way. We've been quietly making our way for quite a few years. And so for those of you who may not be familiar with us, I wanted to start out with a little bit of an introduction to who Midas is. So in Austin, all the way back in 2010, Midas actually started as the first commercial immersion cooling data center. And we actually bought the first available immersion cooling equipment from the only vendor that existed back at that time. And so our experience really comes from running an immersion cooling data center and actually working with the equipment ourselves from the beginning. And so what we did is started to iterate on that equipment to slowly improve it, to make it cool more efficiently, to make it cool better. And we iterated it so much that we were actually able to patent that cooling tank technology. And so our solution is fully patented. And we took that patented solution and, starting back in about 2018, when Bitcoin mining in the United States started to take off, we really got some great traction with that. And with that, we now have more than 500 megawatts of installed base. That photo you see to the lower right is 100 megawatts laying out and something about the size of a football field that if you watch YouTube or you get LinkedIn updates from a certain large mining company, you might recognize that picture. And so that's our experience, and that's point number one of why I work with Midas, because 500 megawatts is unparalleled experience. That's tank after tank, pipe after pipe, cooler after cooler for over 4,000 tanks that are out there helping to mine Bitcoin right now. I mentioned that it's patented. And what we also do is engineer. So all our systems are internally engineered. And for the right size deployment, for the right customer that may be you, we can customize that to your needs. So do you like it to fit a certain way? Do you like a certain type of lid? Do you like it to have a certain height that your technicians are more used to for maintenance or such? We'll be more than glad to work with you as we have done for our largest customers to really make that tank fit to what you're after. And finally, the third point, as you see up there, why I work with Midas, is support. Starting with that design that I just mentioned to really fit to your preferences for what you have envisioned for efficiency, to the installation. As you all probably know, and particularly if you've worked with, directed chip cooling or with immersion cooling, the installation, that's where it's all at. We got to get all this installed, got to get it laid out, and plumbed correctly for things to work their best for you. And then, starting with the operation, nothing, there's very few things that are like your laptop where you just hit on and it goes without a hitch. This is ultimately a lot of water, a lot of oil, a lot of plumbing, it needs to come together to get the heat out, and that's ultimately what we offer to you. And so from the design to the installation and then to getting operations running, we take great pride and have been very successful in being people's partners, not just handing it off to you and saying go and good luck. So moving on, as mentioned, we're now with the ASIC 3.0. And what I want to talk to you the rest of my time today about is, what are the improvements that we've made there? What's the best part of that new system? And so some really simple points that I want to leave with you. Lower cost, higher density. It's a turnkey installation. It performs a bit higher now, and some great ease of usability, which is huge for immersion. And finally, quite importantly, is the equipment is made in the United States of America. So let's talk lower cost. If you come by again, as she mentioned, booth 70, I'd be glad to talk some numbers with you. But basically, as we have improved our vendors, improved our relationship, improved our supply chain, we have gotten down to some of the most competitive capital expense for large scale deployments. Second, higher density. What does higher density mean? Well, we can put a megawatt in about 450 square feet now, and that's including the aisles and the power distribution. So really bringing these tanks tightly together to make the most of your potential building space. What's next? Turnkey installation. So what we found from our most recent large deployments is the customer really likes and ultimately kind of forces us to bring the best system together, and that everything, tank, heat exchanger, pump, piping, comes as one package and can be put on a forklift, dropped in a spot, and then connected to the water plumbing. And so that's what we mean by turnkey installation, fully assembled. Higher performance. So working with the flow rates in the tank, the temperatures of the oil, the potential temperatures of the incoming water, the size of the pump, the size of the cooler, we can actually keep those coolers dry up to 92.5 degrees Fahrenheit. Beyond that, go into adiabatic mode, add a bit of water, and we can continue to give you 100% cooling capacity of the tank, and that is 150 kilowatts, up to about 107 degrees Fahrenheit. So we've really been able to marry things together with the oil and the water to give some peak performance so that, unnecessary amounts of water are not required and you still get the biggest bang out of our immersion cooling tanks. Finally, ease of usability. So, between heights, lids, all the different things that can, be involved, getting underneath to the pump, getting underneath to work on the heat exchanger, anything that might be necessary in terms of maintenance, that we've really worked with the 3.0 version to greatly simplify things so that you can get the mechanical and minor maintenance to your most efficient operation. And, I think as may have been mentioned prior to my talk, literally unmanned operations to the extent of a couple of months and more are now possible with an immersion cooling data center. So it really only requires you to go by and check from time to time. And, I think there's a lot to be said about the CapEx. A lot of people say, immersion cooling, it costs so much up front. But, when you don't have a lot of minor maintenance down the road and you don't have a lot of technicians keeping a watch on everything that need to be there live, you can really recover some things in the operational expense. We'd love you to challenge us to the on-time delivery, as it says there, made in the United States of America, and, we can deploy to you in really rapid fashion. So again, grateful to be able to address you, and thanks to the organizers for the time to be up here. Please come by booth 70. We'll be there for the rest of the day. Would love to talk to you about our technology and about your needs. Thanks so much.
Thank you, Darren. He is at booth 70 if you guys are interested in seeing him. Up next to the stage, we have someone who was really featured last year. Leon, if you want to come up. He is the founder and CEO of Standard Hash. He's going to be talking about how to get a better hash rate, talking about cloud mining. I don't know how you guys feel about cloud mining, but you can learn more through Leon. So go ahead, Leon.
So in 2019, we went and visited a crypto mining site. We looked around. I said to myself, there's got to be a better way. My name is Chuck Lecuyer, founder of CS Corporation, home of the IntelliFlex line of product. At IntelliFlex, we're innovators. We're very conscious about the overall footprint that the system will take and the overall density that we could achieve on a single parcel of land. when you talk about density, that's eco-friendly. The carbon footprint, look at 6 megawatt of IntelliFlex solution versus 6 megawatt of any other system out there. We design, build, deploy, and operate our system. We have 4 cooling pods on top of one 6 megawatt system. We designed a system that is very easy to operate. We have industry-leading operation uptime and efficiency. Our product are UL certified. Quality is what we do. Every piece will have their own power distribution system, their own immersion tank, network system, pump, fans. Our clients that we have all have something in common, and they're looking for a high quality product that they could deploy as a modular system that is scalable. At IntelliFlex, our motto is start to finish.
Very cool. So IntelliFlex, give it up for IntelliFlex. That was an awesome video. And IntelliFlex has their actual, the containers that you saw here. Take pictures. There's a lot of really robust companies in this industry. IntelliFlex will be on a little bit later today. They have a panel at 3:05 if you're interested in hearing from them again. Now, back to Leon. Leon, come back to the stage. Sorry, I made a little mess up before. But Leon is the founder and CEO of Standard Hash, and he's going to talk about cloud mining.
Okay. Good morning, everyone. Good morning, Mining Disrupt 2024. I'm Leon Li, the founder and the CEO of Standard Hash. It's my pleasure today to share my thoughts and insights with you on Bitcoin mining. First, let's look at this chart. The picture above captures the total hash rate of Bitcoin network. We can see from the birth of the Bitcoin of the year 2009 up till right before 2017, the growth of the hash rate at a plateau in the initial phases. Then the growth make a remarkable increase, and from then on, there is no sign of the growth rate slowing down. And the following curve is the price curve of Bitcoin. We can see that the price curve correlates with the hash rate curve, but its previous peak is more component. Because the constraints of the hash rate curve are much less than those of price curve, the constraints of price curve much less than those of hash rate curve. The growth of hash rate curve needs the real hardware investment, and it cannot be instantly increased. Once the investment in hard mining is made, it's unlikely withdraw directly. Therefore, the hash rate curve is not unlikely plummet suddenly like price curve. Next, let's look at this point of the hash rate curve. I founded the world's first online community for crypto mining in the year of 2013. Its business involves the whole process of Bitcoin mining, including mining media, miner sales, hosting, construction of mining farm, and development of mining pool, and cloud mining platform operation. Moreover, Many well-known figures in the industry has been visited our community, including the founders of Avalon, the founder of Bitmain, and the founder of Binance, Zhao Chanpeng and He Yi. Furthermore, our minor evolution we have conducted has set an industry standard. At that time, nearly most of the mainstream miners from numerous manufacturers would undergo independent third-party minor evolution by us. Plus, the first mention of Bitmain also come from our community. This page shows the mining farm. Before the year 2021, China accounted for the majority of the total global hash rate. There are some photos show the mining farms in China at that time. These pictures pulled from a video titled Revisiting the Mining Road. And we can see from these pictures, this mining farm mostly located in the regions in China with abundance of electricity power resources, such as Sichuan, Xinjiang, and Inner Mongolia. We can see their scale from these pictures. Each individual facility are very large. Most of them have a capacity over 100 megawatts. Let's revert the hash rate curve. On the year of 2021, we can see a substantial drop of the hash rate. And close about 50% of the global hash rate has a drop, virtually overnight. What happened to trigger this sudden decline? In May 2021, a ban on mining in China was issued. In a very short time frame, countless miners were shut down, and many mining farms were deconstructed. There is a video I'd like to play for everyone. This video succinctly encapsulates the sentiment of Chinese miners during that experiencing time. Let's see it.
Bye. Bye. Bye.
Bye. See ya.
It's short. I like to play it again.
Bye. Bye. Bye.
Bye. See ya.
It's really a experiencing time. Let's revert the hash rate. We can see from this picture, the hash rate move on to increase and reach new highs as we move into the rest of the year 2021 and beyond. The hash rate swiftly completed the migration. This is a testament to the decentralizing power of Bitcoin. Over the course just of 3 years, the hash rate makes a remarkable increase and makes the new highs. And during the migration, the North America has emerged the primary destination. The following 3 pictures show my visit to the large mining farm in the USA, such as CleanSpark, RED, and Core Scientific facilities. We can see from this picture, it's notable that North America is now a global leader in the large-scale deployment of hash rate. Based on some statistics, close to 50% of the global hash rate are now impressed in the North America. Considering the current climate of the industry and account for our years of experience, we narrowed down on several pain points for the investing mining. The inconvenience of the whole process is a major one. It involves a long series of steps, including how to purchase miners, how to construct and maintenance mining farm, how to configure software, etc. For the industries to progress, we think good product should be readily available to facilitate users and making more people access Bitcoin's hash rate. This also considered the decentralization, considered as a contribution to the decentralization of Bitcoin. Currently, the cloud mining, which has a relatively low entry in terms of investment of mining, presently also presents some issues. Most of the cloud mining offered short-term cloud mining and cannot yield long-term profit, which falls short when it comes to the key and start component of Bitcoin mining. The smoothing of risk over time and the acquisition of long-term of value with the increase of Bitcoin price. Furthermore, the cloud mining solutions on the market now available, often non-negotiable upon purchase and become invalid past the expiration date. These areas we think needed to further development for the industry to progress. In response to these pain points and account for our years of industry experience, we launched Stand Hash. We standardized and integrated the various of steps of mining, including mining pre-configuration, mining farm maintenance, and miner procurement. After which, the mining power transmuted a unified hash rate output. Standard hash has 3 key points: unified power consumption, unified hash rate, perpetual contracts. We think this makes it easier for understanding and participate. Users don't have to worry about how to quality, deliver, and procurement. Not be over by the hosting and the maintenance issues. Another important distinct attribute of us is it comes with perpetual contracts. We believe this truly embodies the essence of Bitcoin mining, which separates us from other providers. And we believe we restore the greatest allure of mining, the ability to mitigate risks over time, recoup investment, and continue generation of returns. The following picture is our most basic product, which runs on the Bitcoin hash rate of 20 watts per terahash. Each unit consists of 100 terahash. Users only need to purchase the model and pay the electricity fee based on the rate of 2 kilowatt hours. They will receive the Bitcoin equivalent to 100 terahash per day. We hope this prototype will help more people to embrace the wave of change in Bitcoin. The majority of our hash rate is not limited to differentiate with miner models or contract duration. This make trading convenience and also make it can be upgraded. This property becomes like a hash rate ETF. And we think this is the future of Bitcoin mining. And we are committed to provide better hash rate for the investment of Bitcoin. Why are we confident to take this new endeavor? Looking at this picture shows our team introduction. Looking at their extensive experience in the management and operation of the traditional large enterprise. Collectively, they also has the deep of the top cryptocurrency companies. And with their entrepreneurial experience, they have well-rounded and deep understanding of the industry. I'm the CEO Lian. I'm of the CentHash. I involved this area since 2013, accumulate well over 10 years experience. So I intimately familiar with every facet of this industry. Our CTO Sophia has 14 years of research and development experience in the technology management roles. And she has served as a technique expert previously at Alibaba. Okay, I will quick. And she as well as she has a product director at Bitman. At Bitman, she has delivered. She has responsible for the whole production process, including chip design, miner design, and production and deliver. The miners she had delivered, including S19, S19 Pro, hydro cooling, and air cooling, and Interspace HK3 hydro cooling container, and Antminer L7 are the alternative mining machines. It's notable that there are very few people with this relevant experience in this industry. And our CEO have 15 years about multinational HR experience. And our CEO also have 10 years experience in this industry. Okay, for the close is our contact details, which the links to our social linking with the linkings to our social platform and where you can email us. Thank you for listening. Thank you.
Thank you, Leon. You guys can debate him on cloud mining. He is at his booth. So make sure to find Leon for standard hash at 381. So up next, I have a lovely lady, and we all like having women in this space because they're just awesome. Sorry, boys. So up next, I'm going to invite the marketing director of Tesla Watt, Slajana C. And she's going to be talking about 100% off-grid crypto mining, achieving independence from energy price fluctuations. They are booth number 380 if you want to check them out. And give it up for Slavana.
Hello, everyone. Thank you for granting me the time and the space to present Tesla Watt and our very newest initiative, 100% off-grid crypto mining, essentially achieving independence from energy price fluctuations. So I wanted to tell you that I'm so excited. It is our first time exhibiting here just to present our mission, a company and a team that's here that's willing to answer all of your questions after this presentation at booth 380. So we have been in business since 2017. And we are a private equity company based out of Nevada, tier 1 crypto mining data center, and fully own our infrastructure and real estate. So we operate without any leverage. And one of the oldest crypto mining data centers on the market. I hope you're familiar with us. If you're not, here we are. So something a little on our growth and development. So we are actually organic growth supported by a small but a mighty, very dedicated team. We've maintained a year-over-year growth rate of at least 50%. We operated with minimal expenses during bear markets and achieved very rapid growth during bull markets. So something on our background achievements. We built a state-of-the-art data center in Nevada. We provided top-notch technical support in data center operations. We continue striving for excellence day in and day out with superb customer service. And we are so grateful for our clients, existing and new, committed to a very long-term success. We love being in this business, and we are committed to long-term success rather than just not quick profits. I'd like to mention that we are profitable during both bear and bull markets. We operate organically without any needing additional funds and during downturns. So when it comes to dependencies on power generators and utility rates, we've realized something big this year. We've realized that dependency on utility providers is unsustainable, essentially. So competing with global electricity rates is challenging, and we want to be independent of utility providers for success, hence why we are doing 100% off-grid solar mining. And part of the thinking a few steps ahead, we're announcing a major solar energy initiative, 100% sustainable green energy for the crypto mining industry, designed all in-house and fully independent solar system with no grid connections. We eliminate risks from power generations and utility providers. And now a little bit on project details. We'd be happy to share far more at our booth 380, but clean, efficient energy for crypto mining, significantly reducing carbon footprint without impacting the electrical grid, all in one box, including very high quality components and an automated power monitoring system, easy to operate without highly skilled employees. We plan on bringing full production to the solar system to the United States. We've just purchased land in Tonopah, Nevada, altitude of 6,043 feet. And it's just a fantastic environment all around for battery systems and crypto miners. So 171 acres for the first crypto mining solar farm. This is actually a picture of the land. This is what it looks like. High solar radiation, ideal environment conditions for the solar system. And a little bit more about us, what makes us different in case you're not familiar with Teslavat. We are relying on utility providers, like we wanted to mention that relying on utility providers possesses significant risks, as everybody is aware of. Potential energy rate increases, natural resource price fluctuations. And we just want to be 100 independent solar projects for sustainable crypto mining. Controlling power generations ensures always profitable crypto mining, so independent of natural resources and utility rates. So our new focus of the solar farm is focusing on innovation, sustainability, growth, future. We keep continuing to developing and improving solar system. We aim to achieve the most efficient crypto mining system in the world. So we're confident in setting a new standard for efficiency in crypto mining. And so from our Teslavat's journey from 2017 to a major solar project today that we're presenting here at the show for the very first time, we are dedicated to this strategic vision and excited about the future and confident all around in impacts on energy and crypto mining industry. So our booth is 380. I'm sure a lot of you have a lot of questions. My dedicated team is willing to answer them all. Just visit us in all due respect to the other presenters. That's all. Thank you, everyone.
Awesome. Thank you for that great presentation. Okay, we're moving over to a 5-minute speed round for a little bit here. So if you want to get quick information, well, find a chair. It's a great time for you. Zara Amrani of Ace Miners is going to be speaking about exploring the power of hydro mining. Zara, take it away.
Thank you so much, Will. Thank you all for being here and thank you for having me. So my name is Zara Amrani. I'm the CEO and founder of Ace Miners, a US-based company that actually specializes in ASIC procurement, hosting solutions, cloud mining, and mining farm expansions. So a little bit about us. Ace Miners is a US-based company registered in the US, founded in 2017. We are a hosting provider. We specialize in hydro hosting, so fully hydro-powered with a 99% uptime. no curtailment in the state of Oregon. And that helps us reduce our carbon footprint. We also provide cloud mining and fractionalized mining for individuals that are interested in more of a hassle-free experience. We have successfully launched several projects within the last couple of years and completely sold out. And our members actually have the ability to claim their rewards to our dashboard. So it's a completely seamless process. So we do specialize in ASIC procurement. We accept credit cards, which a lot of companies, unfortunately, in this space don't have the ability to do so. So it does provide an additional layer of protection. We do also provide insurance during transit and have the option to host it in one of our centers. Our biggest site is in Oregon, but we also have facilities in Wisconsin as well as Oklahoma. In Oregon, it is specifically hydro-powered and 99% uptime, which our clients are really satisfied with. We also do have cloud mining, as I mentioned. We have the opportunity as well if you'd like to purchase a hash rate. We are actually minting this Friday, so that is called AMP Miners, and you can visit us at ampminersnft.io. And that's the little picture there of the NFT. It is essentially just cloud mining where you purchase a hash rate and you claim the rewards through our dashboard. Our biggest expertise as well is in actually mining farm procurement and expansion. We do have the ability to provide self-miners or hosting providers if they are looking to expand. We specifically target hydro mining, so this would be in the state of Oregon. And we have helped several clients anywhere from about 5 megawatt to 100 megawatt. In the state of Oregon, there are quite competitive rates, so we are looking at 5 cents per kilowatt hour. The beauty of that is there is zero to minimal curtailment. So you have a client base that is very satisfied since there's no downtime. And with satisfaction from customers, that's the most important thing. So that is one of our specialties. So if you're interested in acquiring land or leasing it, you do have the opportunity to do so with us in the state of Oregon. Now, the importance of hydro mining in crypto mining industry, and this brings us back to the state of Oregon, which we essentially specialize in. We do reduce our carbon footprint. We also build a community, and we have the ability to gain more acceptance for hydro mining. And we also have a reliable and consistent power source, which means there's an abundance of hydro energy in the state of Oregon, and that goes right back to that zero to minimal curtailment. So we have been successful maintaining an uptime of 99%, and it is very cost effective. It's a stable energy cost, which allows us to take advantage of that 5 cents power. So whether you are a self-miner that's looking to have your own operation or a hosting provider that's looking to expand, we do have quite, some great opportunities, so you can reach out to us about that. Now, this also brings us back to the community and economic benefits. We have built such a strong community in Oregon. We have our partners that have built quite a strong relationship with utility companies out there. And they have been able to gain acceptance specifically with hydro mining and specifically with crypto in general. So we have educated quite a bit of people in that state and have gained their approval. So if you are looking, again, to expand, or if you are an investor that's looking to essentially build the infrastructure and have a hosting client come in, we do have that opportunity as well. We actually have an opportunity for 20 megawatt in Oregon with the possible expansion to 40 megawatt. And we already have a contract lined up where the host would be interested in collaborating in Oregon. So if you are interested, please reach out. And again, our mission and goals is just to provide reliable and efficient solutions. We promote sustainable practices. And so get in touch if you would like to learn more. If you're an investor, self-miner, or a hosting provider, please do reach out to us at info@aceminers.io. Thank you so much for your time, and looking forward to working with you all.
Awesome. Thank you for that great presentation. We're going to keep moving along. We got more of these 5-minute segments. So if you want dense information, find a seat right now. Okay, we are going to be calling for Sean Liu of Anan Energy to show up in the back if possible. But for now, we're going to be talking with Yin Jiao Yao of Apis Logic. Welcome to stage. He's going to be talking about PDU and PSU solutions. Welcome.
Thank you. Thank you. Do you have my pitch? Oh, yeah. Yeah, thank you. I come from the Apis Logic. Apis Logic is an American company. I already have the manufacturing in China, but we have plan to manufacture in the US. Apis Logic is an American company. We provide RPDU, track busway, and power code, and micro data center in the infrastructure of the data center. Okay. This one is picture is this picture is show our China production center. Well, our we price 400,000 RPDU each year. It's the largest RPDU in the South Asia, and this one is the U.S. office and the Singapore office. This page is to show our products. It's track busway. It's a very flexible power distribution solution, and rack PDU, and IC locking power code, and plug and socket. We also have a micro data center and edge data center, and we also have another business about immersion cooling. This one is the high power intelligent RPDU. You can see that is have NMC, the controller. We'll have the can monitor and control each outlet. We use a bicycle lighting relay, so we can support very high operation life for the server or high power the miner. This product can reach 200 ampere and 415 volts and 3-phase. Next step, we will upgrade these products to 400 ampere. Another product is our cooperate with Microbit. This product is 3-phase outlet, and we creative using the intelligent circuit breaker to monitor and switching each outlet. Also have a leakage the current function. This product is the game-changing products. We call the rack busway because they use the bus bar transfer power directly. A special design, the plug per plug is 20 ampere, and can locking with PLC set. And this plug can locking with PLC of the server or the miner. Just the solution. It's a very high power and compact size and the cost-saving solution. Yeah, we also can provide customization for this products for everyone. This another solution. Our sub company is S-Top can provide as immersion cooling solution. We're using this phase changing solution and the independent cells each server. We also can provide the liquid, the dielectric coolants. This research and development by ourselves. The polling point is we can customize from the 47 to the 110. And this product is PFAS free. Can using in the US and European. Yes, thank you. If you want to know more about our products and our company, you can welcome to our booth Report's number is 18. Thank you.
Use this. How do I operate this one?
Go.
Which one? This
Awesome. Thanks for that great presentation. Don't go anywhere. We actually have a panel to break up these 5-minute talks in just a few minutes. But first, we're going to bring on Sean Liu of Annan Energy. Welcome, Sean, to stage.
Hello, testing. Hi, everybody. My name is Sean Liu. I'm from Annan Power. Today, I'm going to talk about the high-performance PDUs and the cables for mining. First, a little bit about our company. We are based in Dongguan, China, with an office in Atlanta, USA. We have a team here supporting our North America customers. For crypto mining, our product focuses on power sockets and the plugs, cables, and the PDUs. Especially for sockets, we are the exclusive supplier to Bitmain and the MicroBT for the P13, P14 sockets and P33, P34, as well as the MicroBT, the SA2-30 for MicroBT miners. So we are the only and the exclusive suppliers to those two miner vendors. Before crypto mining, we are a 20-year-old company, one of the largest power connector suppliers in China. We have a full series of connectors, anywhere from 5 amp to 1,000 amp, and 50 volt to 1,000 volt. We have connectors for that. So when the crypto mining industry needed a connector, a power socket that can go above and beyond what the C13, C14 can provide, or C19, C20, those are rated, you are rated for 250 volt, right? So when they need to go to 277 volt or 3-phase to 480 volt, naturally they looked into us to provide a connectors for that. The other option would be a NEMA plug, right? Those are twist locks, but those are bulky and expensive. But we have a UL certified like PA45 connector that's rated at 600 volt and 50 amp. So it's now integrated into the Bitmain S21, T21 for the 6-pin. Again, we are the only supplier to Bitmain for this and its partners. They are knockoff versions of these connectors out there, so be very cautious. Make sure that your supplier, when they build a cable or PDU, use the Annan brand connectors. We built the PDUs with those connectors. This is the 12-port and 24-port version of PDU. They are 3-phase outlets, but the beauty is that they are all both 3-phase T21 and single-phase S21, as well as single-phase S19 compatible. So out of this 3-phase socket, you can get 1 phase out with a 1-phase neutral and ground. Without the cable, you can also plug in a single-phase miner in there. We have lots of different customized PDUs, like with this socket, 21-port smart PDU, 28-port, as well as 36-port running here. So this is our 36-port smart PDU product. You can see how it looks like when installed in the mining facility. We ship thousands of these to US public mining operators. So the circuit breaker is a UL 489 hydraulic circuit breaker in the side. You can see our cable management with clips on the side there for clear cable management. And also it has a main breaker in the front. We can have a main breaker integrated. And this is a summary of the spec. You can see that our PDUs are high quality built with the copper bars from the input to the end of the PDU all the way. And we use UL 489 hydraulic breakers. Some of the cables to go along with those PDU, you can plug in T21, S21, and S19 into there. We also provide cables for like with the NEMA plug as well, C20 to P13. We have a mode for those NEMA plugs too. Going to the MicroBT integration, our SA2-30 connector is integrated into the MicroBT miners. We are the only supplier again for this socket. And we make PDUs with those sockets as well, single phase, 3-phase. This is for the hydraulic rack for micro PD M53 and M63. We also make PDUs for immersion mining. This is a PDU with L16-30R type of receptacles with RJ45 ports integrated. And you can see all these cables that built in our factory. Again, more cables. Of course, we build also standard like C19 PDUs as well, with or without like a main breaker or a switch integrated. This is a picture from our factory floor for cables and the PDUs. So our booth is right there around the corner in that through that door, booth 250. Welcome to visit us and discuss about PDU and cables. That's our contact. You're welcome to add that. And we look forward to seeing you there and working with you guys. Thank you.
Awesome. Thanks for that conversation there, Sean. We appreciate it. Next, we got a panel on stage. So I'm going to bring up Curtis Harris, who is our moderator. He's joined by Tim Sandow of Foundry, Klein Kevar of Core Scientific, Cassandra Divis of Marathon Digital, and Bo Ginn of CleanSpark. We have a lot of hash rate on this panel, so probably worth paying attention to, right, Curtis?
Hey, a lot of hash rate. That's one of the questions we want to try to get some alpha out of this group with. So thank you, everyone, for being here. I just want to start by saying I'm a huge fan of all of your brands. It's my pleasure to be hosting this conversation. I hope that I speak very little and that you all get a chance to share a lot from your amazing insight. But it is always helpful for the audience if we could take a moment and do some basic introduction. So what I'd like to ask is, in addition to who you are, is could you speak a little bit about your role, and then also just take the briefest moment and highlight your brand. As I said, I'm a huge fan, and so give the audience a little bit of insight as to the massive companies that you recommend or that you represent. Because I was raised by a Southern mama, Cassandra, I'd like to give you the chance to introduce yourself first.
Well, my name is Cassandra Divis. I work for Marathon Digital Holdings. We're a large publicly traded Bitcoin miner in this space. We have about 30 energized exahashes online, which is wild considering where we've come in the past couple of years. We operate on 3 continents. We have a great technology stack that we've been really driving into, and yeah, looking forward to growing. I'll hand it off to whoever's next.
Tim, we'll let you say hi.
Hi, everyone. My name is Tim Sandow. I'm the Director of Mining Operations at Foundry. I focus primarily, I've been focused on launching our site operations as a service line of business. And at Foundry, we focus on empowering decentralized infrastructure. We want to provide all the tools necessary to streamline your mining operations and make it easy for you guys to run successful sites.
Klein?
Klein Kezar, Senior Vice President of Data Center Services for Core Scientific. We operate around 745 megawatts, a little over 200,000 machines across 7 sites at 6 states. So, and I help keep the cats herded, so to speak, and keep everything up and running.
You seem like a professional cat herder. That is a lot right there. That is a lot. Bo, I'm going to keep you in the hot seat. So after an introduction, I'm going to ask my first question to you, and then we'll try to move around the panel of questions. But I'd love for you to introduce yourself.
Thanks. Hey everyone, my name is Bo Ginn. I'm the Director of Partnerships and Community Development at CleanSpark. We're a publicly traded company with mining facilities in 3 different states and co-located in another state. We're approaching 20 exahash here at the end of this month, and with large growth plans ahead.
Wow. Thank you guys for being here. The topic is mining operations, and so standard operating procedures. You've all built or parts of companies that have reached amazing scale. There's no way you've been able to do that without standardizing processes. So although we want to touch on several different conversations on this topic, could we start with that basic question? And I will start right here with you, Bo. Could you what it takes to create SOPs for mining operations, and then as the rest of the panelists, somebody else chime in if you hear something interesting, add your own insight. So Bo?
Yeah, sure. So we all know that this space is growing tremendously day by day. One thing looks different the next day, and so we're growing like crazy. So it's critical to have standard operating procedures in place at the facilities. We're bringing on folks who have not interacted with miners before. We're training them. And we've got to make sure that we look at the safety of our technicians, the uptime contributions of our technicians. And really, to do that, we have to have standard operating procedures. We're running 24/7 facilities. So we got to ensure standard handoffs between the technicians and the different management teams. And, you know, without the standard operating procedures in place, you kind of get that wild west thing that, you know, most of us in the Bitcoin space know about, but we're trying to get away from. So it's really been a hugely important thing for us at CleanSpark. You know, going from acquiring facilities from other partners, then you bringing them in to make it operate under the CleanSpark way. We really rely on standard operating procedures, focused mainly on safety. We want to make sure that our technicians go home every day to their families, because we acknowledge that they do work in a, you know, highly dangerous setting, right? If you're not trained and not prepared with the right training and gear and protective PPE, then things can go wrong. So before any of our staff come in, we want to make sure that they're fully trained with NFPA 70E and going through and getting all the proper training that they deserve.
Thank you so much. Tim, I want to keep on the same, you know, question, and just instead of, you know, casually hoping you'd add some insight, we shared before the talk, where, you know, both a little OCD. I wouldn't mind being in a back corner studying my notes. And I think it takes obsessive attention to detail from a different perspective. You know, a huge fan of Foundry. Could you talk from your perspective, creating SOP for your massive scale and operations?
Yeah, absolutely. The way I look at SOPs is like the playbook for the site, right? And I think a site without SOPs versus a site with SOPs is a dramatic difference, right? I like to compare it to sports a lot. I'm a sports guy, right? So having no SOPs is like playing backyard football. Sometimes your teammates are running into each other, the quarterback is scrambling, you don't know what to do. But having that, having clearly written SOPs is your playbook, right? It allows you to go from backyard football to professional operations, right? When your team members can come in and every morning to the site, feel confident, know their role, know their responsibility. Like Bo said, like understand the safety requirements, and have a playbook to follow to streamline operations. So operations is your playbook. It's a necessity. You're not running professional operations if you don't have SOPs. And it's the first thing that we do when we take on a new site, is develop those custom SOPs per that site. There's no copy and paste. There's no cookie cutter programs out there.
Klein, the buzzword I want to use is metrics, but I'll unpack it just briefly. When you're operating at scale, you clearly have to keep track of a variety of things, and so that word encompasses metrics. But in Bitcoin mining, we have our own jargon, the own things that we pay attention to. Would you talk to the audience about what do you keep track of? How do you keep track of it?
Yeah, absolutely. So, you know, when I first came into this space, you know, about 3 years ago, it seems the kind of universal metric was uptime. And uptime is it's very much defined in different ways across the industry. And, you know, just looking at, you know, what is the purpose of what we're trying to do, right? We're trying to maximize our hash rate. We're trying to keep as much hash rate online as possible. And so uptime, in a way, to me, is not necessarily the best metric to judge your success in this space, because the server could be up, but it's got 2 failed hash boards, right? And it's up and it's powered and it's considered up, but it's operating at 30% capacity or utilization. And so one thing that we've done at Core Scientific is we've started to move away a bit from uptime and really looking at the main metric and what our success criteria is as utilization of hash rate. How well are we doing with the hash rate when it's up, as it's up? How quickly are we returning hash rate through repairs? All of these things are key, especially when you're looking at, you know, a hash price of sub 5 cents right now, right? It is absolutely paramount that you keep everything up and hashing as much as possible. And so really the key metric that we at Core have really kind of honed in on is what is our, not only just efficiency, not only just uptime, but the utilization of that hash rate that we have.
I think utilization versus uptime is a massive piece of alpha for this audience to take away with. Cassandra, maybe help tie both of them together. So I was able to learn about your amazing background in your role at Marathon. You've been able to evaluate multiple sites. You're obviously creating standard processes. When you're looking across multiple sites, what are you doing in your role or inside your company to standardize measurements and metrics across your operation?
This is group. Okay, we're
There we
here.
go.
So as we kind of discussed backstage, no two sites are alike. So when it comes to looking at uptime per site, that's going to look differently based on where you're located, what you anticipate for curtailment. So there's plenty of different metrics that go into what your anticipated uptime is. So something Marathon has done to try to standardize this is like a two-dimensional metric, kind of what you were discussing, where like kilowatt hours, we measure hash rate hours. So for example, if you have a site that's 1 exahash, you should have 24 hash rate hours that day. And so we can start to look at that, day over day, month over month, and really measure if we're on track. And that's something that is scalable to all of these different sites, regardless of what we're anticipating achieving.
Sometimes when you're on stage and speaking, you're thinking about the next question. I hope that I could find that video and get a transcript of what you just said. That's amazing. I think we'll be able to use that inside of our operation. I want to give the audience just a little teaser that we're probably around halfway through. We're conference behind. Let's try to keep it going. I do want to end with a question where I just ask you each to be transparent about some operational challenges that you've overcome. But there's actually many more topics to get through before we get there. So I want to turn next to Bo and ask about something you discussed in your lead in about standard operating procedures is training your staff, training your people. Could you, restart that conversation, and we'll ask a few others to chime in. Talk to us about training staff.
Yeah, so training starts day one, right? Actually starts the day before. We bring all of our technicians in, and before they're allowed to go out into the mining environment, we want to make sure that they're getting the proper training. They're going through a standardized course, both on the mining operations tech, where we walk through how to use the appropriate management system that we use, how to run different reports, how to work with the machines, how to repair machines, basic on the site level. By doing that and setting them up that way at the beginning, it makes things run smooth. But when we know that we're moving at light speed in this industry. So, and typically when you bring on big deployments and you're standing up a site, you're hiring a lot of people all at once. And that's a challenge. You're hiring for culture fit, you're hiring for ability, you're hiring for many, many things. And you want to make sure that people fit into the CleanSpark way and that they're going to be able to enjoy what they're doing. So one of the things also, we're operating in different states, primarily Georgia, Mississippi, where we operate in hot weather, we operate in cold weather, and this is an outdoor position. It's not sitting behind computers. It is a labor dominant position. So we like to bring everyone out to our operations before even getting to the later stages of the interview process, just to make sure that this is for them. It's hard work, and we typically want to make sure that people are on board with this kind of work, because you don't typically know what Bitcoin mining is before you really see a site and really get in and see what the technicians are doing on a day-to-day basis.
I love that, bringing an applicant out to see what it is the environment they would be working in. Cassandra, I used the buzzword metrics earlier. Let's use the buzzword grit right now. This is an extremely difficult job. Mining out in the field. Would you talk to this audience about the hard work and level of dedication it takes in order to be a site technician and to run a Bitcoin mine?
Yeah, the site technicians are genuinely the backbone of everything we do. You can sit there and you can, look at your metrics, but what you don't see are teams of people on the ground diagnosing ASICs, swapping the miners, hauling, these are 35 pounds, and the amount of physical labor, that's the proof of work that goes into keeping our hash rate up. And I can recall one of the first times I ever went into an air-cooled container. It's so loud. There is so much like pressure and airflow there. I had my hair tied back as best I could, but I'm not gonna lie, it got sucked into a miner, and that's the story of how I got bangs that year. It just chopped it off, so it was okay. But you know, these working environments, you know, it's loud, it's hot, it's cold. There's a lot that goes into it. And so I just want to highlight that, yeah, it's not for the weak in certain ways. That's why we've also worked on developing, you know, technology that can be more hands-off with single phase and two-phase immersion, where you're no longer in those environments, but it does take a certain level of grit to be on the site every day and to operate in these environments where it's ambient air, you know, summer, winter, you're up against the elements at times.
We got a chance to visit as a group before coming up, and I promise you, all four of these leaders hold in their hearts the value of the site technician. I think we could keep an entire conversation going on that, but we are, you know, 2/3 through. Let's keep the conversation going. Klein, I want to ask you something about, you know, it ties into the research I'd learned about you and your background. You have a long history in traditional data centers, and now, you know, significant experience in Bitcoin mining. Deploying at scale requires some sort of mastery of keeping track of your equipment. Could you talk about asset management? How do you keep track of all of your equipment?
I mean, asset management is hugely important, especially when you're a publicly traded company and you've got to do things like SOX compliance and other things of that nature. And so we actually have a full stack internal software and firmware group that one of my good friends, Mr. Larry, runs over here. And we utilize a platform that we have developed in-house where we can actually keep track of each one of our assets. Like I said, we have over 200,000 machines. Wow. And so when you think about that in terms of scale, my largest year when I was at Hewlett Packard for about a decade, my largest year of server deployments was about 10,000 machines. We do that in a week in this industry. Last year alone, well, this year, I think we've deployed over 40,000 machines nearly this year. And so, you know, with that being said, again, process, SOPs, all of those things tie into not just how you keep track of things, but the method in which your logistics operates, how you are, you know, storing the machines. I mean, that's one thing that you've got to do. It's not just the machines that are up and on the shelf that are running. You've got to keep track of every machine that's on the ground as well, whether that's in the repair center or it's going out to be decommissioned or it's going through our logistics hub to be deployed. And so there's just multiple facets within the asset management piece that you have got to stay on top of, or it can get out of hand very quickly. And the next thing you know is you're failing your audit, and you're having to do a bunch of work on the back end to fix those inconsistencies or address the issues that you may run into. And so asset management, I think, is a huge part of this industry that really nobody thinks about or understands from that perspective.
Thank you. Obviously, we're dealing with somebody who has done this at scale, and sharing your insight to this audience is incredibly helpful. Tim, I want to pose one more question before I get into that last thing that I kind of set the audience up on a little bit. But would you talk about, you know, we shared a story about deploying in the cold. I live in Kansas. You got all the seasons. There's so many factors that you have to face when operating a Bitcoin mine. How do you keep it operational, from even like keeping it clean to cleaning air filters to upkeeping a site after it's already deployed? Could you talk about infrastructure and site readiness?
Yeah, absolutely. So infrastructure, I would encourage anyone in the audience today who's a decision maker in their company or who's considering building out or operating a mining facility, right, is to first turn their focus on the infrastructure, right? When I say infrastructure, I mean the physical infrastructure of your containers, your transformers, your electrical panels, electrical wiring, right? I always joke, and I'm going to be on a roll today because I'm going to use another sports analogy, but I always joke about, being an operator and being given the right tools, right? I could be the greatest NASCAR driver in the world, but I will never win the Daytona 500 in a Ford Focus, right? So you need to look at how your infrastructure looks, and what tools are you providing your operations team in order to be successful, right? Sites where we see the highest uptime have the highest quality of infrastructure on those sites, right? Great containers, great transformers, great panels, proper distribution. We see that now, especially as the new miners, are coming online that require, new PDUs, new power density, higher wattage, right? A different shape, right? We're seeing infrastructure take a big role in the space. Really, for the first time, I think it's coming out as a primary focus, right? It's not just on finding cheap power and getting some, people in the ground to run it. It's about making sure that people have the right tools. As it gets more competitive, as hash rate difficulty goes higher and higher, I think infrastructure, Curtis, is going to play a big role on efficiency and on operations.
Amazing. My role here is to bring value to this audience. And one of the things that I lean on is like giving your best stuff away for free, being transparent. And so, we are coming close in time. So I've avoided, running down the line with the same question, but I do want to give each of you the chance. I would really like for you to be transparent with this audience. Give them something that where you, and, Bo, I'm going to start with you. Give them something where you've faced an operational challenge, and no one likes airing their dirty laundry, but you've faced a challenge and you've overcome it. Would you be able to share an example with this audience?
Yeah, sure. So the first thing that comes to mind is minor repairs. And on the site level, miners go down, fans go down, power supplies pop. You've got to replace those. So we typically do a lot of those on site. But then when the hash boards start to go down, earlier on, you're sending those out. We were sending them out to third-party repair facilities, and I'm sure many of you have seen, we do typically have some long turnaround times, and that means a miner off the shelf, a miner not hashing. So we internalized it. We developed our own internal repair teams. We built a high state-of-the-art repair lab at our facility in Norcross, and are in the process of continuing to roll that out to our individual facilities, where we'll be doing chip level and board level repairs at the facility level. So, our technicians have come a long way. We've hired from the outside. We've brought some in. And, it's a great program. We've realized tremendous cost savings, contributed significantly to our uptime, as well as created these high-tech jobs in rural communities where we're building out these repair centers.
Jobs. Let's remember jobs is crucial. Tim, I'll come to you next with that same question. We're all miners. We might have faced the same issues and overcome them differently. So even if your thoughts are similar, would you share an operational challenge you faced and how you've overcame it?
So I was thinking about that question when you asked it, Curtis, and I think, truthfully, one of the biggest challenges in operations, especially for operations as a service business like we do at Foundry, right, is overcoming the challenges that you're going to face, right? We just talked about training and SOPs and infrastructure and understanding, hash rate and uptime performances. It's the things that you don't know, right? It's the things that come up on a day-to-day basis that you have to deal with and be willing to adapt quickly and change to. It comes down to a people-first business, right? Operations is about people, right? Most of our day-to-day and our P&Ls are primarily focused around people, right? Do you have the right people in place? Do you have the right management above them to be able to quickly troubleshoot and act directly when problems come up, right? So it really is the challenge of facing those challenges and adapting to those challenges, and having the team around you to be able to move and understand it quickly. I mean, I was just on a phone call before this with one of our sites in Texas, right? And you would think they would talk about all kind of complicated operations topics and go over all kind of, crazy details. But the first thing they told me is that there's a cat in our facility and it had kittens. And I'm like, I don't have an SOP for that. So let me get back to you really soon. So it's being able to think on your feet, and understand that there is going to be things that come up and you need to be ready for all the things that you can predict so that you can react to what you can't predict.
I love this. Jobs, people first. I didn't know cats were going to make the list. You guys are really sharing good information. Klein, I'll come to you. Cassandra, we're close to wrapping up. I'll ask you to close us out. Klein, would you answer the same question for the value of the audience?
Yeah, absolutely. And I have all kinds of animal stories as well. I'll take your cat and I'll raise you a bobcat. We also had a raccoon short out an entire facility one time. So, but you know what? And that really goes to the point that we are not located in what you would call technical mecca hubs, right? We are distributed in some of the most rural and remote places all over the US. And, you know, really going back to the SOPs, the training, all of these types of things is that we have to generate the training and the experience and that talent in-house. We don't have another choice. This is a brand new industry for the most part. You're not going to go out and find somebody with 10 years of crypto mining operations experience because it just doesn't exist. And so, you know, with that being said, I think really the biggest challenge that we all face is that we have got to make it work ourselves. There is no already set playbook. We are developing the playbook every single day. We are iterating on those processes. No two sites are alike. You know, we were just talking backstage. When it's negative 40 degrees in Grand Forks, all of my technicians want to work in the hot aisle, right? Because it's only 2 degrees in the hot aisle. However, when it's 120 in West Texas, nobody wants to work in the hot aisle. And so there's a lot of nuance as we go through these sites where foundationally there may be a lot of similarities in that these same 4 screws are going to come out every time I take off this fan. But there's so much more after that you have to take into account, from environmentals to your operational capabilities at each one of these sites, that really one size does not fit all from a process perspective. And a lot of times, even from a training perspective, your training's going to differ just a little bit site to site. So it's being able to set that foundation, standardize where you can standardize, but then always with kind of that iteration in mind. Constantly iterating, constantly improving, and really utilizing that talent and that knowledge on site to influence those processes that me sitting in my office, I may not realize or know.
Thank you very much. Cassandra, I'm a girl dad. I've got 5 kids, 2 daughters at home. My background was construction, a heavily male-dominated industry. As I saw female leaders rise in construction, it made me so happy that my daughters could see that just in the Bitcoin mining, a heavily male-dominated industry. I just want to celebrate female leadership, executive roles. Thank you for your leadership in Bitcoin. It's inspiring to my daughters. I'd like to give you the chance to wrap up. I think we're close to being over time. Would you share, for the benefit of the audience, an operational challenge that you faced and how you overcame it?
Absolutely, and thank you. I'll keep it pretty short here because we are running short on time. But one of the things that I think we're probably all aware of is that this is a rapidly changing environment. So it really just comes down to focusing on the things that you can control. And there were things that Marathon was doing, outsourcing to a third party, like logistics and things like that. And those were things we realized we really need to bring in-house. That creating our own ways to manage our fleet, when you're always relying on third parties, it can be really challenging when you have to adapt quickly. So you have, bringing things in-house and then always having your plan A, a backup plan, and a backup for your backup, because things will change. And we have seen it time and time again in the past couple of years in the mining space. So I'll wrap it there.
The lights are bright. Would you let them know you appreciated their comments? Thank you.
Awesome. What a great panel. Thank you so much all for joining. Again, a lot of hash rate on stage. So the proof is in the pudding, as they say. Curtis, thank you for managing that as well. Let's bring it back to our startup sort of rounds. These are 5-minute presentations. They're pretty quick. We're going to bring up Rong Fu and Logan from Beamazon to be discussing Bitcoin mining, how to mining operations. Welcome to the stage, Rong and Logan.
Thank you. Thank you. Hope you already had a great lunch. So today our topic is how to optimize your crypto mining operations. And then the first answer that will be choose Amazon, choose us. We are the Amazon for Bitcoin. So we do everything. We do the hosting and also we do the operations. And also we do help to do the mining facility constructions, and also we do have a repair center back in Oklahoma City. Yep. So go to next page. Yeah, so what we do for the communities, so we work really close to the local utilities and also cities, and then we try to develop the local jobs and then to hire the local employees and then teach them how to repair and how to operate and manage the digital assets. Next page. So our mission right now is we're trying to manage the large scale, the Bitcoin business. And also we are also looking for the new hosting. So if y'all have the power or the land is ready, feel free to talk with us on the booth number 60. And then we're glad to see if there is a future cooperation we can do together. Here's some picture about our facilities. Right now, we have 4 hosting sites within the United States, and we have 2 in Oklahoma City, and also Atoka. We have another one in Kentucky, and then last but not least, we have a new one. It's currently running in Alabama. And Logan is here. He is our site manager and also the site director, and he will introduce us some more information about our hosting sites.
Hello, like she said, my name is Logan. I'm going to give you guys some information on all of our hosting sites. So first off, let's get here. So this is our Frontier site in Oklahoma City. It currently has 7,000 miners running right now, and about 40 gigawatts or megawatts worth of power, but it can be upgraded up to 90 megawatts. Next up, we have our Atoka site in Oklahoma. It has over 5,000 cooling machines. Both Oklahoma sites are hydro cooled. However, our other sites are both air cooled. This site, I'm actually the Kentucky site manager, the on-site manager for our Kentucky site. We have around 4,000 active miners. They are all air cooled, and we have very good rates at these sites. This site in particular has around 18 megawatts, and then our last site is in Alabama. It is also air cooled, and it has a power capacity of 22 megawatts and has around 5,000 machines. And I'll let Rong finish up for us up here.
Okay, since the time is running, I think that's it for today. And then let's go to next page. And then feel free to like I said, to visit our booth. So we have some like gifts for all of y'all, and our booth number is number 60. And also, if you have any questions, if you want to like do the future cooperation with Amazon, feel free to send me the email. That would be rong@bamazon.io. And we're also currently we're hiring the on-site managers like Logan, and also we're hiring the operation assistants. Feel free to shoot me the resumes. And thank y'all so much, and hope y'all have a great rest of the day. Thank you.
Thank you, guys.
Okay, everyone's been waiting for it. It's the guy with the brains backpack. You can mine Bitcoin while walking around your hometown. Put your hands together for Christian. He is the CMO, the Chief Propaganda Officer for Brains.
What's up? My name is Christian. I'm a Chief of Propaganda at Brains. Brains is a software company based in Prague. I'm going to keep it very short. Mining is very, very difficult. We all know it. Mining is the most brutal cutthroat industry on the planet. But we wanted decentralized money. We wanted the best money ever invented. So we know it's going to be a lot of effort, a lot of pain, and a lot of time. So I know it's pain, but maybe at Brains we can soothe your pain a little bit, make it a little bit less painful. So it's all about education, education, education. So let me use this time to shell. We have books. If you come to our booth, we're gonna give you a free book. There's no strings attached. I'm not a communist, but this is sort of free. You'll pay in the time spent 10 seconds talking to me. So it is paid. And they're all for free download on our website. So go to brains.com/books, download the books and get educated, because out of statistics, just 1/3 of you sitting here use custom firmware. If you think about it, 1/3 of you is making more money, 2/3 of you have no idea how to make more money, and it's as easy as installing custom firmware. So mining sucks, it's painful, but there are ways to make it easier for you. Come talk to me. And by the way, I just want to flex. So this is a mini miner, Brains mini miner hardware. It's running off of a battery. It's mining via Stratum V2 connected to Brains pool via GSM module. So I don't know, it's just for fun. Come say hi to the booth. Ciao.
Christian's my favorite, by the way. Really funny guy. You should go check out the Brains Twitter account. They put out a lot of great content of not only Christian, but other team members on the Brains team doing silly stuff like mining Bitcoin from a backpack. We're going to keep it moving along. We're going to be talking with Lena Dong from BT Miners next. Welcome, Lena, to stage. Again, this is 5-minute presentations, so we're moving along. If you are joining us for one of these 5-minute presentations, please feel free to join us in the back. There's a bunch of us back there. We'd love to talk with you before we bring you up on stage. So again, Lena from BT Miners. Awesome. Lena, here you go.
Hi, thank you. And where's the, where's the, it's not here. Thank you. Hi, everyone. My name's Lena. I am with BT Miners. And we are a company that does hardware sale, hosting, repair, and so pretty much everything. So that's the content about us. Brands we support, repair, hosting, and why people should choose us, and what our plans for the future is. So our background, we started in this industry a bit later than most other companies. We started back in April 2021. We opened our first office in Shenzhen, China. And then we progressed fairly quickly after that. We opened our newer office the same year. And then we became one of the first vendors that provides actual support for consumers. We were the first ones to actually allow people to call us, and we'll actually pick up the phone calls. And we have free tech support sessions where, because we're trying to promote crypto and crypto mining, so we have free consultation sessions where people can call just to ask random questions regarding crypto. And then 2022, despite the whole crypto winter, we actually expanded and started our hosting services. And then January 2023, we started our repair center in New York. And March 2023, we became the warranty repair center for Gold Shell's US customers. And so we basically started at the tail end of the last bull run, and we survived the crypto winter, and now we're expanding again. So these are all the brands that we support, which is pretty much most of the major manufacturers' miners. So yeah. So on the repairs, so as I'm sure you all know, miners will break down and just typical wear and chips can fail, and so we provide repair services. And even before repair, a lot of clients actually do not know what is wrong with their machine. So what we provide is free consultation session where people can just come and ask us, maybe it's just a new firmware update or a hardware issue. So we'll actually consult and tell them, hey, you need to send it in for repair or not. And then hosting, we do have a hosting service, and it's a fairly big place. And we have our hosting service in upstate New York, where it's cool, and we don't have any curtailment in our area. So that's the benefit of hosting with us. And then YBT miners, we have a wide variety of payment methods that we support. And then we have quick updates of crypto prices. We are the one-stop shop, basically, for everything from repair to hosting to getting your hardware. So it's just one phone call to get everything done. Yep. And so one of the other benefits is we have one of the best customer services in this industry. And in our future, we are partnering with CoinPal to expand the utility of crypto. Basically, right now, a lot of people trade crypto, but there's not a lot of option to make payments with crypto. And our partnership with CoinPal will allow more stores or more e-commerce companies to start accepting crypto as payment. So you can pay with most altcoins, and we'll be able to CoinPal will be able to convert the payment to USDT for the company. And that's pretty much it. Thank you.
Awesome. Thank you for that presentation. We can just leave that on stage. We have Dr. John Yang of Cipher Power now. He's the president. He's going to be talking about a brand new generation of mining opportunities under 17 joules per terahash.
Hello, everyone. Thank you to be here. So today we are going to give a presentation about what's the brand new generation of mining opportunity and our service promises. So recently, Bitmain just released a new miner. It's just 12 G per terahash. So this new era is coming. And first, I want to introduce us what we are. I'm not from Shenzhen. We're based in Boston. So I started. We started like an IT and gaming hardware company in New Hampshire in 2013. So from 2017 to 2021, we will work on the GPU mining for experiment. So 2021, we started to work on the ASIC mining, and right now we are the official Bitmain repair center in Nashville, Tennessee. And if you ask why we choose Tennessee, let's look at the map of United States. So we can see 80% of U.S. population is actually on the east side of Rocky Mountain. So Tennessee is right at the center. If you can see in the mining, the U.S. mining map is like 14% from Texas and a lot of them from Georgia, and Kentucky, and also New York. All of those mining farms, the big mining farms, they are within like 10 hours radius from our repair center in Nashville, Tennessee. So we have like we are the same. We have a very good logistic advantages. So it's going to save you money and going to save your time. So that's our facility. We have a 7,000 square foot repair shop and warehouse in Nashville, Tennessee. So next month, if you are going to BTC 2024, so you're welcome to visit us. And that's our team. We have a team both located in Boston and Nashville. So our headquarters is in Boston. Nashville is just for our repair center. So we have been, in this business for a while. So it's so in this business, trust is very important. So you can trust us for our service, and also we do buy and sell used miners, and we also import brand new miners from Hong Kong. Because we are the official repair center, so you can trust us. You will get the best service. And that's the business range we are covering. Like we do repair a whole bunch of different variety of model of the miners, and also we do liquidation. If you have used miners you want to get rid of, come to us. And if you want to buy miners, you want to export to different countries like Africa, South Asia, and South America, we can also help you on that. And if you ever get a miners from us, we are going to guarantee you to, we will do the inspection and repairing to guarantee you have the best miners you want to have. And also, our quality control is pretty good. And so we are also, give it a good chance to have the best miners, the newest miner you want to have. If you are looking for, just last week, the release of the L9, L9 is the best Dogecoin miner so far. So it's very hard to get, but if you want to get it from us, we're going to help you out. So, and that's about me. If you look at this picture, this is an AI generated picture. Doesn't look like me, right? It exactly look like me. So we are also the GPU distributors. So we work with the manufacturers. So if you want to buy H100 or other GPUs, you can also come to me. Okay, so that's it. Thank you very much.
Awesome. Thank you for that. We're going to bring up Eric Sonner of Data Airflow. He's the president. He's going to be talking about doing it right the first time.
Hello. Do you have the clicker thing? There we go. Hi, I'm Eric with Data Airflow. So I've been in this space for since 2015, the crypto mining space, helping ventilate and cool off mines and helping people out. I've been in the industrial ventilations for about 20 years. Work on, I'm from Idaho, and we do a lot of potato stuff there, processing plants and ventilation systems. But doing it right the first time is important for for you guys to make it through the rough and times. You do it. If you have to go through and do it again and redo it again because it doesn't work right. So I'm gonna, and I changed my slides, so I'm gonna skip through some of them. I'm gonna skip through that one. Okay, so planning it out, doing it correctly, it's so important, because if you don't, this particular site was in North Dakota. I went out there to help a gentleman in February of 2019, I believe. It was really cold outside. It's 20 megawatts. I was going to help him fix because he didn't have the correct ventilation system. And then I get a call a week later when I was trying to get the stuff shipped over there, and this is what it looked like. So the whole site burned to the ground. So it's really bad and not good. And another thing, if you're going to go into the HPC and AI space, you have to call the right people. You have to engineer it. You can't just blow fans and cool it off. Nobody's going to stick billions of dollars of GPUs into your mining facility. You know, so let's see. You know, ventilation, your dry coolers, you know, all that stuff. Controls can save you money and time. Just a simple control system will help solve your problems with, you know, filtration plugging up too much. Your systems aren't having the right temperature fed to them. It's too cold, it's too hot. So controls are really important. Filtration is really important. Picking the right filtration. Noise. I've had a lot of issues with people that just throw it up wherever, and the noise is a big problem. So, yeah, I'm just gonna skip through this. So yeah, if I'm in booth 50 while it still lasts, if you guys want to come, you know, I can kind of help. I'm good at helping fix things. So anyway, thank you.
Awesome. Thank you, Eric. Definitely take a check of this QR code and go and check out their booth. Steve from DM8G, you ready? You feeling good? Here's your clicker. DMG is one of my favorite teams out there, by the way. You guys have some cool ordinal stuff they're working on. I don't know if that's what you're talking about, but good guys at DMG. Take it away, Steve.
All right. Thank you, Will. My name is Steve Eliscu, COO of DMG Blockchain. And today I'm going to talk about enabling a carbon neutral Bitcoin ecosystem. That's something we're, of course, all interested in. And let me tell you how we are going to do it. So first, unlike most of the other companies here, we still have a startup mentality, but we're actually a public company. So we will be making forward-looking statements, and certainly appreciate you understanding that. So DMG, let me tell you a little bit about our company. We're split into two pieces. We have our core mining business. By the end of July, we expect to be 1.7 exahash from about 1 exahash right now. We use carbon neutral energy as our energy source. And that's part of this ecosystem. But what we also have is a business we call Core Plus. This is about software and services for monetizing Bitcoin transactions. So how do we do that? We have an ecosystem. Think of it this way. We generate blocks, and then we fill those blocks. We generate blocks as a Bitcoin miner, and we fill those blocks with transactions from financial institutions and content creators. Financial institutions want the option to be able to send Bitcoin without adding carbon and without commingling with bad actors. Content creators want the option to be able to add content without adding carbon and to be able to utilize the 4 megabyte real estate of each Bitcoin block. We're able to enable both of those. And specifically for the financial institutions, something that we created early this year that we've talked about that was really a missing piece on the financial institution side. Financial institutions need a custodian to hold Bitcoin. So we created Systemic Trust, which we expect to have our qualified custodian license before the end of this calendar year. So TerraPool, the whole idea with TerraPool is not necessarily to be the biggest pool. We are the first carbon neutral pool, but we want to be able to be big enough to reliably generate the real estate that the ecosystem needs for those who want to add transactions to the Bitcoin blockchain without adding carbon. So in terms of what TerraPool is about, first, it's about being able to generate green Bitcoin. Provenance comes for free in the Bitcoin blockchain. So given that a Bitcoin that is created can then be tracked utilizing what the ledger gives, that those who are mining on Terra Pool can in turn receive green Bitcoin. We hope that over time, green Bitcoin will command a premium. As a pool, we're FPPS with competitive fee structure, but on top of that, we hope over time, such as we have with the announced collaboration with PayPal, that customers will be able, clients on the pool will be able to share in the revenue from the unlock bounty in the case of PayPal or with other opportunities. We expect to have SOC 2 Type 2 compliance later this summer. We're utilizing top enterprise-grade infrastructure to ensure the availability and reliability of the pool that you would expect. And finally, as a pool that's really a pioneer, your voice matters. So we want pool members to give us input how the future of the pool should evolve. So with that, please, if you have an interest, we would certainly be glad to talk to you. Come to our booth, booth 38, just over here, and we look forward to speaking with you. Thank you.
Awesome. Thank you for that presentation. We're going to keep it moving right along. There you go. That's great. We're going to keep with these 5-minute presentations. We have Tommy Walker talking about Bitcoin's not going to make you rich. It is a tough topic.
There we go, man. Hello, 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 everybody. Yes, clicker. So, that's me. Yeah, so thank you for letting me speak. That is the laser. All right, let's do this. Boom. All right. So, who here mines Bitcoin? If I can't see. We got one guy. All right, that's fair enough. Fair enough. All right, we're doing it. Who mines altcoins? All right, this is a few more. It's fair enough. You as well? That's nice. Getting in early. Yeah. So, so obviously the main question that we always get is like Bitcoin or altcoins. It seems to be like the big question of what you should do. And I guess it's like Apple and Android. Like you like what you like, and sometimes there's not really any specific reasons for which one you personally choose. So yeah. Let's get into it. The reason why I guess Bitcoin won't make you rich. That's difficult topic. But I mean, the first thing that comes to mind when you're trying to compare like Bitcoin and altcoins is Ethereum. So I guess that was the first example. I mean, yeah, I remember people selling Ethereum for like $15. That's insane, obviously. We're not talking about like FOMO because you never know what's going to pop, and I guess you can't base it on that. I mean, historically, Bitcoin's dominance in mining power has always been impressive. I mean, before Ethereum's proof of stake, we saw more and more miners choosing different altcoins, and now the market situation is that Bitcoin still remains like the leader in mining power, and its share of the overall market continues to decrease each year, which is quite interesting. I mean, if we go into the still on the same. If we go into like the profitability comparison, as you can see, I'm going to use the laser. Boom. All right, we got. I mean, why is this happening? Why is the overall mining market continues to decrease for Bitcoin? Like, what is the reason for this? I mean, it's obviously the first and most expensive cryptocurrency that we have. I mean, obviously people want to mine the most profitable and the most valuable asset. I don't need to explain how or why that works, but yeah, when a miner chooses which coin to mine, they look at the profitability of the mining process itself. I mean, not just the price of the coin. So if we look at the profitability of Bitcoin, it tends to decrease, unlike altcoins. So as an example, like one L7 ASIC for mining Litecoin and Doge generates as much as 2 S21 ASICs. I mean, that's just facts, and that's just one example. Obviously, there's a lot of altcoins on the market, each with different profitability. And the main thing to remember is that mining is still alive. And obviously, when people are kind of coming into it and saying, is it too late to get onto the mining phase? I say that it's never too late. I mean, they don't usually believe because everyone believes that it's a bit too late to get into it right now. But yeah, I guess the answer is always changing. I mean, we look at AI mining, for example. That's kind of coming in now, and we're at a stage in AI technology where large capacitors are needed for the development of neural networks, for example. And considering the trends in AI, especially ADI, soon there'll be loads of tokens that will work as rewards for miners, for example, for who direct their power to neural network computations. So we are EMCD. That's us. We do actually have a booth as well. We're just over in the corner next to the food. So I guess you can come and chat with us as you get some food as well. It's like an extra bonus. But yeah, we did have some sweets. They got destroyed over the night. I'm pretty sure the workers here had them all, but I don't know. We decided not to hide them, but we came back to an empty bowl this morning. So unfortunately, there is no sweets left for everyone. But we've got some cool stickers, and yeah, I'd love to have a chat if you're interested in mining. We are a mining pool at heart, but we also just love crypto, so I'd be open to a chat about anything, really. And that is my time. My name is Tommy. And yeah, I'm over there if you want to chat. Thank you.
Awesome. Thanks for that conversation. We're now joined by Jürgen Weithera of Farm God. He's a founder and CEO. We're going to be talking about some critical insights concerning.
Hello, beautiful and amazing human beings. I joined in all the way from Europe, Austria and Germany to be precise. Yeah, it is all about critical insights that drive the industry forward. I had a great pleasure in the past years, starting in 2017, to collect lots of insights, working together with awesome people in the industry. It's like Sailor would say, there is no second best industry. I think you agree. I was able to collect information and insight working together with firmware developers, ASIC manufacturers, pools, and awesome individuals. So really pleased to be here. I should have been here like a couple of years ago, as Michael and his amazing team invited me a couple of times, but never worked out. So here I am. We build monitoring and management solutions for Bitcoin miners. I think it's good to have some more competition, although competition is not necessarily, I mean, we are a family, right? We're all here for the same thing. We want to keep pushing Bitcoin forward. We all fight for the same thing. So what we focus on is we try to unite tech and finance in one platform. What do I mean by that? We all know that technicians have their tools, like they use Foreman, great tool, BTC tools, but finance is using other tools, and occasionally it's a little bit difficult for them to find some common ground. So we are here to help out in that regard. We do stuff like create human readable data, like so that the finance guys don't need to bother about RPM values, but rather see a percentage value when it comes to fan speed, for instance. We go really technical details of single ASICs, even though you might scale to 250,000 machines. We believe every single ASIC is important. Every single chip is important because every single chip is collecting precious Satoshis. So we really go in hard on technical details. Like, it's interesting to see how many chips are online, but like everybody knows a car has 4 tires. Yeah, self-explanatory. But barely anybody knows how many chips does a specific model have. And we know like MicroPT has an M50S, but there's like 70 submodels. So what we do is we base everything on a compatibility database. We carefully inject every device into our system, so we can harness really all the technical details, like how many chips should there be online? or how many boards should there be online. It's a very important information to gather really critical insights that optimize the operation. On the other hand, since we try to bridge the gap, even if sometimes it's just a tiny gap, we try to bridge the gap between tech and finance. So we also have all the important and interesting things from a financial perspective in our tools, which means you can monitor the cost to operate as well as the estimated rewards, which also includes the transaction fees, because we all know they play a much bigger role, and as the days go by, they will just play a bigger role. So we monitor and visualize everything in that regard. You can see everything from what is the current profit margin in percentage, what is the profit margin when it comes to cost per kilowatt hours, what are the break-even points, and so forth. So I think we really drive that to a nice point here. And we're using Grafana to do all of that, because Grafana has become an industry standard that is really, really nice to work with. Many of you probably already have been working with Grafana. If not, I really suggest you take a look at it. It's really easy to work with, and instead of building plugins that don't bring the people closer together on one table, our aim is always to bring them together in one platform so that they can sit at one table, look at the same data, find some common ground, and yeah. So our solutions are available as an on-premise, private hosted, and cloud. The cloud has been released as a free access version. You can check it out at our booth. We have a quick start guide. Feel free to stop by. If you have any questions, just let me know. So here's wow, 5 minutes are really fast. Here is the QR code. Feel free to scan it. It makes it easy for you to sign up. If you have any questions, just stop by at our booth, and yeah, enjoy the rest of the show. Really happy to be here. And thanks to all my clients and people that provided amazing feedback. I love you all. Really, let's keep pushing.
Awesome, great job. There you go. Okay, next we have Vincent Hong of FBox. He's a sales director. He's going to talk about the intelligent and adaptive, efficient solutions for extreme climates and eco-friendliness. Welcome, Vincent.
Thank you. Hi, I'm Vincent from FBox. Today I'd like to make a discussion about the greener mining, since I've been hearing about it a lot recently, like in Austin and Vegas. They're mostly focusing on energy generating and trading. It's all very exciting. But have we considered a more direct approach, like the consumption part, to making the Bitcoin mining process itself greener? Okay. Now, many of you might already know that the cryptocurrency mining consumes between 120 to 240 billion kilowatt hours annually, and that's a lot of zeros. This famous chart shows that in 2023, about half of the energy comes from renewable sources, including hydro, wind, nuclear, solar, and as always, others. While traditional fossil fuels takes the other half, which is pretty surprising, as this is a very new industry and it's already much greener compared to the global level of around 30%. So what is our goal? Is our goal to increase the proportion of green energy in mining to nearly 100%? Certainly, yes, actually. I mean, this is a stupid question, right? Why not we keep improving? But is this our final goal? No. Our final goal is to exceed 100%, to go beyond 100%. Don't be surprised, but actually I'm pretty good at doing my math. I'll explain why and how, and let's focus on the green part. While increasing the share of renewable energy of the input side, we can also adopt methods that help us surpass this target on the consumption side by using wasted green energy, lower cost and reinvest, and green energy, cyber storage, and transmission. I'll explain further. The generation of green energy and the demand peak of the power grid doesn't always match. In this situation, wasting some wind and solar power is more cost effective than storing them in batteries. Actually, this is what we are doing now by wasting this part of energy. If we use this otherwise wasted energy for mining, we'll save a lot of energy for developing other industries, cities, and our communities. In this way, we gain what I like to call green energy credits. And there's something even better than that. With this solution, energy companies can sell otherwise unusable energy, and miners can obtain this green energy at a lower price. It is a win-win. This helps both power plants and miner generators generates extra profit, supporting and bringing more investment to the green energy industry. Hence, we gain even more green energy credits. However, there is a little scratch. Due to lack of stability, the economic viability of renewable energy mining has always been questioned. See, the road to success is not always smooth, right? But the good news is we now have solutions. FBox dynamic mining. Based on the weather, power supply, system temperature, Bitcoin value, FBox all-Serrano intelligent management system can control each container, each PDU, and even each miner's work. Mining to maximum real-time returns by keeping the eyes on every miner. It also ensures a high uptime rate around 98%. Our world-leading system applies stable use of unstable green energy like solar, wind, and tidal, which ensures continued investment and returns in renewable energy mining. This is not just on my slides. Actually, FBox has just designed and developed our first solar mining project in the desert using our FBox A40, the 1 megawatt smart cooling system. We have finished the first phase in the project recently with larger second and third phase underway. We're also working with our partners for further developments. Let's move back to the green mining. What else we can do? As we all know, green energy rich areas are usually far away from utilization ends. And the cost of grid peaking adjustment and the loss of long distance transmission and storage is very high. Therefore, during the supply energy period, during the surplus energy periods, mining locally to consume it and generate value and profit on site will be a good idea. It's just like eating the fresh food right beside the tree, right? No more transport and no more storage. So mining on site can be seen as a large-scale storage solution. Energy turns to Bitcoin directly next to the power plant to apply zero-cost long-term storage and zero-loss transmission and trading. Kind of like you're sending an e-gift card to your faraway friend instead of bringing the gift from San Francisco to Miami. Well, I do hope I could do that to my luggage, though. Beside the intelligence, dealing with the extreme climate is energy rich. Okay, it's energy rich. So this is our solution in the Middle East. As you can see, it is pretty stable, even when the temperature is 45 degrees Celsius, which is 113 Fahrenheit. So looking for the future, we're working on the greener mining and also with our indoor integrated warehouse mining solution for data center also.
Awesome. Thank you so much for that conversation, Vincent. We're going to move right ahead and bring up Austin Childress of ASIC Repair Parts. Austin is the co-founder of the ASIC Mining Operations and works a lot on repairs. Welcome to stage, Austin.
Howdy, howdy. How's everybody doing today? Yeah, so today we're going to be talking a little bit about operations, maintenance, and repairs. It's one of the biggest facets in the mining industry. It's also something that there's unfortunately not many technicians to handle the kind of workload that's out there. So mining operations requires a lot of knowledge and also requires a lot of maintenance to create good uptime as well as efficiency. There's a lot of labor challenges right now in this industry. There's a lot of lack of experience. Most of the experience is actually overseas. So I've been going around trying to train the workforce. So another very important thing is controlling your environment. Now, of course, a lot of this is based on your current setup. So setup is definitely the most important when it comes to your mining operations. From there, we're going to be talking a little bit more about operations itself, as well as maintenance and repairs. So ideally, we want to control the environment as best as possible. We want to make sure that we have good airflow. We want to make sure that we have good humidity. Humidity is not too high, not too low. We want to control things like particulates to prevent corrosion in general. There's lots of other firmwares and softwares out there that can help with this kind of stuff. And same thing with monitoring softwares. I just saw one up here right beforehand. But basically, what's very important is having really good SOPs for your business and your operations, making sure you know what to do, what not to do. So ideally, we want to prioritize maintenance. If we do proper maintenance in our operations, we can make sure that our miners can stay mining for a longer period of time without them failing on us. We also got to make sure that we have a proper load balance. That way we don't have a fire occur at the facility. We also want to make sure that our system health is very healthy. We want to make sure that our hash rate is up. Of course, that's pretty much the bottom line. Doing our regular maintenance, we want to make sure that there's not particulates built up, bugs getting into the filters, filters clogging up, not changing the filters out on a regular basis, that kind of thing. Now, it also, as I was saying, depends a lot on your system that you decided to build out, whether you did hydro, whether you did immersion, whether you decided to do air cooling. But in essence, they all have very similar systems. Just got to make sure that the ASIC chips cool, don't get overheated. You might got to make sure that there's no particulates and ideally no corrosion. So we want to make sure that we're doing a scheduled maintenance. A lot of people push that off. Their filters get too clogged. There's not enough airflow in the system. Their miners overheat, especially during the summertime. And if we do this on a regular basis, we can verify what's going on in our mine, what we need to do to upgrade our mine to make sure that we have a better system into the future. Now, if you don't have a very good operations, if your maintenance isn't doing too well, you'll start to have more and more hardware that fails, and that's when it moves on to repair. So we have to make sure that our miners are in a healthy condition. And if they do fail, we want to make sure that we replace it or fix it as fast as possible. So ideally, you're going to need some skilled technicians for this kind of work. Operations a little easier, then you start getting into maintenance. I mean, changing filters can be pretty easy, but when you're starting to go through the kernel logs, checking the miners, seeing what's going on with them, reading the monitoring software, we got to make sure what's going on with our units. Pull units when we need to pull them. If there's certain units we might be able to leave to hash longer, you just got to know the difference between the two. But ideally, we have hardware replacement. That's the first level of repair. That's where you just swap fans, power supplies, control boards, that kind of thing. From there, we get into the hardware repair, which is like component and board level. Ideally, there's a big shortage of these kind of technicians. So here at ASIC Repair Parts, we are a support company. So we're out supporting all the other farms around the world. I've trained facilities like Bit Farms, Marathon Digital, even Kaboom Racks is here. I've trained quite a few facilities in how to do regular operations, maintenance, all the way down to hashboard repair.
Awesome. Thank you for that presentation, Austin. We're going to keep moving right along with another presentation, this time on Bitcoin L2s. Brett Wags of Goat Network, welcome to stage.
Thank you. Good afternoon, everybody. I am Brett Wags. I lead growth at Goat Network. We are a Bitcoin Layer 2 solution. And the question that I've been getting a lot this week is, why is a Bitcoin Layer 2, come to a mining conference? And the reason we're here and the reason, we see our solution as, the solution that is, the future, is that we are looking for miners and, Bitcoin institution holders to, earn sustainable revenue on their Bitcoin. And I know that that doesn't resonate with, everybody who sees, BTC as a proof of, or a, stable, but, that is our mission. So we are the first ever Bitcoin L2 to share network ownership and mining rewards via our decentralized sequencers. So our Bitcoin L2 is powered by ZKVM, which enables native security from Bitcoin Layer 1. Each sequencer node operator helps secure our network, earning sustainable yield on their Bitcoin. So, our goal is unified liquidity and unified liquidity with Bitcoin. So our L2, hopes to solve that. So with our decentralized sequencers on Bitcoin L2, they produce blocks and transactions for Bitcoin. They verify the ZK proof for each batch submitted. So on our roadmap, we are launching our whitelist in the next few weeks. We are working through our Goat Club points campaign. In July, we will be working and launching our testnet, and then our mainnet will go live, in Q3. So again, many people are looking to earn yield on their Bitcoin. So the way that we do it is by having sequencer nodes stake onto the network, and from there earn sustainable yield. So the way that they earn sustainable yield is from the transaction revenue into the sequencers. And the more transactions, the more revenue and more yield for Bitcoin, stakers. So right now we have secured a partnership with Layer 0, Stargate, which will be powering our non-BTC assets. Other day one dApps will include a leading DEX, leading borrow lend, perps, token BRC20, token runes exchange, and marketplace. Many kind of different dApps to really power the network. So the way that we share ownership is by decentralizing our sequencer, as I said. We'll be the first to do it. Many other L2s have one point of failure, and we see that this is the way to really decentralize the network and make it not only our network, but kind of the people's network. From launch, we will turn over our network operations to multiple sequencer operators all over the world. This ensures that outside actors attempt to shut down the network for even a few nodes, our network stays up, for the liveliness. So far we have 4 of our 7 day one partners committed. So far we have Amber, Hashkey, a large mining group named Benmo, and one other that we have yet to announce. And they've pledged major day one liquidity to BTC, which will power our network. Future node operators will compose of mining communities, TradFi BTC custodians, whales, and other holders. So if you are looking to get involved in what we are building, stop by our booth. We'd love to talk to you and love to learn what you guys are building and how we can collaborate. Thank you.
Awesome, thank you for that presentation. Next up on stage is the last for our 5-minute sections for this time. And then we're gonna be doing a 30-minute panel and then jumping back into these 5-minute presentations. Curtis Doran of Hestia Network, he's the CEO. He's talking about heating that pays for itself.
Thank you. Hello, everybody. I came to Miami to sell heat, so it's been a bit of a challenge with the temperature outside. But we're Hestia Heat. We've built some products that can put heating back in people's homes and decentralize mining the way Satoshi want it. I'm just gonna spend a couple minutes, give you a little rundown of the products that we have to offer, and you can come to booth 5 and check them out if you wish. So this is our Hestia Classic. It's an 80 kilowatt furnace. It has 21 watts miner style miners inside of it. The transformer is built in, 600 volts or 480, fully automated, intake exhaust, recirculation, outdoor exhaust. You can put this in a building up to 10,000 square feet, give or take, and heat your building. If you need the heat, the Bitcoin becomes the byproduct. So we've designed this. It's fully certified for install anywhere in North America. We've got 14 running so far, a couple 2 or 3 years now, and they're running phenomenally. The miners run better than stock. This is all air cooling, no immersion or hydro, but you do get some overclock capability because we've removed the onboard fans and put a better fan in there. So this unit is a bit big for anything like home or office, but the new units, this is the micro. So this is actually on the demo table over there. It's a 50 amp, 240, 208 feed, 6 kilowatts, can do about 7.5 if you ramp it all the way up. It's fully automated, just like the Classic. It'll dump the heat outside if you don't need it. This is basically geared to places where your power rate supports mining, but you need heat. So when you don't need the heat, it's dumping outside. You're still mining. The ROI is a little bit better than the other unit that we have there that we just finished producing. It's a damperless unit heater that will ramp itself down and changes its miner profiles based on the heat need. These have 2 S19s in them currently. You can do S21 as well. The fans are removed. You'll be able to go over there and hear the quietness of it. So it's anybody knows Bitcoin miners. You don't really want to have a conversation standing around them. So go over there and have a conversation, and you'll notice the difference. So the other model, the unit heater, I don't actually have a picture here, but it'll ramp all the way to 0 up to 7.5. So the less heat you need, the better efficiency. Obviously, lose a bit of efficiency to get the heat, but if you have a power price that might not support Bitcoin mining, but you need heat, you pay for the heat anyway. Bitcoin becomes the byproduct. So why use a dumb baseboard heater that is the same resistive technology as the ASICs, but no Bitcoin? The XL, this is a 225 kilowatt unit, a bit big for most places, but can do large areas like airplane hangars and very large buildings. Similar technology, it's a little bit more flexible on what you put in it. It's shelf-based design, similar to a normal pod, but it's set up to actually heat the building. There's ducts that go into the building, out of the building, recirculation, the same as the other units. So this one, really heavier industrial focus. But the goal for us is to heat everything. We're from Labrador, Canada. It's a lot easier to sell heat there. It's winter and almost winter. That's the 2 seasons that we have. So it's been an easy development there. But many of you probably aren't from Miami as well. You came here, so that's why we're here to let you know we're out here. And you don't necessarily need to do immersion or hydro cooling to be able to utilize heat. And it's nice to see a lot of the conversation this week talking about heat recapture and heat reuse. So it's a product we have that we've been working on for a couple of years. Some future products, we've got a 20 kilowatt version that's coming as well. The big one is an EV integrated charger. So if you're following EVs, if you build out a charging network and nobody charges, who's going to pay to maintain the charger? Our charging unit, we don't care if anybody charges. We'll mine Bitcoin with the energy until somebody wants to charge. So you pay to charge your vehicle. We'll ramp the miners down the same way the unit heater does, and full-time revenue for us, maintenance on the unit. Who's going to buy EVs if you don't have a charging network? So it's something that we're working on to be able to proliferate charging networks anywhere in the world. That's just about it. I think I'm out of time, but decentralizing Bitcoin mining the way Satoshi wanted, that's what we're doing. If you need heat, you might as well be making some money on it. Thank you.
Hey, thanks, Curtis. That was a great presentation. We're moving on to a panel. We're talking about the ultimate mining playbook, a discussion utilizing hedges, yields, treasury strategies, and more to grow your balance sheet. Leading this discussion is Daniel Goodman of Core Scientific. You guys can join us on stage if you're ready and turn on those mics. We're also joined by Jeff Lucas of Bitfarms. He's the CFO. Adam Richmond of 2 Prime. CJ Burnett of Compass Mining. I think that's everyone. Take it away. Oh, Mitchell Askew of Blockware as well.
All right, thank you so much. Good to be here. Good afternoon, Mining Disrupt. So again, we are talking hedging, risk management, of course, treasury yields as well. So we'll be going all in on term structure, vol surface, basis. I'm kidding. We're going to keep this very conceptual, high level. Just to preface this, there is no one size fits all single answer that is best for everyone. Each one of these strategies are very much unique to the miner as far as maximizing, their results relative to their stated goals, driving value for all their stakeholders and shareholders. So before we dive in here, let me give everyone a chance to introduce themselves, and we'll dive in.
Yeah, I'm Mitchell Askew, head analyst at Blockware. I'm in charge of all our market research, social media content. We're a full stack mining as a service business, and we just launched our marketplace to buy and sell ASICs for all our clients. So excited to talk today.
Hi, I'm Jeff Lucas. I'm the CFO for Bitfarms. We are a global Bitcoin miner. We have about 12 data centers currently in operation, 2 more in development, and we're located geographically in Canada, the US, Argentina, and Paraguay. We're on track for 21 exahash this year and 35 exahash plus next year.
And I'm Adam Richard with 2 Prime. We are an SEC registered investment advisor. We help clients with hedging and yield on their dollars and Bitcoin. And then we also have a lending desk as well.
CJ Burnett with Compass Mining. Very similar to Blockware, we offer mining as a service, and our goal is to make mining accessible to all. So we offer that through hosted hardware solutions as well as managed services.
Very much appreciated. So again, everything is very much relative to the individual miner's goals. So just to kick us off here, Jeff, if you wouldn't mind starting with you, what are some of the goals that a miner should consider in implementing a hedging strategy?
Well, we're probably a little different. I know that the theme here is building your balance sheet. For us, it's more reinforcing our balance sheet. As a Bitcoin miner, we're in a capital-intensive business. The need for and the thirst for capital is immense here. So what we actually focus on is 2 things. 1, how can we use hedging efficiently to reduce our cost of capital? What's a more efficient way for us to use our internal cash flow from operations? On the one hand, to be able to fund our operations versus incurring maybe a 25 or 30% cost of capital to raise that money in the street. Secondly, how can we still do that and maintain the upside in the Bitcoin that we mine here? So again, our goals here really are overarching, are lowering the cost of capital and minimizing the capital requirements we have to meet on the street.
If I could jump in there, I think one of the things that we've learned at Compass is we deal with a lot of retail and light institutional customers. And one of the things that we've learned is everybody has a unique purpose in mining Bitcoin. Some people have a really long thesis. They just want to accumulate more Bitcoin, levered long, exposure to Bitcoin. And that's why they view mining as an interesting vehicle for that. But there are others that take a more business approach, right? They're looking for a cash flow generating vehicle. So it really is, I think, important as you look at mining, you have to identify really early in the process, like what are my goals? What are my, what am I looking to accomplish? It might be very different than a vertically integrated self miner like Bitfarms. It might be very, more focused on cash flow or something like that. Or maybe it's just, learning about Bitcoin, learning about mining. So I think it is very important to just make sure that you establish that really early in the process and don't just necessarily steal somebody else's strategy because it looks appealing to the, investors or things like that.
Yeah, I'll add to that real quick because personally, I'm a diehard Bitcoiner, right? It's my unit of account, medium of exchange, store of value, all that. So my goal as a miner is to grow my balance sheet in Bitcoin terms, not fiat terms. And so definitely important to identify what your goals are.
Yeah, whenever we talk to miners, we're usually talking about a few different things. They're looking at hash price, they're looking at power costs, and then also we see it as the biggest variable that you can actually control is actually the price of Bitcoin. So we focus on controlling that variable and focus on how we can manipulate that using derivatives.
Absolutely, and you're teeing me up very nicely there. So, kind of given this framework, identifying these goals, relative to those, what would be some headline metrics you would be looking at in managing risk and optimizing your balance sheet, whether it's from a resource allocation or just straight up market risk management? Adam, do you actually mind dovetailing a little bit further on that? All right. Or Jeff, would you like to talk from more of like an institutional kind of perspective, some of these headline metrics?
So one thing that we do with every project we're involved in, whether it's actually involved in projects with calls and options, or whether it's actually our build-out projects here, is we use actually a banking term called RAROC, risk-adjusted return on capital. So what we do, we have some internal measures here. We say, all right, what's the potential return here? What's the downside? What's the risk and the probabilities? And we do various studies to ascertain how much is the loss that we can afford here, and what is the potential upside? Because actually what we find, the bigger challenge is not knowing which option or future to buy. It's actually knowing when to liquidate and when to sell. And that's why we use some of those measures very carefully.
So I would add that, when we're looking at how to manage the risks, the first thing that we should look at is making sure that everything that we consider is done with defined risk. So looking at all trading strategies, putting defined risk trades on so that we know what the potential loss is down to the penny is extremely important. And then I think that how you approach it, and us being regulated here in the US, we have to be very, very careful. And so considering the exchanges, their counterparties, the custodians that you're facing are extremely important as well.
Absolutely, and I would just add, at least from core scientific perspective, we look at a number of metrics here. So of course, hash price, the inputs into that. So of course, transaction fee variability, one of the bigger sources of variance, post halving and certainly going forward, that'll only increase in subsequent halvings. So knowing the nominal BTC that is coming down the pipeline, that is a interesting exercise. You must know your numbers. You must know your risk. So to be able to answer these simple questions, hey, hedge 3 months of forward production. How much nominal BTC is that? So having that kind of viewpoint relative to your goals is very important. This one actually does go back to you, Adam. Just some sample solutions in managing risk. And I would just kind of mention not just necessarily protecting the downside, potentially hedging long side as well. I'll turn it over to you from there.
Yeah, so it's important for us to understand what the goals, what the wants, the desires are. And so depending on where the market regime is currently and where we think it's heading, where the client thinks it's heading, we may be looking at utilizing the cash on the balance sheet or the Bitcoin on the balance sheet in order to produce some alpha on that. And so in doing so, there's a number of different strategies that we can deploy depending on risk tolerance. But taking cash, putting it into a Bitcoin basis trade is kind of a default response that I think a lot of people are looking at and utilizing right now. And then if you're working with Bitcoin, obviously there's a number of different strategies that we can do that have low delta exposure in order to just produce more Bitcoin. As you mentioned at Blockware, you guys are really just focused on stacking Bitcoins. And so we can definitely make that a priority and focus in on that really heavily and do so mitigating risk as much as possible.
Yeah, when I think of mitigating risk, the first thing that comes to mind for me is operations, right? Because as a miner, your balance sheet is very exposed to Bitcoin. You're gonna have Bitcoin on your treasury. You have a lot of ASICs that's directionally exposed to Bitcoin, but also your cash flows and your revenue are exposed to Bitcoin. So I like to think of diversifying your revenue streams, right? So you can self-mine, and that's gonna be correlated to the price of Bitcoin. So when Bitcoin rips, you're gonna make a lot more profit. But then you can diversify into hosting, demand response, or ASIC resale, right? Because these are machines with their own market price, market value. It's tied to the price of Bitcoin, but depending on the size of your operation as a miner, you can get access to economies of scale, buy ASICs at really low prices, and then capitalize on the volatility at certain points in the cycle. So really diversifying your revenue streams, I think, is one of the best ways to protect yourself and still maintain that sort of upside opportunity, but also protect yourself during the bear markets.
If I could add to that, I think Mitchell referenced operational risk. I think one of the things, if you're not a vertically integrated self miner, right? So you have to be very wary of the counterparty risk. Even Adam mentioned that as it relates to financial institutions. But on a smaller scale, a lot of people like to partner with hosts, right? Obviously, we're positioned as that. But one of the things that you have to do when you evaluate your host counterparty is, track record, reputability, financial stability, right? I think, Compass obviously learned that lessons in spades over the last several years, and just understanding who you're working with, making sure they're well capitalized and they're not overexposed, because you don't understand their treasury practices, right? So are they managing their treasury, or are they exposing you to risk by nature of poor decisions that they're making? So just something else to monitor on the operations side.
So it's not just financial, it is operational
Yeah,
as well.
just add one more thing to it as well, is that if you're looking to deploy some type of strategy, whether it's hedging or yield with either the Bitcoin or the cash on balance sheet, if you don't have a team internal that's able to monitor, or some automated system that's able to manage the system 24/7, you either have to implement it internally, which means potentially building it, which is what we did. Was we built a 100% proprietary platform, and we have people around the clock. So you either have to implement that all yourselves, or you have to look externally for that. And so vetting those external managers is really important.
And that exercise internally, as far as resource allocation, not just financially, but straight up manpower. Do you have the coverage necessary? This is a 24/7 market on the Bitcoin side. The power is a major input for all of us, and that is one of the more variable assets out there as well. So staying on top of it is certainly everything. You set me up pretty nicely for the next part here. And again, we are kind of separating this from more of like a risk focus. We'll get more into a return. Can't talk return without risk. It is all risk return. So just to kind of tie it up here on the risk side, Jeff, you wouldn't mind if I went back to you, some potential pitfalls in engaging in a hedging strategy, whether it's long or short. How could a miner at scale at the institutional side, how could this possibly go wrong for them? What should they be watching out for?
Well, that's a good question. And I think actually some of my colleagues here have already sort of addressed that. First and foremost, you really need to understand your cash flows and the variability of those cash flows. We are actually 77% hydro renewable energy. The beauty of that is that our rates are actually relatively fixed. That makes it tremendously easier for us to actually monitor the outgoing cash flows. What's of course more of a challenge is the price of Bitcoin and the hash price and how that comes into play here. But we actually, the first and foremost thing to do is get a good handle on that and understand what can you afford to lose. And then from that, we take the next level, and when we engage in a hedge, we say, all right, what is the true cost going to be of that hedge? How comfortable are we doing so? Those are some of the key fundamental points, because quite frankly, we're not in the business actually, really to grow the balance sheet and manipulate the balance sheet. We are in the business actually to grow the operations and to maximize our returns. But you have to have that foundation of your cash forecast going forward here. Without that, you're going to be in trouble at some point.
Yeah, mismatch between forecast and actuals, you might find yourself net short a very convex asset. So must know your numbers, must know your risk. I would also add there certainly a lot of considerations around capital efficiency, the margin considerations around futures, very different than, for instance, put options if you're hedging the downside. There is opportunity cost if you do have growth opportunities that you're looking to deploy into. You must balance those collateral considerations as well. So moving away a little bit from the risk side and more into the return side. Now this does all go together, and we'll tie a pretty bow on this. But yeah, as far as some of the goals miners should consider, and again, always goals based, engaging in a yield or return enhancement strategy. What should a miner be looking for? Why don't we start right here?
Yeah. So one point to note about Bitcoin, and this is true for most risk assets, is a lot of the gains happen within just a few days of the year, right? I heard a quote once, it's months and years of agony for days of glory. So positioning yourself to be kind of net long at all times is definitely the way to go. I mean, Bitcoin is the most important financial asset in the world right now, and fiat currency is going to continue to debase. And you don't want to find yourself on the wrong side of this, right? You don't want to find yourself net short during one of these God candle rips where, you know, Bitcoin's price can move very high very quickly. And so just being in the market at all times is primarily the most important thing, because you want to catch those days of glory.
You know, I want to add a comment because you make a good point. The biggest challenge that we have is, one, ensuring that we have the right controls and discipline and processes in place as we engage in our derivative activity here. At the same time, having what you spoke to, the flexibility to step in and out of the market to capture those opportunities or to avoid some significant losses. I got to tell you, we're still struggling with that. We're fortunate that we've got a risk committee that plays a role in every derivative decision that we make here. And we've learned each other, we know each other's habits, and we're always available 24/7 because we have to be positioned to act within minutes at times. And that's absolutely critical for us. But also, it's very, very important to have those controls in place.
So we would typically look at structured products, a mix of structured products, and also probably long-short volatility strategies in order to really generate yield. I think that if the Bitcoin's just sitting idle, that's a massive opportunity cost. And so you want to start there. On a little bit more conservative side, if you're looking to just mine and hold it, one way that you can actually realize some initial benefits would actually be to sell some Bitcoin and then go into some call options positions to kind of synthetically get that exposure. Alternatively, we can take Bitcoin that's mined, you can actually put it up as collateral, take down a loan, and then take the dollars off that loan, and then put that into some type of yield-bearing strategy as well. So there's a lot of different ways to approach it, and I think it just kind of depends on what your goals are and how you want to use that capital and how liquid you want it to be so that you can access it in a timely manner.
So is there a best return out there? No, I'm kidding. There is no single best return. It is very much relative to your liquidity profile. Of course, your goals. You might be very long Bitcoin. You might be looking for more consistent kind of cash flows. Again, depending on the overall firm goals. If you have other investment areas, it might be very important that more variable side of your earnings, you know, whether it's looking at in terms of BTC, hash price, BTC US dollar, might be advantageous to constrain that, or at least the downside without giving away ideally too much upside. So why don't we switch into some treasury management, just treasury management considerations in general. We're kind of tiptoeing around that right now. What is resource optimization? How to think about that? So of course, deploying cash or finding proceeds in various strategies, certainly an option. Reinvesting in operations, potentially stuff in capital markets as well. Why don't we? I'm sorry to keep picking on you, Adam. I just know you have all the product knowledge here. Could you walk us through a quick case study in like a couple minutes of how to use a really simple yield style product? Maybe it's a covered call strategy, covered lending, for instance, short vol.
Yeah, so covered call strategy would honestly be the most vanilla way to approach that. I mentioned earlier, doing everything with defined risk. And so obviously, if you want to get that unlimited upside exposure, there's ways to go about that, but then we can also do it so that you're not risking a potential sell-off of Bitcoin in case the markets do just run up. And so we would want to do that also by minimizing your costs as well. So we can do costless structures where your cost to enter into these positions where you can, get this exposure are really advantageous. And so, yeah.
Yeah, when I think about growing balance sheets, right? What company has been the most successful at doing that over the last 4 years? It's MicroStrategy, right? And granted, they're not in mining, so it's a little bit of a different setup there. But I think we can all sort of take a page out of their playbook, which has been to accumulate Bitcoin at all costs, right? Use all available resources to stack Bitcoin and just stay solvent in the meantime, because Bitcoin is, at the end of the day, it's number go up technology, right? These fiat currencies are going to continue to devalue. The governments are running massive $1 trillion deficits every year. Bitcoin is the best play on fiat debasement. And so accumulate Bitcoin at all costs, use all your resources you can, and stay solvent in the meantime, because there's going to be a lot of volatility.
So we have a different approach to that. As I mentioned in the very beginning here, we try to minimize our cost of capital to fund our growth going forward. So we actually use our excess cash flow from operations to do that. But at the same time, our investors look to us to increase the value of our Bitcoin holdings. So what we have in place here, we've adopted something we call a synthetic HODL. It's pretty straightforward here. We have excess cash flow from operations in the form of Bitcoin. We'll sell that Bitcoin. We'll use 85% or 90% of the funds from that sale to fund the growth of the business. And the other 10 or 15% will buy long-dated call options. Look for those with a low volatility or low beta. And by so doing, not only do we raise money for the business at the cheapest form possible, cash from operations, we still also maintain the upside potential with the Bitcoin or the complementary Bitcoin that we have.
So you can have your cake and eat it too. To be clear, this is one of my favorite strategies, and it is one of the advantages that miners have. We have a lot of Bitcoin coming in every single day. We are never forced buyers. That length is naturally hitting the portfolio. So with just a little bit of optimization, you can fund your operations with cash flows while still maintaining that upside kind of convexity.
If I could jump in there a little bit,
Yeah.
I think it kind of comes back to the comment that we talked about at the beginning, which is I think you really have to identify your purpose, right? So the public markets seem to reward self-miners that have HODLs, right? So, for them, it makes a lot of sense to have large balance sheets of Bitcoin or a synthetic approach where they have that exposure to the upside. For others, I would kind of encourage maybe a little contrarian approach, which is differentiating being a miner and being a speculator on the price of Bitcoin, right? Obviously, we're all here because we believe in Bitcoin and we think there's a lot of upside opportunity, right? But when you're building a mining business, I think it's more important to view it as a cash flow vehicle, right? So build it in a gross margin positive approach where you're making sure that you're not focusing or you're not relying on the upside of Bitcoin or yield opportunities on Bitcoin to make sure that you are profitable or you're there for the long term, and really focusing on building a solid, robust business that you can reinvest the cash flows into the business and growing the business, and then obviously protecting your downside, and then kind of divorcing that from what is Bitcoin, what is my upside when Bitcoin
That
goes
is
to
a
$1 million.
critical point. I would even add a little bit more to that. That does reflect how the network is evolving. The inflation rate, that block reward is coming down. Transaction fees do make up more and more of our total return series. Does sound like a cash flowing kind of asset. Absolutely. So we have about 5 minutes left. Why don't we go ahead and open up to any questions out there from the audience? Again, we have a broad perspective here. Happy to get into it. And I actually cannot see anything, so. If there are any questions, please just be loud. I cannot see into the audience.
What can a small miner do if you're not a large miner? What can a small miner do to take advantage of opportunities like this?
What can a small miner do to take advantage of opportunities like this? That's a great one. Let me turn it over to you guys first. Yes.
Yeah, happy to jump in there. So Mitchell mentioned it earlier. I think being dynamic in not necessarily taking an approach where I'm going to buy some Bitcoin miners and hold them forever until they obsolete and just be done. I think taking a really dynamic approach where you say, hey, I'm going to recognize that cash flows from mining are very concentrated in certain parts of the market cycle, making a dynamic approach to say, okay, maybe I'll buy machines now when hash price is really low, opportunities on the hardware side are a little bit more compelling, and be dynamic in selling those when everybody's really excited about mining again, right? So taking a really dynamic approach on that front and thinking counter-cyclically as opposed to pro-cyclically and just doing what everybody else is doing.
Yeah, I would definitely agree with that because I can't really think of any other industry where your profit margins change every 2 weeks and it's relatively unpredictable, right? We know difficulty is going to slowly trickle up over time, but yeah, sort of entering the market cycle at the most opportune time is going to be your best approach as a small miner, right? Because if you buy at the top of the cycle when the S19s are, they were over $10,000 in late 2021, right? You're going to be worse off than if you buy when hash price is low. I know there's a Warren Buffett quote out there about blood in the streets, right? And we just had the halving, right? Hash price is pushing towards all-time lows. The sort of economics don't look as attractive right now as they will at the top of the cycle. So sort of taking advantage of the opportunities and moments of weakness, I think is going to be your best play as a smaller miner.
Yeah, likely, definitely on the operating side, there are unfortunately like kind of higher minimums relatively. If you're going through CME Group, it's 1 Bitcoin minimum for those contract specs. So can be a little tougher there. That being said, there are some other avenues that the individual might have, like maybe you have like a Tesla wall and you can afford to be mining during peak hours when electricity is very expensive, and perhaps some of the larger institutional guys are curtailing. So there are some unique opportunities like that as well.
I think the other thing that I'd add to that question is really a focus on educating yourself, right? Because we've been through enough of these cycles, and obviously every cycle is unique, and we can learn from those things. But really focus on education and learning what are the large public miners doing? What are some of these more dynamic, smaller self miners doing? What are others that fit my profile doing, and not necessarily just outsourcing your strategy to whatever the largest players are doing.
All right, we got a couple minutes left. Any other questions out there? Man. Yes, back there.
Do we know any miners that are mining altcoins to then sell it off into Bitcoin?
At the institutional level, to be clear, definitely it was maybe even prevalent to some degree a few years ago. Potentially a little less so, at least like on the public mining side. There are certainly optics, pure play versus not, that need to be mindful of. Also, volatility in earnings, certainly a consideration.
Yeah, I'm not familiar with many that are doing that.
It's like a retail individual level. I know there's sort of algorithms out there where you can switch to other proof of work coins based on what's going to be most profitable in the moment. But yeah, if you're like a public miner, you definitely don't really want to tread the waters of some of these other coins because they're the guidelines aren't as clear, right, on commodities versus securities, and you're exposing yourself to a lot of risk with that.
But it does speak to the overall theme, as far as optimizing the resources you do have deployed. Look, it is always a relative value consideration. An altcoin, very well, you might have a strong long viewpoint, and that relative value could very well be there to the point that, the extent you're mining somewhere else besides Bitcoin, that should have the forward viewpoint that currency or coin would be outperforming Bitcoin. That is a market call, to be clear, which on an individual, smaller basis might be a little bit easier to make. And it sounds like we are coming right up on time. So with that, I think we can go ahead and conclude. I appreciate the time here. Thank you to all of our panelists. We'll go ahead and get it right.
Thank you.
Thanks again, everyone.
Thanks all.
Awesome. Great panel. Thank you all for joining us. We're moving right back into our 5-minute little speed rounds here. Next on stage, we're joined by Joyce Lee of Lead Miner. She is the CEO. She's going to be talking about the challenges and opportunities of the Bitcoin halving. Joyce. Ready? Right here.
It's here? Yep. Okay. Good afternoon, ladies and gentlemen. It's my great honor to be here to share the challenges and opportunities of Bitcoin halving. Well, my name is Joyce Lee from Lead Miner Limited. And Lead Miner Limited provides one-stop crypto mining services to customers around the world. We have been concentrating on the blockchain industry since 2017, and we have served customers in more than 100 countries. After 7 years of development and expansion, we have grown our one-stop service, including mining consulting, sales, hosting, international logistics, miner repair and maintenance. Our cooperated mining farms are over, how to this? 1 second, please, sorry. How to this? Sorry. How to, oh, sorry. Let me get the red page. Yeah, here we are, sorry. Our cooperated mining farms are over the United States, Canada, the United Arab Emirates, Russia, and Ethiopia, providing customers with sales and efficient hosting services with competitive prices for major brands such as Bitmain, WhatsMiner, Gold Shell, S River. Efficient services and delivery guarantee. It has helped us gain a very good reputation within the industry. Well, there are 3 parts. Part 1 is challenges, part 2 opportunities, and part 3 is conclusion. Okay, part 1 challenges. Bitcoin halving will bring us several challenges. The first one is market volatility. And the second one, miner profitability. Reduced miner rewards and mining difficulty adjustment, and network security. Hash rate concentration and increased risk of network attacks. Regulatory pressure and policy changes and uncertainty. Compliance challenges, and the last one is energy consumption and environmental impact. High energy consumption and sustainable development pressure. And part 2 is opportunities. The Bitcoin halving would also bring us more opportunities. The first one will be the price potential and supply reduction leading to price increases and market expansion and speculative behavior. And miner rewards and competition. Impact of halving on miner rewards and operational efficiency, improvements, and technological upgrades. And the market maturity and institutional participation. Impact of halving on market maturation and increased institutional investor participation. The last one will be innovation and development. Bitcoin blockchain technology innovation and new currencies and application scenarios. Well, to sum up, Bitcoin halving will bring us long-term price increase trend. And technological innovation and development, and wider market acceptance. Oh, that's all for my speech. Thank you for listening. For more communication, please contact us via following methods. And wishing all your guys have a nice day. Thank you so much.
Awesome. Thanks for that great conversation. So we got a few more of these 5-minute talks here. If you are slated to give one of these, can you do me a favor and just come behind the curtains here? We're having the prep right now, so it'd be great if you could make your way over here. We're moving forward in the schedule a little bit. We're going to be joined by Kevin Hamilton of New Energen. He's the president and CEO. He's going to be talking about monetizing your energy, whether you use it all or not. So
Yes,
welcome
indeed.
to the stage.
Thank you very much. Good afternoon, everyone. My name is Kevin Hamilton. I'm the CEO of New Energen, and very pleased to be a part of this Wednesday afternoon speed dating process. New Energen provides energy cost optimization services to our mining clients in North America, and I'll get into that in a moment, what those strategies look like. But first, I'd like to talk to you for just a moment about what's happened in the United States over the past 5 or so days. As many of you have personally experienced, we've had extreme heat conditions, unhealthy heat conditions across much of the country, in California, in Arizona, in the Dakotas, in New York, in the upper Midwest. And the reason I mention that and why it's important to miners, those of you who are on-grid miners, is that you help to keep the lights on. There is not, as some of you may know, there is not another industry in the United States that has electric loads that are as dispatchable, curtailable as miners. And when the heat gets very hot and the power grid is stressed, your electric loads are available for curtailment, which of course keeps the lights on. And it keeps infirm people, elderly people, those of whom we love in our families out of harm's way. So we should all be mindful of that, especially when certain policymakers across the United States say less than nice things about the mining community. The reality is that each of you who own and operate mines are critical resources to the electric power grid and its reliability in the United States, and I congratulate you for that. So let's talk about energy cost optimization services. Today, unlike a few years ago, those of you who operate and own mines ought to think of those mines as power plants. And the way you optimize your electric cost is by making your power plants, your mines, available for curtailment in the various programs that exist across the United States. And there are different flavors of these curtailment programs that exist across the country. And so it's important that each of you develop relationships with demand response providers, energy services companies like New Energen and others who are here today to help understand what the opportunities look like. So there are traditional demand response programs, capacity-based demand response. There's also the opportunity to bid your consumption or your capacity for electricity into wholesale energy markets. I know there have been some talks about that earlier today. Maybe some of you saw that. But you have an opportunity to bid your capacity or to work with someone like ourselves who can bid your capacity into, on a wholesale, day-ahead or real-time basis, energy markets and be paid for not consuming electricity. And that's why we have the headline up here, monetizing your energy whether you use it or not. And so that's one part of the equation. Another part of the equation is as you're developing your sites and starting operations, you want to make sure that you have the right tariff in place. If you're in a deregulated marketplace across the United States where you have options for electric supply,
You want to make sure that you have a rational electricity purchasing strategy in place with third-party providers or with your local utility company. And it's also wise and prudent to have a third party auditing your electric bills. Trust me, there will be errors in those bills. And we know that as part of your ongoing OpEx, electricity is among the largest of cost centers. And so when you roll all of those energy cost optimization strategies together, making sure you're on the right tariff, making sure someone is auditing your bills, being sure that you're available and participating in all demand response programs, different flavors of that exist across the country. When you roll that all up together, you might be able to shave more than a penny or so per kilowatt hour off of your energy cost center, which I know is very meaningful. So I encourage you to to avail yourselves of those opportunities, those strategies. If you'd like to speak with New Energen, my team's on the other side of the curtain over there. They're great, they're terrific. They'll treat you with transparency and due consideration, and we'd love to speak with you about it. And lastly, back to the whole matter of the heat wave last week, please understand the value that your assets, that your sites provide to our communities. There is a community benefit to Bitcoin miners being available to curtail electric load when asked to do so, to keep the lights on, to avoid a blackout or a brownout. So please keep that in mind, and thanks very much for your attention. Have a great rest of the conference. Take care.
Thank you.
Thank you. Thank you.
Okay.
Awesome. Moving right along here. Bring up on stage. Ready? Hello. Ruben Gomez of Locotech. He's a developer, and he's talking about why efficient mining is key.
So, hey guys, if I can get my presentation, there we go. So, welcome to our keynote. We only have 5 minutes, so I'm gonna try and speed through this. We're gonna talk why mining efficiently is the key to make a profitable operation and make sure you make money out of your miners. So, oh, where's the clicker? Can you go next slide? Next slide. I have no clicker. All right. Okay, here we go. So we have 3 performance indicators that are very important: the power cost, your ROI, and what coins you're mining. The power cost is essentially how much your miner is consuming plus how much you're paying for electricity. Then ROI is how much money you make out of your miner before it goes to end of life, meaning that it's no longer giving you more money. So you're losing money if you keep it running. And then what you mine is what coins you're mining. If you're mining Bitcoin, Litecoin, Dogecoin, so you have a lot of opportunities there. One thing that we're seeing in the industry, which is normal, is the difficulty increases over time, and then we have rewards dropping over time. For example, Bitcoin went up in difficulty 70% last year. Litecoin went up in 50%, and Dogecoin also went up in 50%. That means that we have daily values where difficulty is increasing on average. And then our rewards also decrease every few years. Every 4 years, the Bitcoin decreases by 45% more or less, since we have fees to take into consideration there. And Litecoin reduces every 50% every 3 years, more or less. So they have reductions over time. So then we have a very interesting situation where difficulty increases and rewards decrease, and your electricity price stays flat. You have an effect where at some point your miner stops producing money, and you're slowly losing onto your margins. Every time you're producing less money every day. So what we did at Locotech is not only develop an efficient miner, but we also worked on a way to estimate how much you will be making in a few years in the future. So what we did is we put all the new generation miners that are coming out, and we put it through those calculations. At different electricity prices, we see that all of the miners that are coming out at reasonable electricity prices, they're not going to make you money. For example, the S21 at 2 cents per kilowatt, which is almost unheard of, you only make 96% of your money back before it becomes unprofitable, as difficulty increases on average at 0.1% every day. And the L9s, which are just about to come out at 6 cents per kilowatt hour, which is what most hostings offer nowadays, you also never make your money back. And so we decided to design something from the ground up that would get your money back and being as efficient as possible. We're already on pre-order stage, and our full stack is returning 131% on the 6 cents per kilowatt. It's a bit more expensive. It gives you less hash rate per dollar, but it's so efficient that it will outlive all of them. For example, the L9 has an expected lifetime of 1,400 days. Our miner has almost 2,300 days of lifetime, meaning that you're going to be running them for a lot longer. So what we took is, well, how does this vary for every different electricity price? And we took all the different miners that are like new gen, and we put them through the same calculator and see how long it would take to get your money back out of them. And what we saw is that for the S21, unless you're running on pretty much free electricity, you cannot expect to make your money back. Even at free electricity, it takes 450 days to get your money back, or pretty much free electricity. At the L9s, as long as you're under 5 cents per kilowatt, you will make your money back, but it will take a long time, sometimes over 1,000 years, 1,000 days, which in terms of years is over 4 years, which is a long time. And then our full stack, we are seeing that you can even run them on a commercial electricity price or even residential in some cases in some areas. For example, where I come from in Spain, our more or less our electricity price right now is at 10 cents per kilowatt. And that means that you can get your money back in 1,000 days for your machine if it's running in your house. And if it's running in a data center, it will be even quicker. Comparing it to the L9, it makes a lot more sense to then run a full stack instead of an L9. What we did is also we went and it's a bit of a logical fallacy to look back in time how much you would have made since the miner is not yet running. But if we took the past historic data of profitability, even at 50 cents per kilowatt hour, you would never have dipped under the $0 of profit on the full stack, something that no other miner can say. Even the L9 or the L9 or L7, they would not have been able to sustain at 50 cents per kilowatt, which the full stack does. And also we have another product, which is something interesting that I wanted to bring up, is that we have a pool that pays out more. It's called Power Pool. It can bring down your break-even time by quite a bit. We said is, let's make this tool open source. So you can actually download it with this QR code, and you could put in your miner, your cost, and electricity price, and get a more exact on your ROI. So that's pretty much it. Have a good day. Thank you.
Cool. Moving right along here. Another 5-minute quick conversation. Today we're joined by Dalen Dolahan of PowerMeta. He's a chief product officer. He'll be talking about pod-wide unleashing AI potential with decentralized GPU cloud compute. Welcome to stage.
Thank you for that introduction. As you were saying, my name is Dalen Dolahan. I'm the Chief Product Officer at PowerMeta Corp. Today, I'll be introducing the future of infinite compute with the launch of PowerMeta Corp's PodWide, the world's first Web3 GPU cloud compute platform that's revolutionizing AI potential with decentralized GPU cloud compute. Before we dive into PodWide, I'd like to discuss the demand for computational power. The rapid growth of artificial intelligence is a direct result of the innovation driven within AI algorithms, data, and compute. As AI systems become more complex, they require vast amounts of processing power to handle intricate algorithms and large data sets effectively. The exponential increase in AI capabilities underscores the critical importance of expanding and optimizing our computational infrastructure to support these advancements. So in today's landscape, what's happening now? Large corporations like Google and Microsoft often prioritize profits over national and global interests, advocating for government-imposed restrictions on technology openness to maintain their competitive edge. This highlights how a few entities hold significant control over technological advancements and could severely stifle the accessibility and innovation of the potential of artificial intelligence. So creating a decentralized cloud compute platform was crucial for PowerMeta in order to counter these trends. By decentralizing computational resources like GPUs, we can democratize AI development, ensuring a more equitable distribution of technological capabilities. This approach fosters innovation, enhances accessibility, and allows a broader range of entities to contribute to and benefit from AI advancements, paving the way for a more inclusive and dynamic technological future. So Podwide is revolutioning the compute ecosystem as one of the first decentralized cloud compute platforms. Podwide has 4 main core services: GPU Cloud, that's containerized GPU instances; bare metal services; Web3 customization that allows for rapid integration with any Web3 project; and C2 Cloud Accelerator services. Later in this presentation, I'll be focusing on bare metal and Web3 customization services. Taking a look at the Podwide structure, it can be broken down into 4 main sections, but I'll be mainly focusing on our Distributed Management Cloud Operating System, DMOS. DMOS aggregates computational power through the use of GPU pools that are comprised of GPU clusters within our IDC facilities. Through the use of AI grid infrastructure, DMOS acts as a router, seamlessly allocating computational power to any AI cloud compute, GPU mining project, or other Web3 project. DMOS uses a combination of Dockers and APIs that retrieve the necessary clients to interact and operate with multiple projects. This enables the managing and scheduling of containerized computing tasks for K8s and arrays, node lifecycle management, node monitoring and scheduling, and InfiniBand monitoring and provisioning. With Podwide, clients will be able to enjoy a high level of security and reliability, as well as improved computational efficiency through multi-GPU parallel processing, which is all made possible through DMOS. Even taking a look at our competitors, we are positioning ourselves to not only serve the artificial intelligence machine learning market, but the entirety of Web 2 and Web 3 based projects, with an emphasis on zero-knowledge cloud projects. We provide a diverse set of services with customized solutions that implement instant setup and flexible pricing. Taking a look at our partnerships, we are partnered with NVIDIA, Supermicro, IO.net, and Filecoin Foundation, to name a few. And diving into a case study here with Raka, this is one of our clients that implemented bare metal services and Web3 customization services. Raka sold NVIDIA RTX 4090 AI compute packs to earn a passive income by supplying computational power to projects like IO.net, Alio, or any other GPU project to earn respective cryptocurrencies. Another case study is RM Global that uses bare metal and Web3 customized services as well. RM Global utilized hundreds of H100 GPUs and thousands of RTX 4090s from Podwide to build their cloud computing platform for customers to purchase their cryptocurrency packs as well. Their AI factory allows customers to switch between various Web3 GPU projects from IO.net, Caspa, Alio, Filecoin, and others to maximize their returns. And here's a little bit about why you should choose Podwide. Podwide's high performance GPU clusters enable efficient data processing and encryption, meeting the demands of the AIGC era. By integrating decentralized trust frameworks and enhancing data privacy, we deliver reliable computational power that accelerates processing and elevates system security. Feel free to connect with us at info@powermeta.cloud and at our website, podwide.ai. We'll be sticking around at our booth for a few minutes if you have any questions. Love to chat. Thanks.
Great. We got about 4 or 5 more of these 5-minute conversations, so stick around for quick facts about Bitcoin mining. Next on stage, we're joined by Kunal Joshi. He is the managing partner at Precision Miners. He'll be talking about enhancing resilience and maximizing efficiency in cryptocurrency mining.
Okay. Thank you. My name is Kunal Joshi, and I'm the managing partner at Precision Miners. The topic today that I'll be talking about is diversification of mining hosting sites. We are a hosting site provider. We build sites, and we also have around 20 megawatts of hosting. And what you see here in the picture is one of our 5 megawatt hosting site we built up in 30 days for one of our clients. And the reason I want to talk about diversification is my background is more in oil and gas, and we try not to put all our eggs in one basket. And I tried to take that into the mining space. So our focus is on diversifying our hosting sites and not trying to have all our hosting sites at one space. And I'll be talking about the advantages and some of the disadvantages of doing that. So there are before I actually talk about diversification, there are three main considerations we take into account before we actually pick a hosting site. The first one is energy cost. I mean, that's probably the most important one. Everyone wants to get the lowest power rate, so that's probably the primary goal. Second is regulatory analysis. That's something we really do, especially in the recent times with different state governments and governments around the world clamping down on mining. So we always try to stay in areas that are low in regulation. And infrastructure assessment. So we try to access areas where you have a substation in place, for example, or access to material is easy to procure. So what you see here is one of the sites we just acquired. It's a 20 megawatt greenfield site. And you can see it's right next to a substation, right off a freeway in Missouri. And so this is some of the, the three, I would say, primary considerations we take into account. So what are the benefits of actually diversifying your hosting sites? I would say the most important is risk mitigation. Diversifying actually lowers the risk associated with, for example, the weather. I mean, we are in Tornado Alley, so if you had all your sites in one location and a tornado came by, I mean, that would pretty much mean the end of your business. So that's one of the reasons we actually diversify our hosting sites, and we have around 12 locations in Missouri and Kansas. Added to that, once you diversify, you also have enhanced stability in terms of pricing. And then you can also access stranded assets like natural gas. And that's something we are also big into is natural gas. So there is also an added advantage of cost optimization. When you have access to different hosting sites, you can't let the electricity provider dictate terms to you, because if they start dictating terms to you, you have another site to go to. And we have actually faced that in the past where a site increased their prices by 20%, and we just packed our bags, and in a week we were at our new site. So that's where diversification really helps. And then expansion. So we once we are happy with our site, we start off with 5 megawatts, and if we are happy with the site owner and the landowner, we actually quickly start expanding. And in many of our cases, we have expanded from 5 to 20 megawatts in within a year. But there are some disadvantages. So when you diversify, you need to have your logistic planning in place, and that's something we have been focusing on. We have strategically placed warehouses. Risk management is something we also focus on. We have risk management plans for each of our sites in case there is any issue. And we also monitor our sites at a central location, and we have one or two techs dedicated to every site. So yes, there are disadvantages, but that's something that needs to be taken into account. So lastly, this is just a map, and in this map we have 12 different hosting sites, on grid and off grid, so natural gas and on grid. We currently have 21 megawatts of hosting, and we can expand to 40 megawatts. And we can build 5 megawatts in 30 days, 10 megawatts in 45 days, and around 20 megawatts in 75 days. And that's something we have already done, and our clients can speak for it. So yeah, that's my last slide. We are in booth 101. If you have any questions or concerns or want to talk about building a site or hosting, we can help you. Thank you.
Great, thank you for that conversation. Next, we have Jeremy Siegel of soulminer.io. He is the CEO. He's talking about leveraging real estate for Bitcoin mining, which is a pretty common conversation I've seen around, but I'm actually looking forward to this one because I don't always feel like we get the best information about real estate and Bitcoin mining. So without further ado, I'll let you dive right into it.
All right, thanks. Does this come up? Or? All right, hey everyone. My name is Jeremy Siegel. I'm the CEO of Soul Miner Farm. We build infrastructure, we build crypto mining sites. We basically going to just talk to you about some of the follow-up of the last talk, but also our perspective of why diversifying into real estate as a crypto miner is a smart move. And it's something that we specialize in, so we'll just go into it. Back in 2016, that's when we started getting into this. We were building GPU open air rigs. So, not much infrastructure you need to do that, but just to give you an idea of like where we started. From there, we started building compartmentalized 10-foot shipping containers with GPUs. We went through a few iterations of that. That's back in 2017, 18. In order to get to that scale, you need to have some extra infrastructure on top of just what would be normal at a typical warehouse location or a house location. So just as developing at sites, as a lot of you know, you have to start building infrastructure for that. So then we started growing our capacity, growing our farm. These are all GPUs. It had a couple other racks to this. And in order to do that, you need infrastructure. So we're just constantly iterating, learning, getting through infrastructure, and just plowing our way through that side of things. This is another site we did infrastructure for doing the cathedral style. So the chimney effect, you have the racks pointing at each other, and then the heat goes out the top. So there's no need of exhaust fans. So we've been through some of the iterations from infrastructure on that side to be able to support some of the sites that we've built. Here's a recent site that we built. You can see the dates here, 5/29, it's cut off there, 6/10, 6/13. So we're getting pretty fast at building these sites, building infrastructure. This is 4 megawatts right here, about 5 weeks to pull that, what you see here together. In order to do that, you got to have contacts with all the infrastructure suppliers. And so that's what we're doing is infrastructure. Here's another site that we built. It's a 24 megawatt site. It's just infrastructure. In order to power all this equipment, you need infrastructure. And so that's where our bread and butter is with that. The reason I talked about all that is because a lot of miners, they might either buy machines and then have them hosted. But when the market has fluctuations, like you see here, and like some of you might have experienced, you might have leveraging on your equipment, and then you might get margin calls if the value of that equipment drops. And if you're not diversified into an appreciating asset, such as the infrastructure side of things, then you might have some issues. We've seen a lot of companies go under since we've been in the space because of that. So we see infrastructure as a way to de-risk your business if you're in mining, as well as being a good investment just in general, even if you're not a miner. Another angle is, this is just a picture. We had a lot more GPUs than this, but when we were liquidating GPUs, it's a little bit different than liquidating ASICs in a downturn. You've got a bottom dollar of what it's worth. So we just became an e-commerce business for that part of our business and started selling them on Amazon, Newegg, Walmart, and we're able to liquidate a lot of our equipment that way. So I think just being in the space, a big part of it to be able to last through a lot of these market fluctuations is the ability to withstand the market fluctuations, and having the perspective and a way to de-risk your business is really important. And our opinion on that is infrastructure is a really good way to go about it. So we also sell transformers. We've got a conglomerate of Mexican manufacturers that we source transformers from. So if you have a site or know someone who builds sites that needs fast lead times on transformers, that's something we can help with. You can see that the market is going really strong for AI compute. So having high density electricity contracts with data centers, it's very valuable in the future, in our opinion. So we feel like it's an appreciating asset. But if you have any questions, we have a booth in the far back corner on that side. So feel free to come and talk to us out at our booth, and we're happy to talk about how infrastructure or how you can get involved or how we can help you diversify and de-risk your business. Thanks.
Great, thank you. I'll just take that from you. Next, we have on stage Taras Kolak. He is the CEO. The CEO of Sunnyside Digital. Take it away, Taras.
Hey guys, it's been a long time coming for this presentation. I've been in the space for about 8 years. I've done all sorts of interesting stuff. And a few years ago, after leaving Core Scientific, I took my side hustle, which was helping good people do good deals, and made it my full-time business, my company. So lots of you probably know Sunnyside Digital. Maybe we've done deals together. Maybe we've worked with you on some projects. But this is the last time you'll see me wearing this t-shirt. Pretty excited to announce that we're going to be launching Syntech Digital with myself as CEO, Joe Stefanelli as president, and Patty Stefanelli as COO. As a combined company, we've done incredible numbers. We've done deals in 6 continents. Thank you, sorry. 30 different countries, 25 years combined experience in the data center industry, and a preferred vendor to 25 public companies representing over $30 billion in market cap. In essence, we've moved over 400,000 ASICs since 2020. In fact, this year, we've done it. This year's been incredible with the growth that we've been seeing. So we really will be the preeminent wholesaler to be able to work with you folks if anybody needs hardware, infrastructure, et cetera. And we're super proud to be part of some amazing partners in this ecosystem. We will be Bitmain's official distributor for United States of America. We're the hash rate ambassador, as it's called. And we'll be continuing our partnerships with RepairBit, Rosso, Epic, Alpha Mobius, and Alpha Miner to really deliver best-in-class services for the ecosystem and industry. Making sure that if you need hardware, infrastructure, parts, engineering services, you got a great team to work with that can get the job done reliably, on time and on budget. So we are launching a few additional product lines because our target is over the next 3 years go from 100% digital mining revenue generation to a 50-50 HPC digital mining. We're going to be working with great partners like Core Scientific to make sure that as we transition to be a 50-50 provider in the data center ecosystem, we've got the right tools and the right team to do so. So we'll be working on GPU, HPC hardware procurement, co-location, and wholesaling. We're also going to be unveiling a just-in-time parts delivery program for the United States and Canada to make sure you don't have to deal with all the headaches that exist when you're actually trying to source parts out of Asia. So we'll have a warehouse, not just in Colorado where we have one right now, but also on the East Coast. And we're also going to be offering an enterprise fleet refresh. We've been working with some of the larger companies out there to help them take down their old gen, clean it up, refurbish, consolidate, and then sell it to the secondary market. We'll be really ramping that up. And then finally, we're going to be working a lot more on the site management, EPC, and optimization services to make sure that if you're looking to expand, you've got a great team to be able to work with you, get the job done, get your sites growing, and get your projects up and hashing. So really appreciate everyone's time. It's the beginning of a new era. Really look forward to working with you guys. Thank you very much.
Give this to you. Yeah, you're good. Take that. Awesome. Thank you, Taras. We're moving right ahead with our last 5-minute panel. This is with Via BTC. And then after that, we're going to be moving over to our last panels for the day. We'll close up.
Thank you. So, good afternoon, ladies and gentlemen. I'm Patty Tsai. I'm honored to introduce an important industry participant via BTC. So YBDC is known as the leading global comprehensive crypto mining pool. It was founded in 2016 in May. Sorry. What? Sorry, I need help. The next. Okay. So it was founded in May 2016 by Young Man. And you know, this young man is our founder. His name is Haipo Yang. He established this, he involved in Bitcoin in year 2011 and actually contributing to the community and he started from alone and then developed with a team consists of top talents from globally renowned internet and financial companies. Within 8 years accumulated efforts, YBDC has developed mining solution for 15 coins across 150 countries for 1.7 million users, and supported users with 5 languages as English, Chinese, Russian, Spanish, and Italian. Since the establishment, YBDC has always focused on improving our products and continuously optimizing our services based on authentic user feedback. We are committed to becoming the online infrastructure of the industry. Here's the map we walked through. Thanks to all the supporters among these years. Next. The spiritual core is the primary motivation. As the believers of the blockchain, YBDC insists on integrity, entrepreneurship, perfection, and a win-win. Since the establishment, YBDC has provided money solutions for more than 15 types of coins, including 4 merged coins. YBDC has kept growing with the market. We're consistently ranking around the top in terms of hash rate, user reputation, and industry position. And top 3 for Bitcoin, Litecoin, and Doge, and top 4 for Casper mining. As a pioneer in the crypto industry, YBDC is committed to the principle user first. We're leveraging advanced technology, reliable products, diverse tools, and responsive customer service. We offer global users a stable and efficient money experience. That's what we offer. Trustworthy and one-stop asset management. Also, diverse financial products, especially hedging service and crypto loans. They are popular when the market has fluctuations. The streamlined management enables users to have more efficiency mining operations. And creative supportive tools are popular among the investor group. And BT transaction accelerator is very popular when the market has when the market is going high and when the network is crowded. Or integration of premium resources provided to the resource parties and the users, opening information platform to connect to each other and improve the efficiency of their cooperation, of their collaboration. And via BTC, we are as a pioneer in the crypto industry. We committed to make the industry better. And our goal is not to be a competitor of any mining pool. Instead, our aim is to be the partner of the crypto mining participants and to be win-win for all the peers. These are our partners. YBDC welcomes cryptocurrency mining enthusiasts worldwide to join the YBDC family as our global promotional partners. We work together to engage in brand building, share development achievements, and co-create the global mining ecosystem, and enable more individuals to benefit from the opportunities of the crypto. Yes, we aim to be the infrastructure to the blockchain world. That's us via BTC. Thank you.
Awesome. Thank you for that great presentation. Okay, we have a panel for you guys to switch things up a little bit. So I want to bring on stage Mark Teresa of Vinesh. Mark is going to be moderating this section. Mark, here you go. We got you warmed up right here for this. Okay, we are joined by quite a group of people. Chad Harris of Harris Energy, Taylor Monig of CleanSpark, Chuck Luliquer of IntelliFlex, and Jeremy Ellis of OBM. Before we jump into this, we're going to have a short video with IntelliFlex's newest product line, and then we'll get right into this conversation directed by Mark.
We looked around, I said to myself, there's got to be a better way. My name is Chuck Luliquer, founder of CS Corporation, home of the IntelliFlex line of products. At IntelliFlex, we're innovators. We're very conscious about the overall footprint that the system will take and the overall density that we could achieve on a single parcel of land. When you talk about density, that's eco-friendly. The carbon footprint, look at 6 megawatt of IntelliFlex solution versus 6 megawatt of any other system out there. We design, build, deploy, and operate our system. We have 4 cooling pods on top of one 6 megawatt system. We designed a system that is very easy to operate. We have industry-leading operation uptime and efficiency. Our product are UL certified. Quality is what we do. Every piece will have their own power distribution system, their own immersion tank, network system, pump, fans. Our clients that we have all have something in common, and they're looking for a high quality product that they could deploy as a modular system that is scalable. At IntelliFlex, our motto is start to finish.
righty, that was a pretty cool video. Just to start off, some of you guys are little celebrities in our industry, but we'll just have you guys just go through, say you are, a little synopsis, what you guys do, where you came from, how you're here, just to fill everybody in who's not. So if you'd like to start, we'll go from there.
Sure. My name is Jeremy Ellis. I'm Director of Power Strategies at OBM Foreman. So I work with our customers through our software platform, helping them monetize and optimize their energy loads, either through demand response, economic curtailment, automated curtailment. And we work across the country, internationally, both in regulated and deregulated markets.
I'm Chuck Lecuyer. I'm the CEO of IntelliFlex. You just seen the video here. We build liquid immersion infrastructure in a modular manner.
Hey, good afternoon, everybody. My name is Taylor Monig. I am the CTO of CleanSpark, America's Bitcoin miner. I focus on what is next in Bitcoin mining for CleanSpark.
My name is Chad Everett Harris. I am Giga Chad. I built the original largest infrastructure, and I think I'm the guy that probably kicked off all of the content in Bitcoin mining.
All right, well, awesome, guys. We'll just dive right into some discussion points. One of the first ones that I think is a pretty good one to talk about is, why is deploying high-quality emergent infrastructure important? Maybe some of the negatives of some of the cheaper and more budget-friendly options. Some of you probably got some experience, so whoever wants to just dive on in, go for it.
That is actually a great question when you start thinking about it. And when you think about all the way back to, I think it was 2016, 2017, putting miners in fish tanks, right? That's the cheap version. And then, working across the systems and building it both at scale, using other people's products, testing all types of different things. And when you finally start identifying like high-end solutions that are built to last, I think that is the number one key for deployment. And, because in this era, it's about speed and efficiency. Period. It's speed, efficiency, and the ability to use automation rather than people to run your business so that you can then spend more time, focusing on the business itself. What about you, Taylor? What do you think?
Yeah, no, I think it's really important to focus on high quality infrastructure because you need to start with a design where the outcome is success, and that's possible, right? If you start with an undersized heat exchanger, you start with undersized pumps, you start with a aggressive oil that doesn't agree with the machines, you're already starting in a place where success is, not even a possible outcome. So being able to work with people that have built a solution, that have deployed a solution where you can get real runtime data out of it and things like that will give you a huge head start rather than trying to save a few bucks on a special oil or a special dry cooler, things like that. Just go somewhere where you can buy a proven solution, deploy it rapidly and at scale with a bunch of automation. It'll definitely help make your life a lot easier.
What about you, Chuck?
Well, I couldn't agree more. Obviously, with our solution, high density, quality product, really it's all about operation uptime. At the end of the day, keep your system running, deploy it quickly at scale. So, yeah.
No, I'm just going to add that I reiterate what these guys say. It's all about efficiency and uptime. So it's been really interesting seeing, the different lubricants come, all the different solutions. So everywhere that we go and the different shows that we're going to, we're seeing different solutions, different containers, all the different immersion mining, infrastructure being built out. And again, I think it's just about getting quality product out in the marketplace that's going to increase uptime and efficiency. And really, that's the bottom line.
Yeah, so I think going from there, one of the next points, and Chad touched on at one point, is just the automation and why it's important, especially in some of these environments where it can be really cold, it could be extremely hot, and I'm talking from the miner management level down to how the tanks are designed, how the dry coolers kick on. Maybe someone would like to talk about that.
Yeah, no, I think one of the biggest things that people don't understand about immersion is one of the biggest benefits is actually keeping the miners the same temperature year-round. So there's two main points why chips fail. One of them is obviously shorting out dust, debris, things like that getting into the miner. Immersion solves that. The other reason why chips fail over time is from expanding and contracting, just like any other metal or any other material in the world. When it gets hot, it stretches. When it gets cold, it contracts, and eventually, those break. So utilizing immersion, utilizing optimization, you can keep your chip temps exactly the same year-round, keep your inlet and outlet on the oil the same year-round, and makes your machines not only run in a very consistent manner, but it also makes them, last a lot longer. A typical air-cooled miner in an outdoor container is going to last 3 years. an immersion miner in a system like this would last somewhere between 7 and 10.
You know, I was going to say, and Chuck, I'm going to point this question next to you because I promised I would do this for you. I think what's really important is when you start looking at systems is eliminating some of the potential problems that you have. And one of the biggest problems in a lot of immersion systems are the need for consistent replenishment of water. And so the replenishment of water, and take it from me, I was buying, millions of dollars worth of water out of a lake and then having to, do other ways to get water, that it becomes not just a cost component, it becomes a community hatred. I'm still picketed for things that I did for a company that I don't work there anymore, and they still hate me for it. And so when you think about that, and what was the point or purpose, or how did you decide to change your infrastructure to not be a water demand unit?
Well, I think the first thing is always the IntelliFlex solution overall is a fully integrated system that you could deploy quickly and in a very simple way. We wanted single point connection. We do not want to add complexity of water. As we all know, water brings a lot of different things to the equation, like treating the water, making sure everything is used in a proper way. But the green component of it really makes it attractive. Not using any water it was a key thing for us. And that's why we're using dry cooler, single loop, and we just circulate the fluid directly.
What about from a software side?
Yeah, from the software side, we have an opportunity to go out to so many different sites and different locations, and really it's just, everything looks a lot more clean and seamless when we're going into an immersion as opposed to an air-cooled where you're seeing technicians just constantly changing out those filters. And, what could they be dedicated to optimize a facility if they're not just literally going down the line, and by the time they get to the end of all the containers, they're starting back over again and doing it that way. So I think just the efficiency of really the operators and the manpower that are involved there in the immersion, facilities that we see just is night and day. I mean, it's a cleaner solution. It's just more aesthetically pleasing. If you're going to bring in people from the community to take a look at what's really going on and what's inside a mine, and if they come out and see an immersion facility, it just looks more technological. It looks more clean. It looks more efficient. It looks more like it's aesthetically pleasing and just better for the environment as a whole.
I agree with that. It's pretty cool when you go inside some of these containers and it's like you're in a spaceship. So just throwing that out there. We briefly touched upon this in this last part, but how about the importance of like modularity in the container level? Because obviously you want to scale. So, some custom solutions aren't as easy to work on versus, something that's modular where you can just drop it. And to make the question more involved, we could talk about also at the miner level, making it so you can adapt it and change it out for future models. If anyone wants to take that one.
Do you want me to take it, Chuck?
I can take it.
Chuck,
Take that. You take that question, Chuck. This is a good one for you.
So while modular deployment, really scalability, quickly deployed, but modular is more about quality. You have a quality product because you could manufacture it into a controlled environment. You controlled all components, everything that's put into it. And that's why we have a fully integrated system that could be deployed modularly and scale it from there. Now the flexibility, again, IntelliFlex, it's right in the name. Everything we deploy is we're always looking in the future, what's available, what's going to be available on the hardware side. And we make sure that not only on our power distribution system or the control system, but all your flow distribution is compatible to everything on the market and everything that is to come. So that's kind of my 2 cents on that.
Yeah, and just to add on, one of the things that people don't realize with the modular solution, right? So we just built 150 megawatts in Sandersville. It took somewhere between like 6 and 8 months, had to prep the land, do all this kind of stuff, all for us to energize it all in one day, right? The nice part about some of the modular solutions is like my job is to make it as easy as possible for our ops and construction team to do their job. for one, dropping the containers, you can bring on hash rate sooner. You're not waiting until that last milestone to bring everything up. You can bring these in and drop them one by one by one. And the nice part is the groundwork is much easier. And to their point, they don't even use water, right? So when you don't have to use water, you just bring in a power connection. You're pouring a simple concrete pad for the transformer, and you hook it up and you're off and mining, which is a fantastic add-on of a modular solution like this.
You know, I'm going to add something that maybe everyone's here thinking of, or maybe you're not. One of the interesting components about a high-end modular system that obviously, you know, one of the things is it's a category 5 rated. Your system's rated for category 5 based on the Miami standards. And what's more important than that, and this is one of the most difficult things Bitcoin mining industry has, is the ability to finance components. So when you look at an infrastructure that has a long life and the ability to get asset-backed loans or a lease structure, if you remove the word Bitcoin from it, they look at that infrastructure because it can be picked up and moved and sold as a ability to recover their asset in the event of failure. And so the modularity of that product really drives home from a finance side, and it really helps. And if people start thinking about the product a little bit differently and separate the miner from the infrastructure, there's an easier way to finance those components.
I'll just add with the modularity, it's just the efficiency of getting a site up and running, right? If you're in ERCOT and you're waiting 2 years in the queue for power and then, you know, everything else, you need to get, especially from the software side, you're trying to get deployed, you're trying to get in the market for new programs. If that build out's going to take a little bit longer, that's lost revenue there as far as energy programs go that, you know, we can help automate for you. So it's just all about speed to the market, speed to hashing, speed to getting energized and getting up and running.
The flexibility is also really nice at the tank level. You know, we've got systems that have Bitmain machines right next to Canaan machines, right next to What's Miner machines, all in the same exact tank, and that's something that you really can't do with like a hydro or air type solution.
Yeah, so actually I was going to touch upon that. I mean, one of the things that we see is, right, you go from the S17 series to the S19 series. I'm a Bitmain guy, to the 21 series, and there's sudden changes in all of these. As time goes on, power draw gets larger and larger. So maybe some discussion about, you know, having the power available at the switch level or the PDU level to incorporate, you know, machines drawing maybe 6,000, you know, the flow plate changes and how that all can be incorporated, because of course, these are big infrastructure expenses and you want to make sure they're going to be there in the future for whatever you get.
Yeah, future-proofing your infrastructure is key. You have to look at what you deploy, and when you deploy PDUs that has the flexibility, that are single-phase, three-phase, that are able to accommodate, again, all the miners available on the market, and try to forecast what are the next changes coming up. That's what I said a little bit earlier. That's on the power distribution side. You have to have just a simple change of cord so you can accommodate the next miners. And then on the flow plate and injection system, it has to be something that has the capability of adapting and keep on going. So you don't just change infrastructure when you have to have new hardware changed out.
I mean, I think there's more than that. Come on, you've got some more information in that little head of yours. I know you do.
Well, in our system, the flex flow system is based on just the modular. We're modular all the way down to our tank and all the way down inside the flow system. So you're able to change your nozzle, change your flow plate as you change your hardware.
So I've never asked you this question before. So listen, let's be clear. I love this system. So, and this is not a paid promotion. So let's get that really clear too, right? You could make this a paid promotion, but that's neither here nor there.
We might.
Yeah, we might have to do that. I love this system for a few different reasons. And I've never asked you this question, or maybe we've chatted about it before. What is the difference? So let's say in 2 years, you're running a system and it's got, you know, half of the system's micro BT, half of it is the latest and greatest Bitmain, split down the middle, and maybe you have, like you said, you have some tanks of Canaan running in there. And then all of a sudden it's like, hey, the latest and greatest machine comes out, the form factor isn't right. What is the difficulty to switch the tank?
Well, I think that first thing, before we look at switching the tank, I think the flexibility of the tank itself can accommodate. So if you start changing the form factor of the miners, usually it's more based on power supply. When you talk power supply, you're talking more power demand. If you have more power demand per machine, your count of machine goes down. Then having that flexibility in the tank, you could rearrange everything and actually usually accommodate any changes that we've seen in the past. So that's a bit my answer on that, Chad.
That's a really good answer. Good job. Good job, Chuck.
Anybody else, or you good there? Okay.
Yeah, I'm good.
How do we add on to that? We can't add on to that.
So I got a fun one for you guys. What are some things that might have caught you guys off guard? Anybody, just your first time with immersion, things you learned, quality oils, plasticizers, leaching, we can dive in. That just, you weren't prepared for, because everybody has one of those with immersion at one point or another.
You want me to go first? I have a spectacular one. In August of 2020, I learned that, and this wasn't necessarily with immersion, but it's a very good learning lesson. I learned that if the settings in a switch yard are incorrectly set at the utility and buzzards are pooping on a 345, it can trip your entire facility. It is the most bizarre thing that ever happened, and I almost replaced a 200 megawatt power transformer over it because it was tripping like every 8 days. And so what it taught me was, and then I applied this in immersion, was when sometimes you think there's a problem, really dig into it, because it could be something as little as birds crapping on a power line somewhere.
Yeah, to be honest, we haven't really had any, call it like major disasters with immersion. I think I've seen a lot more, and that's mostly regards in the fluid. There's been a trend in this industry over the last 5 years where people will just not use fluids that are approved and everybody else has used. People love to go out and save $1 or $2 on some special fluids from some special provider that has some special thing that they all don't have, and they all end up being a disaster and either ruining the system which they're in, the pump seals, all that kind of stuff, or they're incredibly aggressive on the miners. So the one thing I definitely recommend everybody is go out to somebody like Shell or Engineered Fluids that have booths here and use a fluid that's been approved by many of the vendors and has millions of hours of runtime. That's really where I see people making the biggest mistake, is just trying to save $1.
I couldn't agree more. Using fluid that's not approved to save a few bucks is not the route that has to be taken. We use Shell S3X as well, and different product in the past, but you have to leave what you do on your side and what you don't do. You work with the best out there.
Yeah, the only thing that we've seen from the software side with customers of ours is that variance in fluids, and some bad actors, like you said, trying to save $1. But I think the positive side is it brings companies like the Shells of the world into our industry to promote high-level products and to really get the best quality into the mines and into the machines and the immersion cooling. So it's been good just introducing other ancillary companies into our industry that way.
Yeah, I guess my point is there's been a lot of pain that felt by a lot of people in this room and in the industry as a whole. Don't reoccur the pain and just go with the proven providers that everybody likes.
Yeah, actually, I was going to touch on that. I've worked at a large mining facility that did a custom immersion ground up, and things don't always go well. They go well at small scale, and it gets really hard at large scale. So one of the things I just wanted to ask, actually, I'm not even kind of curious myself. When you use like a turnkey solution, what does it look like from build out to deployment to turning it online? I'm used to, you turn them on as you physically build out the system, and while people are still dialing it in, versus I don't even know the process. So this is actually kind of right for you.
Well, I think the process, again, as a modular system, one of our module on the IntelliFlex side is 6 megawatt, but we believe redundancy is key. When you scale up to a big system, the way to control that is to perform multiple loops of the same thing and repeat them. So 6 megawatt is 24 tank. So that gives you a granular control on your deployments. When you hook up one module, then you could put online one tank at a time, a very granular way. Then so on and so on with the next module, depending on the size of the infrastructure you're building.
Nice. Here, another question dialed directly for you. How did you fall into this? Where did this all come from? What was the, hey, I want to make immersion for Bitcoin miners?
Well, I think I touched base in that video just before, but really in 2019, we've seen Site X, and we realized that there had to be a better way to build sites. And that's where we started looking into it. And liquid immersion was the cooling method of choice. And then we packaged really the best solution there is on the market right now, which is the IntelliFlex 6.0, 6 megawatt in capacity. We started from seeing that I think there was a hole in the market, and to now us filling that gap.
Now, what do you guys just in general see the future of like modular immersion at scale? Because, right, you're seeing kind of everybody nowadays investing and buying these types of platforms because doing it yourself is not easy and doing it yourself is not fun.
Well, again, going at scale, fully integrated system is why it's easy and fun. The client doesn't have to gather all of this and deal with everything that could go wrong on a site and deal with all the deployments. That's why we have that start to finish approach and deploy very easily with a modular solution.
Yeah, I mean, as far as like the solutions themselves, I think we're at a point of like marginal gains. Everybody's gotten really effective with the dry coolers. I think the flow systems, everybody's really starting to understand how to build. I think where we start to see some really major gains is from the ASIC manufacturers. So we've seen WhatsMiner, Canaan, and now Antminer have all produced immersion machines, right? And there's a lot of engineering that can go down all the way into the way the chips work, the dies work, the heat sinks work, and everything like that. So I think we'll see those companies put a lot of research and development into improving the devices, and that's where we'll see a lot of gains in single phase immersion over the next couple of years.
You said it. You actually said it. I can't add anything to that.
So one other thing to touch on is, software automation and testing when making these. This is going to be a good foreman one right there, but how does that pick a play? And I just remember from when I was doing it, with the flow plate, you have a new design. Next thing you know, oh, there's a hot spot in the tank, and identifying these things and remedying them, and I guess actually not for nothing. It's kind of the benefit of being modular, right? With your flow plates, you can just on the fly change. But maybe just some discussions on some of the benefits of these software and I don't think we talked on flow plates design at all.
Check. I can't speak so much to specifics as far as flow plate and things like that, but when forming enters into the equation and you talk about kind of rinse and repeat in that modular system, you can get in there, you can get access to your location and things like that, and the management of it. The fact that it is modular, it allows you to go into markets that are non-traditional markets as far as locations rise, because you're getting into more extreme, weather conditions and things like that. And as far as, when you talk about integrations, you get into these different markets where the software really kind of comes into play, and these modulars allows you to go into markets that are more regulated utilities. Obviously you're down here in Florida, communicating with those utilities and the automation that may be involved with curtailment is going to be different. So you're able to get in there, and that's just one less thing that you really have to worry about. Getting the software in place, the software is going to act with it because we've done it over and over at a different site. It's modular, it's repeatable. And now when we get into a market, if we're in Entergy in Arkansas, for example, and it doesn't really have programs and the utility doesn't know how to communicate with the mines as far as curtailment and automation, we can go in there, and that's one less worry that we have kind of mapping and the assets and inventory of the structure, because we know it's a repeatable solution that we've already done in different areas. And now we can start to just get into the minutia of controlling the mine, automating it, interacting with the utilities, curtailment programs, all of that. So it just makes the software kind of come in, be a seamless integration, because we've already seen it. We've done it at other locations. So really allows you to kind of take advantage of going into these new markets where we can start to illustrate new programs and take advantage of those utility and co-op relationships that we can kind of build on there.
Yeah, I think it's important to have infrastructure that has an operating software as well that seamlessly integrate with Foreman and different partners out there, so it could be controlled properly. All your process equipment and everything else, not just at the ASIC side or at granular hardware side, but really on your process cooling and everything else. For all your R&D and the hotspot you were talking about earlier, I think that the key to this is you need to invest a lot of time. You need to invest a lot of money into figuring out the right solution and keep evolving and keep testing. That's why we have a state-of-the-art facility where we test all the new miners, all the new firmwares, everything that comes out. Again, with Vinish as well, and a lot of different players. So that's how, by testing is where you eliminate any potential of hotspots with different types of hardware that you test. And that's how we came up with the FlexFlow system.
So we got like 3 minutes left, and I have, another question. Since it's so versatile and modular, how does, supply chain affect, you guys if something is missing or needed, and versus the end customer? Like, how much is delivered versus how much does the customer have to provide? And like, you've been doing it for a while, so like, have you had any fun hiccups where, you had like aha moments where you fix something because, I don't know, a supplier is out of stock? Or
Well, I think you need flexibility. You need in-house resource to be able to fix problem. Let's face it, you could be modular, you could be a site construction. There's problem on any deployments. If you're not capable of turning around really quick and adapt, then it becomes a problem. So yeah, you have to be very versatile and have your supply chain to be, redundant, A, B, and C's to make sure you could accommodate your client and make sure you don't have any downtime.
how about you guys? Have you guys any issues with, supply chain while deploying immersion? Because there are some pretty niche things.
My biggest skill set
Also, watch
was
the time.
I would just go buy all the supplies, period. I just buy everything. I buy all the 4-inch conduit. I buy 600 transformers once. I bought 1.5 gigawatts worth of stations one day. I just would buy stuff to control. Like I bought so many 4,000 amp breakers that I wasn't sure what I was going to do with them. And my original plan was I was going to buy them, control that market share, take what I needed and sell the rest, right? So I could pay for what I needed. But one thing that I think that Chuck you haven't articulated this, Chuck, is what I like about his system, his turnkey system, is if you have a facility and it's a power tap, and that power tap is 13.8, 34.5, even all the way up to 138, because I know you can do it. All he needs is the power feed. He can put in the microgrid and it connects to your system. And you don't need a lot of other stuff outside of that, which I think it makes his system very, very, very unique in a supply chain market. Now, I got a quote on some transformers today from one of my friends out there in the little hallway. Those same transformers I bought in 2020 were $31,000. And let's just say it was times 3 that number. And that's just what it is today. So when you have somebody that can control their product and they're building all those products, and it just comes down to parts within his system, that is what makes his system work really well.
Well, I want to thank all you guys for your time. That was actually right on the money. So that was a good talk. That went by really fast, but thanks guys. That was really informative for me as well. I learned.
Thank you. Thank you very much.
Thank you.
Good job, Chuck. Good job. Good job, Chuck.
Good job, Chuck. See, Chuck, you could publicly speak. Look at that.
Not bad. Mark, great job, man. First time on a microphone.
Third time
on a microphone. Okay, we have one more panel for you guys today. It's actually about silicon. So we're going to bring up Phil from GDA. He's going to be our moderator for this conversation. It'll be our last talk here at Mining Disrupt. So we're exchanging some microphones backstage. Everyone's getting ready, a few conversations there, and then we'll get going again for our last panel here at Mining Disrupt. Thanks for sticking around. I'm actually pretty interested in this next conversation because it is around silicon. If anyone's read the book Chip Wars, it's kind of our equivalent for the Bitcoin mining industry. So we got a few different brands up here that represent not only hardware specialists, but people actually working on, say, fabless chip design. So let me get them moving backstage, and we'll finish up our time at Mind Disrupt with this next panel.
All right, last panel of the day. Last chance to sit down. Guys, this is the panel that you've been waiting for. We're going to talk about not just what we have right now, but we're going to talk about the future. And not just the future with software, which I usually talk about quite a lot, but actually hardware. So I'm really, really excited about this panel. It's a last-minute addition to the agenda. We just made it happen like yesterday, so I imagine half of the people here don't even know that this is happening. But anyway, we'll do it anyway. I've got on stage here with me a bunch of representatives from great companies, all building amazing hardware products, from silicon all the way up to electronics, up to software. And we're going to learn a bit about what they're working on and maybe even why. So for the introduction round, let's just go through, maybe everyone just say quickly who you are, what you're working on, and yeah.
Start with me. Okay. My name is Scott. I'm the instigator of what has grown to be a much bigger project, but I'm the instigator of the BitAxe project. It's a small open source ASIC Bitcoin miner. So yeah, that's what it is.
My name is Sandeep Gupta. I'm from ZetaGig. We are a startup company, semiconductor high performance computing. We are building Bitcoin mining chips, mining manufacturers.
Good afternoon. My name is Thomas. I work with Brains as a head of product development. We do a lot of software products for Bitcoin miners, starting from mining pool, firmware, farm management solutions. But here we are to talk about the hardware. So we started to do recently quite a few hardware products, from control boards to PSUs to a small miner that you can check at our booth with 1 terahash that you can use as a scratch card.
Hi, I'm Henry Kwan with Foundry Digital. I'm VP of mining equipment, looking at how we can improve the hardware ecosystem. So from top to bottom, what's for our pool, and I'm looking at ways that we can help you make mining more efficient.
Hello, I'm Earl Mai, founder CTO of Epic Blockchain. We focus on firmware, software control boards, hardware, rigs, everything related in the Bitcoin mining space.
It's really great to have you all on stage. So there's a lot of hardware being built, right? We all know mining is already happening for 10 years, right? I mean, who needs new hardware? We've already got existing hardware. It's working great. So my question to you is, with the products that you're building, why are you building them? What got you into the idea of developing what you're currently into? How close are you to achieving that goal? And what will we see in the next year?
The BitAxe project started as just an idea, like I want to make a miner. My background's in electronics and electronics design, and I thought Bitcoin's cool, Bitcoin mining's cool, maybe I can make one of these. I come from a background of open source, firmware, hardware, things like that, and so at the time I just assumed that I would be able to go and get open source designs to build something like this, and quickly realized that while Bitcoin mining originally started off as an open source activity, which anyone could get involved in, it had it had closed down. It was no longer open source. And so it was like, all right, I guess I'm going down a much bigger rabbit hole than I originally intended, and had to start from the beginning, reverse engineer Bitmain ASICs like several of the panelists here have done, but just decided to release everything that I had done open source, and that attracted several other developers, and the project took off, and kind of come to this revelation that Bitcoin itself is fundamentally open source. The reason why we're all here is because Satoshi had open sourced Bitcoin in the beginning, and it allowed all of us to get into it and start screwing with it without having to ask anyone for permission to do so. And I just want to bring that ethos back to Bitcoin mining. It started off like that, and I want it to be something that anyone can get involved in the design, in the development, and improving to Bitcoin and Bitcoin mining.
So I got involved into Bitcoin mining space a couple of years ago. What I noticed, my background is all in semiconductors. I build ASICs, hardware, and I'm on the manufacturing side and the design side. So the reasons I got involved into this project was I saw that Bitcoin is all about decentralization, decentralized finance. I saw the mining manufacturing space being concentrated into the hands of a few manufacturers. On my fingers, I could count them. So I saw that there's a big opportunity here as a mining manufacturer as well as an ASIC guy to build a system, an ASIC chip for Bitcoin mining, which will help the decentralization. So we are amongst the very few, only amongst a couple of semiconductor companies who would be building mining ASICs in the United States. And that was one of the goals behind forming ZetaGig. And that's what we are doing after having announced our first mining ASIC, Z1 ASIC.
So Bitcoin mining is the mission of Brains. So we do everything to help Bitcoin miners to move, to mine better, faster. We spent past more than 10 years producing high quality software ranging from a mining pool, Stratum protocols, mining firmware. But we do see opportunity in hardware as well, not just because of that we think that we can do products that are better, more usable, have better features, but also as a counterbalance to the centralization that my colleague talked about that we see, and also as a kind of a de-risking mechanism that would allow us to eventually use and apply our firmware solution on our hardware that would not be vendor locked, as is the current state of majority of the market.
So Foundry Digital has been founded based on the fact of trying to build a decentralized system. There's two main premises to what we're doing in hardware. The first is to help build open platform and open standards so you can innovate. Today the hardware manufacturers control their destiny, basically dictate your destiny. You don't know what you're going to do in the future in terms of power. You don't know what the platform looks like. The form factor is all different. So it's very hard for you to plan going into the future. So at Foundry, what we'd like to do is work with the industry to define new standards to say, here's what data centers will look like. Here's the form factors. Here's the components that you can put in to make things more efficient, right? So that's our first goal. The second goal then for us is to that's the altruistic vision. Our selfish mission is, of course, to build products to help you improve the quality of your life. So what are these key quality components? We'll supply them, they work, right? And they integrate easily.
So we're all here for a mining conference, and we all buy equipment from several of the manufacturers. We buy from BitAxe as well. When it comes down to it, at Epic, what if we gave you the choice to build whatever you wanted? Who is to choose that this shoebox that we all buy is the right thing for the data center, the right thing for your use case? At Epic, we work from a software, hardware level to create miners that integrate into the immersion systems. We do it on air, we do it everywhere. So really, we represent an optionality for people in the mining space. We find partners who make chips, like ZetaGig up here. Chain Reaction, I know, is down there, over there somewhere in the Sprite lights, but we build systems for people. And you tell us what you want, what software you want, and it'll help you get that vision out there.
Right. And Earl and I come from the PC industry, so we're used to this open innovation, open standards. There we can build better platforms by working together.
That's super, super fascinating. And actually, that's exactly what I wanted to ask about next also. Because, what I've been seeing over the years of like mining hardware evolving, it's always been the manufacturers like producing fully finished mining machines, usually the shoe boxes, right? Then you buy your PDUs, you buy your network, you build your data center, and you kind of plug it all together. Now, of course, each of those components is interchangeable, but there hasn't been like too much real innovation in the design of the machines and the customization and so on. But now in the recent years, we're hearing a lot about immersion, right? Like many people here in the conference have got like really, really interesting immersion setups and all kinds of interesting ideas floating around. And I'm wondering, are we going from the hardware design perspective, are we going more in the direction that these traditional different units that you buy, will they be mixed and matched differently? Maybe will chips be sold separately from the mining boxes, for example? Might the immersion or data center design guys integrate in a more closer way with the system designers? I'd really like to get you guys' perspective. Let's start from the other side, maybe. Earl, you've already been talking about it.
So what we're seeing is people demanding something different than what you get. Typical today, an immersion system that you get from the large manufacturers is an air system without the fans. Yes, they have a beefier power supply for overclocking, but that's not an efficient way to mine. From a density standpoint, a lot of people are trying to increase density. From a control standpoint, why does every miner need an Ethernet controller? One Ethernet controller can do a whole immersion tank or a whole rack. So we're seeing people come to us now asking us the question of, if we could build it this way, can you do it? And having the optionality of using different chip manufacturers gives that flexibility.
So I would agree with Earl, and I go one step further, right? We need to standardize the form factors, you standardize power connectors so that you've got this, and the software API, so that we've got this interoperability where you can plug and play, right? You can take one system from another vendor, plug it into your unit, have another one sitting next to it. So they all work together.
Well, I would add that one of the major blockers for the innovation in past years for me was the unavailability of chips that you can source on the market. I see that is slowly changing. I see a big demand from different projects across the industry to do cool things, to do small miners, heat miners. But as long as you can't source chips reliably, that is something that really blocks the innovation. And I think it set us back like a couple of years just because of the vertical integration that we currently see on the market, where 90% is controlled by basically two entities.
I couldn't agree more. I come from a background where we used to be just semiconductor suppliers supplying the chips to the system integrators. I market that the system integration is done by the semiconductor supplier, and it doesn't have to be. I agree with Henry and Earl that a semiconductor supplier should be open to supply just the chips to our customers, and they can do the job of integration. It requires close coordination prior to release of the product, maybe several months in advance. That's how I'm used to in my semiconductor world, that we can supply chips, and absolutely a system integrator should be able to build it, the full system around it. It requires closer coordination, sharing of specs, maybe sharing of some key IP, but it's possible. The reason it hasn't happened here, I believe, is because the amount of silicon content on a miner with hundreds of chips talking to each other from a semiconductor manufacturer, I think that is the reason, instead of any other secret reason why this has all fallen into the hands of the semiconductor designer, like designs the chips, connects 300 of them together on a mining system. So it's a natural flow. Could it be decentralized? Absolutely. Will it be good for decentralization? Absolutely. That's what I would say.
Yes, absolutely, 100%. We need to be able to buy, the individual components, especially the chips, the silicon individually. And I think there's a really important reason for that going forward. If we look at the way that, I don't know, maybe 90% of the miners look now, they essentially look like an S19. I mean, they have different stuff inside, but they look like an S19. And that form factor, that design is designed for use in a grid-connected data center, and basically nothing else. Like, it is purpose-built just for that, because that's what 90% of the miners want to do with it. But I think going forward, we're going to have we've heard about all the delightful new applications for mining, heat reuse, stranded energy, solar, like going after cheaper and cheaper energy. And I think the fact of the matter is those machines are different. They look different. They have different power sources. They have different, power consumption. They have maybe a variety of customizable firmware. And we need a bigger variety of system integrators to build those things for these industries to take advantage of it and, essentially keep mining profitable.
No, I think I'm asking two easy questions because everyone's just kind of agreeing, right? I mean, the interesting thing is everyone sitting here on stage is having these great ideas about the decentralization of the hardware space, about how things could be done better. But if no one's offended of me saying so, no one here is one of the very large hardware manufacturers in the space today. So I do think that we need some kind of driving force to push forward on these ideals and to decentralize the market a bit better there. So my main question would be then, and by the way, unfortunately, none of the larger manufacturers could come on stage today because I think their perspective would be also really interesting, right? But what do we need to make this vision kind of happen a bit more, to decentralize the hardware space, to have more players involved, to allow for more custom designs, and maybe also to decentralize a little bit out of China a bit more. So what's the biggest hurdles in the way that we're currently looking at? What are the big steps that might be necessary, and who needs to take them in order to make steps here in the right direction? Maybe Scott, we'll start with you again.
Okay, I got a pretty good idea. I think it takes a lot of parallels from the development of the internet, the development of the web, but we need to open source this stuff. We open source this stuff, and that in essence makes it completely permissionless for someone to take the chips, and they can get a data sheet, and they can develop their idea without having to ask anyone, without having to sign a multi-million-dollar purchase agreement, and they can try out their idea. And if a bunch of different people, a bunch of different entities do that in their garages, some of them will fail and they won't buy any chips, but a lot of them will come out with these amazing ideas. And it's going to be this exponential growth in the development of the Bitcoin mining ecosystem. And I think there's a lot of parallels to that in the development of the internet and in the web. One of my favorite sort of stories, I guess, is that Microsoft used to make a web server, or make a web server software. Like, it was proprietary. You had to buy it. You had to get a license. But I don't know, like perhaps 0% of the internet, of the websites now are hosted on Microsoft's proprietary web server, right? Linux came along, Apache, Nginx, all the other open source web servers came forward that allowed people to just grab it and start building with it and produce profitable big companies that are completely changing the industry. So I think that open sourcing it, or at least making it more accessible to people who want to screw around, is just absolutely opens the floodgates to development.
So the devil is in the detail, Philip. I think you're having a lot of agreement because we did not go into the detail. So let me touch upon the detail a little bit on this. So about mining manufacturers, about 80 to 90% of the content, if you see inside the miner for the silicon, belongs to one company. So it's only a natural progression that a Bitcoin mining ASIC provider, who the 90% of the silicon content belongs to, would also manufacture the miner. That's the basic reason. Now, if you do want to decentralize it, then there's a couple of paths. One is the mining manufacturer, if that's different than the ASIC vendor, then the mining manufacturer can work with the one ASIC vendor and design around his chips a manufacturing board or a manufacturing miner. And that's one way. The other way is the harder way, and that will be true decentralization, if that can ever be achieved. The true decentralization can be achieved if there were to be a standard around the chip. The standard around the chip would mean a constant voltage, a voltage which everyone shall operate at, or a interface which is a spec for the UART or any other serial interface around the chip, which everyone shall operate at. So that would be the standardization of a chip, where a mining manufacturer, a third party, could come in and say, I will integrate an Auradine chip or else a Bitmain chip with a Zeta Gig chip, and yet be able to operate it. That's the true sense of decentralization. Now, that's ideal, very difficult to achieve. So now if we say that it's difficult to achieve and we don't have those standardization, and you're working with one mining ASIC vendor, then 80 to 90% content belongs. So that's why the market has accepted this centralization of all systems efforts from the mining ASIC vendors. To truly change it, that would be the change which would be needed. Otherwise, the mining manufacturers would be working once again at the hands of one mining ASIC vendor and not doing the decentralization in the true sense. That would be my quick opinion. And that was on the fly answer. I did not prepare this, so I could be wrong on the future thinking. Thank you.
So, Philip, you asked for what the hurdles actually are, and I think one of the huge hurdles is actually the financial one. When you have vertically organized huge vendors, they were able to squeeze best pricing, best supply chains. So fighting against that as a smaller company is very challenging, because you will not be able to compete on a pricing, perhaps. And at the same time, let's be honest, they have like a 10 years R&D, they are ahead in most cases, and it's a moving goalpost. So you have to always iterate and find the next best ASIC, improve all the details, and that gets very expensive. So having a better chip and cheaper chip at the same time, I think is extremely unlikely. Maybe someone will manage, but I don't think it is easy. So what we believe is there has to be some willingness to form some strategic partnerships, whether it is between the ASIC manufacturers and system manufacturers, or even the chip manufacturers and mining companies, someone who is willing to sacrifice short-term some profits in order to have a long prospect of self-sovereignty, having the capability to do their own stuff without being reliable on the big two companies.
Open source of ASICs is a tough thing, right? You're going to need, proprietary design tools. You need $50 million or more, or probably correct me on the number, to do a 3-nanometer chip. So I doubt open source is going to happen from that standpoint. Open source can happen from a platform. You know, we can standardize on the form factor. We can standardize APIs to address this stuff. What do your power supply interfaces look like? So you can compare the industry in that way. What's going to change the market is the fact that we now have a lot of competitors designing ASIC. So ZetaGig is designing ASIC. I know Earl's very capable of designing ASIC. He was on Radeon GPU. So, you know, there's a lot of, that competition is going to drive prices down. And what we see is this $5 billion of TAM in the market going to probably condense down to $3 billion, because a lot of that money is profits. And fundamentally, if we can innovate together, then we're going to squeeze those profits out. And what you as the miners then is going to be more profitable, right? You can put in those power supplies that are higher efficiencies and adapt these things to your environment. So collectively as an industry, if we learn to work together like the PC industry did in terms of co-opetition, defining standards, and building, marching forward together, then we basically fight the evil forces that are controlling the industry, whoever those might be.
So open sourcing the chip's never going to work. Foundries are never going to allow that to happen. I think 3 out of the 5 of us here, or maybe more, agree that open source is a method that we need to look into further. I know some of my engineers spend more time with Scott than I'd like to have them, but we try to contribute in a way. And as Henry said, we collaborate. But I think the industry is ripe for a change. There are companies that are making ASICs out there, and I'm aware of at least one that is pushing for open ASICs in the sense that they will just sell chips. And I think that's something that Scott would like, for the fact that you're buying, I think you told me, old S19 chips that kind of work and kind of blow up sometimes. But I think a year from now, if we're ever back on this panel, if you guys let us come back, we'll see where we are, because we're all trying.
And the CETA technology is changing. So maybe Earl can address this one. Is we're seeing Moore's law flatten out, right? So the rate of change in ASICs is a lot smaller than it was before. We went from 200, you know, basically we're down 10x now in terms of efficiency, going from 200% improvement now just to 20% improvement in the latest generation.
Here is one case of disagreement there. Moore's law is not flattening out.
I just, the open source ASICs comment, a lot of people refer to the whole system as an ASIC, right? I think we're talking about ASIC as the machine. I agree. An open source, a truly open source ASIC is the chip is probably impossible due to the cost and the IP associated with that. But we don't need to let that stop sort of the open sourcing of the system, of the firmware, and maybe even an open standard for interfacing with these chips. I think that's what's incredibly powerful to drive development, is having these open standards and these abilities to get in and design systems. And it just makes it a lot easier if you have at least a data sheet for the chip, and you can just go and buy those from the variety of sellers.
I would love to be in that market that where the onus of system development is shared with my customer, and we are supplying chips and working together with our customer and who integrates, or we also in parallel can build our own miner. On the Moore's law comment, if I have disagreed with my partner there, I would like to clarify. Every time I thought in the last 30 years of semiconductor that the Moore's law would flatten out, some foundry proved me wrong. There was around 28 nanometer days, I felt that it's going to flatten out. The gate oxide thickness is reducing so as to pack a few atoms and electrons. And this is the end of semiconductors. And then came out FinFETs. And FinFETs came in and gave me once again the Moore's law application. Now, once again, I saw the same application around 3 nanometer. And now I'm seeing advancements on FinFET technology, which is the gate wraparound technologies, which the process foundries are coming up with. So I don't see a flattening out. This improvement is going to continue for a very long term for the survival of semiconductor industry, foundries, and technology in the future.
Want to go first?
Yeah. I wonder though, like, has all the like easy low-hanging fruit been picked as far as efficiency improvements and sort of, you know, bringing these efficiencies over to Bitcoin mining ASICs? Like,
Sorry, could you say that again, please?
I'm just wondering, like, are we going to see as big stepwise improvements in efficiency going forward?
I have been seeing pretty constant improvements in efficiency. Look at without naming any of my competitors, other stuff, with all due respect to them, I've been seeing a factor of 0.7 from one big generation node. Now, I'm not talking about subvariants. If you look at a foundry called T, and I wouldn't want to spell out the remainder of the letters, a foundry called T has had technology called 7 nanometer, and a competitor called B had a chip inside or a system inside it with 29.5 joules per terahash, which when they moved from 7 down to 5, went down from 29.5 to 21.5, and when they moved down from 5 to 3, they came down from 21.5 to 13.5 to 15. Now that's a pretty constant scale of improvement. I didn't see any bound, and this will continue happening as we go down from 3 down to 2, 2 down to 1.5 or 1.4 or 14 angstrom technologies. I don't see that limit right now. 0.7x, 0.65 to 0.7x improvement in efficiency for every one full generation of technology advancement in semiconductors, which happens every once or in 2-3 years. And this rate is almost like remaining constant. Once in every 3 years, I see one node coming up.
So scaling the node is one thing. The foundries, TSMC, they do a great job, but that's not innovation. We're relying on their innovation. What I predict happening in this industry from an ASIC level is we're all converging. Yes, someone like you can come up with an ASIC that is sub 10 joules per terahash, but what's wrong with my chip at 10 joules? There's so much more wastage in this ecosystem going up the stack from a system infrastructure point of view. No one seems to look at Bitmain's new machine and take a look at their fan specs. They're 12 volt, 140 mil, 5 amp fans. They had to go up in fan size just to keep these things cool now, keep temperature stable. There's so many other things to fight over to save power, get efficiency up the stack than focusing on just the chip. So I believe in the future, chips will be abundant and you will have different chips from different manufacturers and they have pros and cons. Some good all the way up to 45 degrees C and some can't run. But if you're in the north, you will grab that chip. That's for you. And let the people choose what they want, right?
And it boils down to the bill of materials, right? So we can put 3 nanometer in, but it's going to cost more than a machine with 5 nanometer. And it's really about how much can you get, how much hash rate and efficiency can you get for your dollar? So at the end of the day, that's what open innovation allows, that you can make the choice on how to optimize your system and what to put in.
Well, I will add that there are use cases even for different efficiencies. So with our firmware, we still see 50,000 S9s are running out there at $90 per terahash. And there is someone out there who has a use case for it. So we can innovate, not necessarily at being the best on the angstrom level, but I would say that even a new chip at 7 nanometer, 9 nanometer can still find the customers because it will be very cheap, and it can be used for generating heat, not for necessarily generating hash rate. And that is the innovation that we can do together here.
So one more disagreement, sorry, Henry. The 3 nanometer, you said that will be more expensive than 5 nanometer. That's not true. The 3 nanometer will necessarily be cheaper than 5 nanometer. And the reason is very simple. The 3 nanometer, you may be talking about the wafer cost of a semiconductor foundry. But the way we are supposed to do the job when we build silicon is we are supposed to absorb that wafer cost and build a silicon which takes into account the linear growth in the wafer prices as we move technology and have a square law advantage in our silicon so that the overall cost per terahash goes down as we go down from 5 nanometer to 3 nanometer. Otherwise, the semiconductor business from any major foundries would not exist. And so I'm very much of the opinion that if you have the latest technology, yes, indeed, you would see an advantage in both the cost. As far as the other thing which Earl mentioned, that's a very fair point. That Earl has a very fair point that you can continue to have advancements in efficiency and cost, but what about the ability to cool it? So now that you got to more and more power per millimeter square, your efficiency improved, but the power per millimeter square of your silicon has gone up because you're burning more power, because you're more efficient in the silicon, then in that case, you have to take care of the cooling techniques to scale with that. So I'm totally in agreement with Earl on that one, that those kind of techniques have to scale.
Very, very interesting discussion. Everyone knows that everyone's waiting for these panels to turn into a huge fight. I think we might just stop the panel here before that happens, just to make sure, but we can continue backstage, all right? We've got curtains. Now, guys, I really appreciate you guys coming on and discussing these things that I think are not discussed so much in the marketing material of when you're walking through the conference here. You don't hear about this on the usual YouTube video. These kind of discussions, I think, only happen when lots of technical-minded people meet all together at the same space, all in the same mindset, and trying to drive the industry forward. So thank you very much. And yeah, inspiring stuff.
Awesome. Thank you for that great panel on silicon. Thanks, gents. Well, that's it for us here at Mining Disrupt. I'm Will Foxley, run the Mining Pod. We do conversations on Bitcoin mining all year round. Thank you to the Mining Disrupt team for having me join and MC. We'll give a few words to the Satoshi Action Fund team as well.
Hi, my name is Tom McCarthy. I'm with Satoshi Action. I want to really appreciate Mining Disrupt for having us and all of you for attending. We hope to see you next year, and we hope you had a lot of fun. I'll pass it back to Will.
Yeah, for sure. Thank you to Mining Disrupt. Yeah, we'll be back next year with the same conference. Just some highlights from this week. Ted Cruz showing up, talking with Fred Thiel, some big names. They had a great immersion panel earlier today. Thank you to the Mining Disrupt team also for everything in the booth section. A lot of business was done here this weekend. So if you are watching online, stick around. We got the Simply Bitcoin team finishing up. But from us here in Miami, that's a wrap.
Yo, we're back at the Simply Bitcoin News Desk. Live from Mining Disrupt, day 2 in Miami, Florida. What a great conference. So many awesome speakers. So many great panels. Like Will just mentioned, the Ted Cruz panel with Fred Thiel from Marathon was great. I really enjoyed that conversation. And yeah, man, the Ocean panel, Bitcoin Mechanic, always dropping the hot fire. And of course, Bob Burnett, Hafa Zaguri, and Bitcoin Mechanic also coming in hot. So much signal dropped over the weekend. This expo is amazing. It's going to be greater and better than ever next year. So hope to see you guys at Mining Disrupt 2025. Of course, Simply Bitcoin crew and team wants to thank the Mining Disrupt organizers, for allowing us to do the news desk and the live stream. And yeah, man, it's a great panel, great conference in general. And see you guys tomorrow on the live show. I'm Nico. It's my legendary co-host, Optimus Fields. And I hope you guys have. I mean, Opti, do you want some words, bro? Opti's been doing the producing.
Those
bro.
are my words, just some horns. Wrapping it up here at Mining Disrupt in Miami. We made it 2 brutal days on the stream, but hey, we do it for you guys. We got Wine off screen. What are you saying? He said, Wine says we need memes. No, we don't need memes today, but Wine could throw up a meme. I guess there's a meme.
We want memes. We want memes.
Guys, if you enjoyed it, like I said, smash the like button. We'll be back for the regular scheduled programming tomorrow during the live show. Love you all. See you guys tomorrow. Have a great, wonderful day. Peace out, everybody.